interesting times also because except for BOJ and US, most of the central banks are now kind of in the loosening scenario. BOE yesterday, Mexico yesterday. So I think stars are aligned for me to win my cup of coffee versus Sajid on the bet that we put in, 25 basis points. So
you should have bet higher.
I wanted to, I could have, but Sajid.
What is it, 24 out of 28 or 25 out of 28 economists expect a rate cut of 25 basis points, so you're not alone. And it was a safe bet to make, which is why I piled on.
Yeah, but you know, I just want to go through very quickly on why this policy is so crucial. Why are we going on and on about it? Yes, every policy is important, but this one particularly. And if you've heard some commentary from all of our speakers on the channel last few weeks, they've been saying, okay, budget has been done 1st Feb, but 7th Feb is maybe as much, if not more important. Why? Well, first of all, it's the first policy from the new governor, Sanjay Malhotra. The RBI has not cut rates in nearly 5 years, and that is one big reason. That is this a change in stance and a turn in a rate cut cycle? That's what's important. A 25 basis point rate cut is expected, and that's crucial in a slowing economy. Remember, you've had 3 consecutive quarters of the GDP number coming down, and the last GDP number was the slowest in 2 years, which is why this is like a tonic that the economy needs right now. On the other hand, look at it in the context of what we've done in the budget. The government focused on fiscal consolidation, brought the fiscal deficit targets even lower than what was expected, 4.4 and 4.8 for the 2 consecutive years. That means it's now up to the RBI to find more levers to boost growth, and rate cuts with liquidity measures could be exactly what is needed. It's also required in the geopolitical scenario right now. If a tariff war breaks out, and frankly, it's a question of when rather than if, then India needs to be prepared. You need more liquidity in the system. Along with that, core inflation is showing signs of cooling off, indicating that it is time for a rate cut. So these are some of the reasons that we need a rate cut, and why this policy becomes so important. But anything that you guys want to add to some of those crucial reasons?
No. So people are looking at what they did in the last policy in the form of the CRR cut as a mini rate cut, or at least the prelude to that. And so, which is why what we were saying in terms of the anticipation of a rate cut this time around was so clear. That's the only thing I will add. And some of the liquidity measures have played through. So I'm not sure whether additional measures will be announced or whether they'll allow some of that to actually play through.
First.
No, but also, sorry, the only place where I maybe just differ slightly from Alex is that because March is coming up, I think they will probably need to do more, both in terms of signaling and in terms of actions as well, because liquidity was really dry. So the measures having been done, expect this to be a dovish policy for sure. Whether it's accompanied with a signaling of a rate cut or no is secondary, but there is no doubt that the policy will be dovish. It will be very, very dovish, both in terms of actions and words.
And in that, to that end, just to add to that, if there is a rate cut, in order to ensure that it gets passed through the system, you need to have liquidity. If you don't have liquidity, it's not going to work.
It's not going to work. We'll also have to hear from what Sanjay Malhotra says. I think that's also very crucial. But quick global check, and we're going to spend a lot of time today talking about what you can expect in the policy, what it means for your trading decisions, because at the end of the day, that's the information we want to give you. But global cues, meanwhile, mixed trading day for US indices. Dow closed in the red ahead of payroll data, but you had the Nasdaq and S&P 500 up in the green. We'll pull up Dow futures if we can very quickly, completely flat right now. Treasury yields ahead of non-farm payroll data have also been ticking down, 10-year at 4.43% at this point. Oil prices have been choppy. US President Trump has reiterated his push for drill, baby drill, and Brent at $74 a barrel, the NYMEX around 71 odd. Asian markets have also opened mixed, like we've been discussing. Monetary policy from India is key. Meanwhile, Nikkei down in the red at this point. Now, implied open for Nifty is also showing a mild uptake. I think it's going to be wait and watch till about 10 o'clock 10:15. 10 o'clock, the policy statement starts, and 10:15, we'll know about that rate cut, hopefully, depending on where it features in the RBI governor's speech. But Matt Orton with us. He's Head of Advisory Solutions and Market Strategy, Chief Market Strategist at Raymond James Investment Management. Matt, great to have you back on the show. We love chatting with you here. And just, want to get your sense before the non-farm payroll data, if that's going to be the next big indicator that global markets need to watch out for, especially U.S. markets.
Hey, good morning, Tamana. Always great to join. And I think it's going to be a catalyst, but it's not going to be the catalyst like the next CPI report and PCE report is going to be, because I think we're cognizant that the economy is doing well. The jobs market is holding up unless it's a significant surprise either to the upside or the downside. I don't think it's going to ultimately inject too much volatility into the market. What investors in the US are really paying attention to right now is inflation and what direction inflation is really going to go. So perhaps looking at kind of wage growth and wage inflation within the jobless report will be important. But really it's, are we seeing earnings for the AI trade continue to hold up? I would argue that we are. If anything, the earnings that are coming in that have missed a little bit really on the guidance side are a result of constraints, not having enough of the inputs that they need, which I think further exemplifies the fact that this AI trade, especially the picks and shovels, is still here to stay. And then also, how are investors going to deal with rates? Can the economy continue to deal with higher rates? I also think it can. So I continue to tell clients to really use any meaningful downside opportunistically. And so I've been looking at a lot of the early infrastructure plays, the build out of data center companies that have fallen 15, 20, 30% over the last week. Those are looking very interesting to me, and a lot of them are reporting earnings over the next few weeks.
Matt, I find what you're saying very interesting in the context of Amazon reporting numbers overnight, and the fact that it got beaten down in extended trade. And it wasn't, at least optically from my perspective, and obviously it's very far, and I don't have as close a view on it as you do, but it wasn't a very large miss on the cloud computing side, right? And it got beaten down quite heavily. Do you think that that's going to play out? Because that exactly is what is happening here in this market, where earnings misses, even very small misses, are beaten down very dramatically.
Yeah, that's a great question, Neeraj. And I think when you really dig into what Amazon said during its earnings, earnings with respect to its cloud computing segment were pretty good. Its consumer segment did incredibly well. What the miss was catalyzed by was a lack of ability to have enough data centers and enough power. And what that says to me is when they are able to get enough of those supplies, and they will over the next couple of years because there's tons of investment coming in, that opens up a lot of different opportunities. So I think Amazon continues to be interesting. But where, again, I really would be wanting to put my money on any sort of miss comes to all of the infrastructure plays that are going to allow Amazon to actually get the capacity that it needs. I think that's a little bit different than India, where a lot of the concerns are more based around the economy, what earnings misses are signaling about the economy, and hence a rate cut, giving a little bit of relief or at least optimism to investors. That might be the catalyst that we need to both get foreign investors a little bit more excited, but also see domestic investors give companies a little bit of slack because earnings haven't been that bad overall.
Okay. Matt, good morning. And just one quick follow-up to that question, or broadly to the thesis currently. I mean, when I looked at all the global websites today, the Reserve Bank of India's decision was top of mind for everybody, which just shows that central banking conversations are up and about. Now, if the Fed, in its wisdom, were to stay on the pause mode, BOJ is an exception because they're coming up from zero, but if the Fed were to stay on the pause mode, while the rest of the central banks bring down their rates. The BOE also sounded very dovish, by the way. Is that constructive for EM flows, you reckon? Or the Fed needs to move for the incremental dollar to move from the US markets or the US fixed income to the emerging markets?
Yeah, and that nuance is really important because if the Fed doesn't cut, or there isn't the expectation that the Fed is going to cut, the dollar is going to remain strong. And a stronger dollar is a turnoff for emerging market flows. That's been a big, big challenge for investors overseas. And you're even hearing about negative FX impacts to a lot of big multinational companies in the US that are giving their guidance for the upcoming quarter and the upcoming year. So hopefully the signal from the Fed is basically that they're not going to hike rates at this point. I think the market and the dollar is already priced in that the Fed could very well be on pause. We're baking in 0 to 1 rate cuts for the rest of this year. So again, any positivity towards inflation may be starting to ease. That could help weaken the dollar and move money into emerging markets, or just the fact that the Fed might not hike rates, which I really think is fully off the table. So I'd be looking for the dollar to weaken a little bit. And when we start to see that happen, I'd be wanting to start to diversify a little bit by moving into emerging markets, and one like India that has so significantly decoupled from the rest of the emerging market complex, I think is where some foreign investors will finally start to be looking, just because the valuation is there, and by the central bank cutting, expectations for growth might start to pick up again.
Matt, are you looking at the monetary policy in India as closely as we are? And if we do see a 25 basis point cut, everyone's pricing in a 50 to 75 basis point across this calendar year. How do you see that in the Indian context, weakening rupee like other emerging markets currencies? Is this the boost we need? And what would be your outlook on the market post that as far as India is concerned?
Yeah, Tamana, I think that is a boost that India needs, and it really is from the foreign investor perspective, because FII flows have been just nearly historically weak, at least over the past few years. And so we need to see, outside of domestic investors, we need to see foreign investors start to move money back. And a rate cut, I think, could be the signal of that. In addition to the dollar, it's just the growth scares in India's or slowing growth coupled with valuations that I think threw foreign investors off. And so we're seeing stabilization in the market. And what we've seen through the budget as well is a lot of higher quality companies that have reported strong earnings have done very well. Those who are leaning into farming and agriculture, those who are a little bit more levered to the consumer. I like to own the highest quality businesses there. So for me, if we get what's expected and there's guidance towards perhaps those rate cuts coming to fruition later this year, I want to lean in to some of those trades. And I also want to make sure I'm exposed or increase exposure to financials as well, who are going to be able to finance some more of that growth that might come as expectations start to pick up. So, looking for the highest quality private banks, staying within, your highest quality auto companies, those plays I think continue to work. And that's what I would want to buy on any sort of weakness.
Matt, thanks so much for joining us this morning. Pleasure as always speaking to you. Thanks so much.
Thank you.
All right, that's Matt Orton. And interesting perspective, right? He's speaking about the rate cut as a possible signal for the tide to turn for foreign institutional investors. And that is important because once again in trade yesterday, you saw selling to the extent of 3,550 crore rupees on a net basis by foreign institutional investors, and buying to the extent of about 2,700 crore rupees for domestic institutions. I'm not going to spend too much time on this because all eyes are on policy, and in fact that's probably why you saw a little bit of caution on the street yesterday. You had the benchmarks quickly give up early gains and end about 0.4% lower. It held just above the 23,600 mark though for the Nifty 50. Trent was the worst performer, losing about 8% after it posted results. Bharti Airtel lost ground ahead of the results, but it is a number that we will talk about ahead of market, and you could expect it to react at the start today as well. Market breadth was favoring the declines as mid-cap saw significant selling. In fact, the mid-cap index was the worst performer, down about 1.5%. The small-cap index ended flat. The so-called defenses were in focus, and we spoke about this at the start as well. Pharma, IT gained ground. However, on the other side of the spectrum, you had realty, FMCG, auto, energy stocks that declined. Neeraj.
Yeah, I mean, and it was interesting. You would argue it almost sounded like a bit of a pause yesterday ahead of the policy, which will hopefully not have a pause, but an uptick. But the Nifty still trading above 23,500, and as per all technical experts, in a comfortable zone technically. So that is one thing kept in mind. And I don't know. I just feel the screen seems to be suggesting that the risk reward is in favor of creating longs, but there is the policy element to be kept in mind today. So that is something should be at the back of your mind, because if there isn't as much of dovishness as we think there will be, or at least I think there will be. I'm guessing Tamanna and Alex are on the same side as me in terms of the dovishness of the policy, maybe.
I'm not sticking my neck out in terms of commentary. Yes, there might be a 25 basis point rate cut. Core inflation has come off, but I don't think that there's complete comfort with food inflation. You are still not in the price band that you think. So, yeah.
But the other thing that will come, just to add one element to this, the other thing that will come through over the course of the next several months is the base effect. And so to a certain extent, you will see inflation easing off, at least optically, because of the high base effect of last year. That is my...
Yeah, no, in fact, I'm quite the opposite side of Tamanna right now today, in that I'm believing that whether or not there is a rate cut, the commentary will be unequivocally dovish. So let's see how it shapes up. This is great. I mean, it takes two to tango, if you will, or three to preach a choir. So in some sense, it'll be nice. Clutch of investors are buying with an appetite. That's the last point, that if you're buying, a clutch of investors are actually buying with an appetite of seeing a further 10% downtick. So if you're indeed buying from that perspective today, post-policy, pre-policy, just be prepared for that. I mean, is this the element that might hit? And as we said, I mean, a lot of global central banks are cutting. BOE, Bank of Mexico, cut interest rates yesterday. Element of dovish surprise to both, because the BOE's decision was to lower rates by 25 basis points on expected lines, but two policymakers voted to cut 50. And Bank of Mexico actually said the 50 basis points cut could be repeated at future meetings. I mean, Mexico is not as large as India, but not chump change either. So, and every central bank, of course, does its own thing. But I think there is a chorus of slight dovish
and BOE
tone.
guiding for 2 more.
Yeah,
actually.
And some people think that 50 bhi ho sakta tha. So, could be interesting.
Should I make this very corny? You should put this with a sound effect of, people preparing for battle, cocking their guns, because that is what all of these central bankers are doing.
Currently.
As a tariff war kicks off, you need to bolster your economies. You don't know what's coming. Right? And Bank of Mexico, I mean, whatever they're saying, if you look at it from that context, Bank of England also preparing for a threat of EU and European Union and that whole space being next. So everyone has to shore up.
And focus on consumption, I guess, domestic consumption.
Of course. Absolutely. All right, domestic consumption. Talking about consumption, that's my first talk this morning that we're talking about. We're going to run through it because so much to cover in terms of policy, results, so much happening. ITC, big numbers came in post-market close. I'm starting with ITC. You could look at it as a neutral, but I'm going for a thumbs up simply because of what the cigarette earnings are showing. Bad for a society if cigarette earnings go up, but great if you own the ITC stock. It's a key positive. Cigarette revenues are up 7.8% this quarter. The cigarette business, remember, contributes over 70% to ITC's earnings, so which is why you need to look at it from that point of view. The agri business is also up 9.6%. That's heartening. You will see margins, and we'll take you through the key numbers, but you'll see margins down due to the FMCG and paper business segmentation. Nice, not too bad on taxation on cigarettes. That's also aiding volume growth. It was skipped this budget as well. In terms of core numbers, revenues up 8.5%, 18,290 crores is the number. EBITDA up 1.6%, so completely flat. Margins have come down, and the management is saying also very clearly that it is raw material costs which have eaten into the margins. Net profit is up 1.2%. Q3 also saw an exceptional item of 12.18 crores owing to the demerger of the hotel business. Tax expense of discontinued operations of 72 crores on hotel business demerger were also there. There was an interim dividend of 6.5 rupees per share. The management commentary talking about sharp cost escalation is important in key input materials. Strong performance continues in premium portfolio, they say, and alternate channels. Higher leaf tobacco cost partially mitigated via product mix enrichment. I must add that they have announced an acquisition as well of Prasuma to add to their ready-to-eat segment and frozen foods segment. So that they're going to do over 3 years and acquire the Prasuma brand in the next 3 years 100% acquisition is what it is, and it's a fairly decent brand. So ITC, wait and see what happens. It's a bit difficult to gauge what the street will expect, but purely on numbers, it's a thumbs up. So is it for Airtel as well, because the India mobile services business was above estimates. That's key for the street to watch. Subscriber addition was also in line. On a consolidated basis, numbers have beaten estimates, and subscriber growth has surpassed Jio in this quarter. In Q3 FY25, India mobile service earnings saw revenues up 5.8%, EBITDA up 9.1%, and subscribers at 357 million versus 351 million in Q2. ARPUs, which is average revenue per user for Q3, was at 245 rupees versus 233 in Q2, and capex at 4352. Net debt has also declined by 11,000 crores Q-on-Q to 1.33 lakh crores. So that's a thumbs up. So is an Aurobindo Pharma, actually. Revenue was a beat. Margin and net profit were in line. It was the highest ever quarterly revenue for the company. Revenue in growth markets formulation increased 39%. US revenue, though, was down 2.3%, and this accounts for 46% of consolidated revenue. A slight margin miss due to higher employee costs and higher R&D expenditure. EBITDA margin before R&D is at 25.8%. So that's one key point to watch. The core numbers there on your screen. Revenue up 8.5% to 7979 this quarter. EBITDA up 1.7% to 1628, and margins have narrowed from 21.8 to 20.4, but not a massive downtick for Aurobindo Pharma.
Right. I've chosen to speak about the automotive space and the allied space. So the first one that I will talk about is a tire company, and it is a disappointing set of numbers. Another tire company is reporting similar numbers. So let's take a look at the headlines. You've got the revenue that is up about 5% or thereabouts. It's more or less in line with expectations, but the problem is in terms of the margin. You have margins that have come in at 13.7%, and that compares with 18.3% in the comparable quarter. The consensus estimate had pegged it at 15.1%, and that's going to be a bit of a disappointment. We've spoken to several analysts over the course of the last month or so, and they've all talked about raw material pressures and inability to pass on in the way of pricing being a problem for these companies. Net profit, as a result of which, is down as much as 32% and coming at 337 crore rupees. That is also a significant miss compared with the consensus estimates. The second one is Motherson Sumi Wiring. And here too, there's a problem in terms of margins. You have revenue that is a decent 9% growth, 2,300 crore rupees. And you could argue that this is more or less in line with expectations, but the margins have come in at 10.3% compared with 12.4%, and the estimates had pegged it at 11.2%, so it is a considerable miss. The PAT number is down as much as 17%. BofA had a note out on Motherson Sumi Wiring. It has cut its target price very marginally to 60 from 62. And it has maintained a neutral rating. It says that the margin was a drag again, and the Q3 miss was on the back of startup costs for a new plant. This is essentially what has caused the operational issue. You have margin stability going forward, which is going to be a key monitorable for this brokerage, and valuations currently are capping the upside. Finally, Hero MotoCorp. I left the best for last. This is a thumbs up on the back of strong numbers. The revenue has increased 5%, coming at 10,211 crore rupees. The PAT number is higher by 12% or thereabouts. And it is a strong margin performance because the margins have expanded by 50 basis points to 14.5%. And what is critical to note here is the reason for that is that raw material pressures have come off to a certain extent for this company. In fact, you have a metric which is looked at in terms of raw materials as a percentage of sales, which is coming at 65.76 versus 67.3 in the comparable quarter. Neeraj.
Yeah, okay, I'll go very quickly with the three stocks on my radar. The first one is PI Industries, and the reason why it's included in the list because the numbers were okay, but they've revised the guidance lower to single-digit revenue growth from high single-digit for FY25. And remember, they had revised the revenue growth guidance from 15% to high single digits earlier as well. So consistently bringing down revenue growth, and that could be a problem for PI today. So keep an eye out for this one. Keep an eye out for Bekaji Foods. Margins came off 7.8 versus 12%. Profit after tax down 38%. Not quite something you would expect in a festive quarter, if you will. So maybe this one reacts negatively too. The one which is a positive reaction, TD Power, revenues up 44%, EBITDA margins at 17.5 versus 12.1, expected, and PAT up 50% at 45 crores versus estimated 28 crores. Really robust set of numbers on all counts, and this one could react positively. More negative than positive numbers today, but there are a few which will stand out, like Airtel, TD Power, and some others. But we need to slip into a very quick break. We'll come back from the break and talk more about the policy.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
And the reason for the success of the restaurant this magnitude,
All right, back with India Market Open. Remember, the big news of the day today will be the RBI monetary policy. Set to announce the decision. Vishwanath Nair is at the epicenter of the action. He will bring us the first cut once the policy statement is over as well. But Vishy, are you bracing for the first cut in nearly 5 years? And what are the key other things to keep in mind?
Neeraj, I was listening to you earlier, and it seems like you're a little lonely in that studio, but I am going to back you on the call that there is likely to be a lot of dovishness that is coming through from the RBI. The RBI has already shown its hand. The liquidity measures that the RBI did earlier in January, they were very clearly pointing towards a more dovish stance by the regulator, because the regulator believes that there is a significant tightness in liquidity. The rates are significantly higher, and considering the growth path that we have ahead of us right now, FY25, the RBI believes GDP growth is about 6.6%. The government's first estimates are 6.4%. Similarly, for FY26, the growth rate is pegged at anywhere between 6.3 to 6.8% GDP growth. So that's something that is going to be worrying the RBI governor and the rest of the MPC. So they'll try and figure out how exactly to balance these things. Inflation, yes, food inflation has not abated enough, but it is still on a downtrend. It is expected to come down later. The RBI's own estimates don't predict a 4% inflation, headline inflation number anytime this fiscal or the next, in the first 2 quarters at least. So we need to watch out for whether that undergoes any change, the inflation expectations of the RBI undergoes any change, and if the food inflation deceleration and the core inflation being below 4% is enough for the RBI to push the trigger and bring down rates, 25 or 50, that's something that's going to be the question here, how much is the RBI going to cut, and then after that, what is going to happen in the next policy and the policy after that? Will rates come down materially from 6.5% currently? That's something that we'll watch out for, because the rupee devaluation and the rupee weakness against the dollar is also an important concern. The more you cut rates, the more pressure you increase on the rupee. So we need to see how exactly the RBI manages that.
No, it's going to be a lot of nuance required to actually see the full impact of this policy, but it's something that the street is definitely pinning its hopes on. Thank you for that, Vishwanath Nair there outside the RBI headquarters, and of course he will be bringing you all the context, details and the news on what has been decided on that policy. Gaura Sen Gupta, Chief Economist at IDFC First Bank, joining us this morning as we dissect what is expected. Ms. Sen Gupta, thank you so much for speaking with us here at NDTV Profit. And thank you for your time. Let's just begin with whether the expectations are now pitched too high. Yes, a 25 basis point rate cut expected. I may guess that that's your estimate as well. But are we in a space for an aggressive rate cutting cycle or a reversal of the pause that we've seen for nearly 5 years?
We are definitely in for a rate cut. That's our call. As if you look at the consensus is also for a 25 basis point cut, but we have growth conditions where I would say growth is not overall that weak, but it is showing signs of moderation. You are seeing some slowdown in urban consumption. Capex cycle also, we've seen a bit of a slowdown because general government capex, both by the center and state, has contracted this year. And the issue on the inflation front is largely behind us. For example, for the month of January, our inflation print is around 4.5%. Core remains below 4%. As per our estimate, core will be around 3.6%. When the forward-looking trajectory for inflation is also very, I would say, supportive, with headline inflation averaging at around 4% as per our estimate for FY26. So there is comfort on inflation. The policy focus needs to shift towards growth, and we do expect them to cut interest rates by 25 basis points. But even more important than the rate cut is a transmission of rate cuts, which will not happen unless there are further durable liquidity infusion. There's a substantial amount of liquidity infusion that the RBI needs to do during this year to ensure that the rate cuts gets transmitted by the financial system.
Gaura, I just want to understand from you what you anticipate will play out over the course of the next couple of months. To that last point on liquidity, we are currently still in a deficit. At what point do you think, based on the measures that we currently have, and if at all anything gets added on over the course of the next few hours, how do you see that playing out? And the second point is, on the fiscal policy side, you had a shot in the arm likely for consumption next year. But the thing is, if people go out and spend, that could well be inflationary on the demand side. Is that going to play a spoil sport in terms of the amount of rate cuts that could be in the offing?
So starting with the first question, we are in a system liquidity deficit. We've seen days where we've had system liquidity deficit of 3 trillion. And in such a situation, rate cuts will not be transmitted. There has been increase in cost of funds for the banks. There's also been an increase in deposit composition towards fixed deposits because the transmission has been much better on fixed deposits. So all this combined with the tight liquidity is going to inhibit transmission. And there has been a lot of durable, substantial liquidity which has been removed from the system with RBI FX intervention. Again, RBI had to intervene because we saw a slowdown in capital inflows, and RBI had to bridge the gap to ensure that the current account deficit is funded and the INR is stable. So they were forced to intervene to that extent, but it has resulted in a sharp decline in liquidity. We estimate that after the 1 trillion of liquidity measures that they have announced and undertaken, which is OMO purchases, basically government bond purchases and buy-sell swap, they'll need to do another 3 trillion rupees of durable liquidity infusion during the course of this year, just to ensure that the system liquidity is in a mild positive during the course of this year. So hence we expect not just a 25 basis point rate cut in February, we also expect another 25 basis point cut in April. So a shallow rate cutting cycle. And we expect that they should announce more durable liquidity measures, if not in today's policy, during the course in the next couple of months, as they've done with the OMO. They've given us a short calendar of 3 OMO auctions. They've also announced and conducted one buy-sell swap. We expect more of such measures to be announced either today or continuously conducted during the course of the next couple of months, because under such a current liquidity situation, the rate cut will not get transmitted. So the efficacy will get impacted. In terms of the union budget, I think RBI will be extremely positive in their assessment of the union budget. It is a non-inflationary budget because the fiscal contraction of the reducing the deficit to a 4.4% of GDP in FY26 from a 4.8% of GDP in FY25 is led by moderation in revenue expenditure. The government has maintained the focus on capex. It's not enhanced it, it's maintained it.
Yes.
In terms of consumption cut, it'll help the people who are in the tax net, but its ability to boost consumption is limited because only 2% of the population pays
paying taxes. Yeah, completely. Thank you so much, Gaura Sen-Gupta there on her view ahead of the big event. But you know, we want to give you every aspect of how to prepare yourself for the trading day. So let's look at the derivative space. Agam is joining in. Agam, a couple of important things to note, I suppose, this morning is how FIIs are positioned in the derivative space ahead of the big event.
Yes, and it is an important one, and I'm sure that we've spoken a lot about that. But with respect to options and the way things are panning out, there's a little bit of positivity being priced in as far as the positioning of these options is concerned. So I'll talk to you all about that, but let's start by taking a look at the futures. Now, yesterday we did see the Nifty come up by around 0.4%, but there was a 1% increase in open interest. It doesn't necessarily mean these are shorts. Yesterday was also the weekly options expiry, but it was an uneventful one. Let's move on and talk about the Bank Nifty, and that's where we did see again flattish moves, a little bit of unwinding. Now let's talk about the options market and how things are faring as far as that's concerned. At the moment, the relative writing on puts has increased just a tad bit, which means that there is some bullish bets being placed at the moment. And of course, we also know that we've come all the way testing the mark of 23,000 higher to currently at around 23,400, 500, 600. That's the range, that's the lower end range that we are working with. On the higher end, of course, 24,000 will continue to give you that little bit of resistance. But I reckon that we're not going to talk about 24,000 just yet. We're going to talk about where the Nifty is currently. So that's how things stand. And again, we're going to expect to see this range develop over the next few days as well. Let's move on and talk about stocks then. And again, that's where we've seen shorts in Phoenix Mills, Trent, as well as Solar Industries and Page Industries too, which is reacting to earnings along with NCC. Among other stocks which saw unwinding, with a short covering for Metropolis, Sona BLW and Cummins India. All in all, a mixed year of trade, but a few more in terms of losers as compared to gainers. Let's wait and watch whether or not things change, but I think all eyes will be on that all-important event.
Absolutely, and more important than I think what we've spoken about so far, or not more important, but equally important, is going to be the projection for the next year in terms of both economic growth as well as inflation, because remember, this is the last monetary policy review for the current financial year, and we're setting the tone, or rather the MPC and the RBI governor, the new RBI governor, will in fact set the tone for the next financial year. Watch those inflation projections very, very closely. Kush Bora, founder of kushbora.com, joining us in studio. Kush, good morning. And what do you make of the setup? Because yesterday, at least to me, my perspective, it seemed like cautiousness was evident. Is that the mood at the start today? And what are the key levels that you're watching out for?
First up, a very good morning.
Good morning.
You remember weekends?
No.
What did they feel like?
I'm hoping to remember one. Delhi elections this Saturday, Kush, we will be required to discuss this.
I'm sick. I'm falling sick tomorrow.
My ears have stopped working.
Why are you in a TGIF mood? What is all of this preparing for?
I'm not really, you know.
Do you think markets were just taking a pause yesterday and poised to recover?
A bit of a mixed bag there, depends on the time horizon. I'll tell you why I say that. Remember, we've been talking about the 23,800, 24,000 kind of zones as the target. Nifty is almost recovered from there. This is my way of subtly saying I told you so, and I'm waiting for a reaction from Tamanna on this. But we're there, 23,800, right? Everything looks good, if not great, domestically as well as globally. You know, we've had a goodish budget that we're still talking about. You know, the RBI meets around the corner. If anything positive comes from there, then, you know, one more addition to that. Also globally, the dollar index is off the recent highs. Crude is slipping and the trajectory is lower for both of them, in fact. So, as I said, the setup looks actually good, if not great, right? Nifty's also moved about 1,000 points from the low. So if you're looking at it from a very near-term perspective, I think 24,000, 24,200, perhaps even higher levels are on the cards. That's the kind of setup that we are in. However, all that said, I would like to still point out one thing, which is, mind you, that I still firmly believe that this is a recovery rally and not a reversal rally. I don't think, you know, this is the base in place from where, you know, there's a launch pad and we move to perhaps 25,500, 26,000 kind of levels. The reason I say that is that, you know, you don't want to get your hopes too high that, you know, everything that was, you know, not working for the Indian markets is all over and we're, you know, on the way up. So just that caveat. For now, I think what's important is to get the event out of the way. Once that happens, and assuming that, you know, at least the decision is in line with what everyone's been expecting, I think that the upward move that we've been seeing for the last, you know, 15 odd sessions will continue. Next levels again 23,800 and 24,000. Once we cross that, maybe the Nifty could actually scale higher levels. But let's take it day by day.
Okay. Take it day by day. We've also got Parag Thakkar, who's head fund manager at Fort Capital, joining us remotely today. Parag, we're missing you in the studio today, but
I'm also missing.
Good morning to you. And so you've seen some of the results of the banks that you were watching so closely, and that's in fact a pack that is going to be in focus today also on account of the RBI policy and any measures that could be announced on the liquidity front. Anything that has changed from your perspective in terms of what you like and the factors that you're watching out for?
No, there is no change in my view, because what I feel is that Indian economy has hit the bottom. Just now Kush was also pointing out to the fact that dollar index has also started reversing. US 10-year is also reversing. So global macros are also falling in right place. Plus domestic, of course, we have actually done very well on the fiscal front and current account deficit front. Our corporates are under leveraged and banking balance sheets remain very strong. So I would say that I am of the same view that Indian economy has bottomed out. We are hearing green shoots on the ground from cement, at least from two-wheelers, and some of the companies I mentioned last time, like TVS Motors and all. We have seen good result from Bajaj Finance, good AUM growth. So I would say that some of the green shoots are already visible in the economy, that we have bottomed out as an economy. From stock market, I agree with Kush that we cannot say that we have completely bottomed out yet. And there can be some speed breakers ahead, but I would say that for time being, at least the setup is good. And if RBI actually, as I said last time also, that this time the weightlifting has to be done by monetary easing, and the monetary easing cycle is going to start from today. So let us keep fingers crossed.
The term weightlifting. Heavy lifting, weightlifting, but weightlifting is the right term, because you know you need some kind of big push right now, and which is why you saw the disappointment in the market on the budget, even though it's a very sensible budget. Every economist would love it. You're sticking to fiscal deficit. You were an outlier on that day, Parag bhai. But I just want you to give us two scenarios on how the markets will react today and how investors should look at it. One scenario very clearly is that there's a 25 basis point rate cut, but no additional liquidity easing and no supremely dovish statements from the governor. The second scenario is 25 basis point rate cut, maybe some sense of more liquidity easing and a very dovish statement. How do both scenarios play out?
Yeah, so just a 25 bips rate cut is already priced in the market. So that way, I will not expect too much of the movement. Of course, there will be some, for example, there are fixed rate lenders, right? NBFCs, and we have some of them in our portfolio. I'll put a disclaimer there that we have it in all our clients, like Aavas Finance kind of a stock, where they lend for long term and mortgage loans, right? And so the 35-40% of their loan book is fixed rate. While they borrow from banks, which is at a floating rate. So those kind of companies will benefit with a plain vanilla rate cut. But as you rightly said, the second, which is the thing which I would love to see, which is second one, that there's a 25 bips rate cut with a very dovish stance, and RBI put comes into place, right? Like we used to say during Fed times, Fed put. And that put means that if whenever there is some liquidity shortage in the market, which is above 1 lakh crores or 1.5 lakh crores, which used to be the case in last 6 months, RBI will come and infuse liquidity, which is durable. And so deposit accretion will happen in the system. And so most of the banks who are struggling for deposits, and because of that, their margins are under pressure or their loan book growth is under pressure, that will also get addressed. If that is the stance which I would love to see, then it will be positive for entire financial space and overall economy related sectors like two-wheelers and cement and so on and so forth.
Okay.
Kush, let me come in on some of those rate sensitives and how they're technically placed. Key banking stocks, key real estate stocks, and we're going to get in a piece from Harsh Saita very shortly on the way, the impact that we would see on some of these companies, specifically if there is a 25 basis point rate cut. First of all, everyone is just assuming this is going to happen. That 1% chance that it doesn't is going to be really, really lousy. But anyway, keeping that aside.
And Tamanna, which is why the Bank Nifty call becomes so important ahead of the policy, right?
Yeah,
do you want to take the risk and stay long or otherwise?
Yeah.
I'm so glad you bring that up, because almost everyone is considering that as a given, and the slightest disappointment on that front is going to perhaps shake things up a little.
Very similar to what happened with the budget presentation. Everyone had penciled in a big capex boost.
Correct.
And then the sound of heartbreak was on everyone's screens.
And then the cheers in the newsroom when the tax breaks was
That is fine. Market didn't care too much for that.
That is more personal than than
No, but coming back to the point, rate sensitives, Bank Nifty, I think you have given the
Nifty view.
Yeah, so let's get your Bank Nifty view as well.
Just to circle back and complete things, the reason I was a little cautious on the Nifty overall, even the Bank Nifty, at the moment, optimistic but cautious, is because FIIs continue to pile on shorts. The day we saw FIIs become net buyers, after 23 sessions, was because they had 90% short positions. It might look lesser in terms of contract because of the lot size revision, but they were 90% short. So some short covering was par for the course, right? But yesterday, again, after the kind of move that we saw yesterday, a couple of days ago, they are back. So the short percentage has gone from 82 to 83.5, which means they're still not letting go of their short positions, which is something to definitely keep, an eye on. Bank Nifty has actually moved up quite a bit. I think from a near-term perspective, it faces resistance around the 50,800 to 51,000 mark. If that is taken out, I think another 500 points of rally is very much on the cards. But I think the rate sensitives, something like an IndusInd Bank, a stock that we discussed as a call as well for a second target of 1075, that was already hit. I would play something like that. HDFC Bank's already seen that kind of move. So as even Parag Bhai was saying, that the 25 basis point rate cut is priced in. I will not play for that. Once the event is over, if there is any kind of pullback in some of these names, will I go out and buy? Real estate stocks, still not on the cards. If you see a lot of these names are seeing pressure, the only kind of bounce that you're seeing are from the oversold territories. So definitely not something that you want to buy into right now.
Okay.
What about, sorry, did you give your stock ideas? No. Can you get your stock ideas very quickly?
Sure. Two of them, one on the long and one on the short side. Sumitomo Chemicals has done very well. The moves that we are seeing are delivery backed, volume backed. So from a near-term perspective, you're looking at targets of 550 and 565 with a stop loss around the 520 mark. On the short side, you've got Power Grid. Despite the kind of fall that we are seeing, it continues to pile on shorts in the future segment and delivery-based selling in the cash segment. So on the short side, Power Grid with targets of 275, 270, stop loss around the 285 mark.
Okay, well, a little more than an hour remaining, an hour and 13 minutes to be precise before the big RBI MPC decision does come out. The street is expecting this 25 bips cut, as we said. Now, my colleague Harsh Johnson to tell us what the 25 bips or basis points rate cut could mean for specific verticals of the markets and maybe the markets overall. Harsh, what is it that brokerages are penciling in if there is a 25 basis points cut?
Well, Neeraj, it's extremely interesting. Two reasons why. One, we have a new governor, and second, it's one of the biggest policy decisions in a while now. And therefore, you likely see a reaction on counters. Impact of a 25 basis point rate cut. One, it'll lower loan rates as well as EMIs for consumers. It'll lower loan rates across the board. Any loan rate linked to the repo will come down, and this will lead to also some pressure on the rupee, and it may also aid consumption. So those are three pockets that we are looking at. One, lenders. Two, realty play, auto, because a lot of loans will get adjusted in terms of loan rates. Capex intensive sectors will get impacted because you'll require, or the requirement of capex will now get eased because loan rates will come off, and export facing sectors will get impacted because of the rupee. So all of those will come into play. Now I'll talk about specific names as well as sectors. One, on banks. One, initially you'll have some bit of negative bias because you'll see loan rates come off, deposit rates will take time to adjust, and therefore some margin pressure seen in the near term. Positive overall because deposit competition will start to ease in the medium term, maybe 2-3 quarters out, and margins will eventually recover. Which banks are able to hold on to margins will obviously benefit disproportionately. Something like an Equitas is a very large fixed rated book and therefore may help that one. With regard to NBFCs, again a 25 basis point rate cut will directly translate to their borrowing cost coming down, and this will likely aid margins as long as yields don't come down as well. Even though the RBI will be keen to bring yields down, but if yields don't come down, it will aid margins. NBFCs with a higher fixed rated book will do better. NBFCs with a higher floating liability, which is the borrowing that they do, if that is linked to a floating rate, that will do better. Now I'll talk about some names which Morgan Stanley has thrown out. One, an M&M Financial Services, PBT impact of nearly 3%, but the stock is up 7%. SBI Cards, 2.5% PBT impact positive, but the stock has already moved up 5%. This is a 5-day move on the stock price, so keep your eye out because some of these stocks have already moved. Mannapuram, 2.3% impact on PBT, 4% stock has already moved up. Now, negative impact, LIC Housing, negative 7% on the PBT, and the stock price move is there. PNB Housing as well as Canfin Homes, those are the other two. Quickly, impact on real estate, lower interest rates means positive for real estate. Impact on auto, positive on auto. Corporate lending likely to pick up as a result of this. Currency impact, IT stocks, pharma stocks will be in focus. Something like a Sona BLW within the auto segment, Samvardhana Motherson, JK Tyre, Balkrishna Industries. Some of them have large components of export and therefore may well benefit.
Thanks so much for laying that out for us, Harsh. And in fact, all of that could play out or in fact may devolve if there is a rate cut or there isn't, at least immediately for now. That is what we anticipate will happen. We've got more to talk about, of course, but Kush, let's talk about what played out yesterday and some of the signs that you saw. Pharma, for a large part of yesterday's session, stood out and it gave up a little bit of ground towards the end of the session. Do you see any pockets of strength there? Anything that you would buy right now?
Very interesting. I wouldn't put it as pharma. I would actually just broaden the umbrella and say healthcare, because a lot of names have been popping up on our on our screens as well. Two of the calls that we've already discussed, and they still remain something that I would pick, are KIMS and Narayana Hrudayalaya. These are the two calls that we've already shared over the last 2 days on the channel as well. So KIMS is actually looking very strong. If you see the dip towards the 50-day moving average has been bought into. Very steady recovery on this one, not affected by the volatility that the market has shown. So KIMS is something that you'd want to keep on your radar. Again, to reiterate the target, 670, 690, 630 is the stop loss. Narayana Hrudayalaya, we gave it as a BTST or more of a positional trade also in the closing show yesterday for levels of 1415 and 1440 with a stop loss around the 1345 mark. So yes, you're right, the entire healthcare space is doing well, but somehow the hospital names have actually popped up a little more on my list at least.
Okay, we'll look at a quick earnings conversation and then head into a very short break. We're coming back with the pre-open session. The first conversation with Somani Ceramics, you'll see them only on NDTV Profit, all of that after this break. But as we come in to that break, REC has reported a strong set of numbers in the first quarter. We spoke to the Chairman and Managing Director Vivek Kumar Devangan. Listen in.
We are expecting that all reversals would be completed by December 2025. Okay. After only those assets which are under liquidation, some amount will come, some reversal will happen. But after December 25, reversals will not happen. But that would be offset by the kind of disbursement we are having. Our loan book will increase substantially. That will offset actually all the interest income actually. As you might have noticed that our disbursement was the highest ever in Q3 to the tune of 54,492 crore. And as we are talking, our total disbursement has already crossed 1,60,000 crore. Last entire year, total disbursement was 1,61,000 crore. So this year, we are expecting that our disbursement will cross 1,90,000 crore, or it may even cross 2 lakh crore. And what had happened that in Q3, some prepayment and some repayment had happened. Our loan book had grown by 14%, but in Q4, we are expecting that our loan book will increase by 15 to 17%. And we are quite confident that our asset under management will be doubled to about 10 lakh crore by the end of 2030. Right now, at the end of Q3, our loan book is at 5,65,000 crore. So this disbursement trend is going to continue because we have huge pipeline of projects, particularly conventional coal-based generation projects. New projects are coming up, and we already sanctioned those projects, but very few little disbursement has happened. This disbursement will pick up from 2026 onward, 2026 to 28. Huge disbursement will happen in coal-based capacity, and in this current year's budget, Honorable Finance Minister has already announced that India will strive to install about 100 gigawatt capacity from nuclear energy.
Right.
And by the year 2047, that gives us additional capacity addition in terms of lending to non-fossil fuel sources, because nuclear is supposed to be non-fossil fuel sources. And targeting that our renewable energy portfolio will also increase substantially by the year 2030. We are targeting 3 lakh crore, but if nuclear energy component gets added, perhaps our renewable energy portfolio will increase to about 3,50,000 crore by the end of 2030.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी
Welcome back. Just about an hour to go for the big announcement that everyone's been waiting for. It becomes very, very crucial at this time and space as far as not just equity markets are concerned, really. It's what India's next economic push is going to be. But before we get to more details on that and all of the stories we're covering this morning, guys, did you all see the announcement on Zomato's name change? In the same league as what a Meta has done, from Facebook to a Meta, or Google becoming an Alphabet. So Zomato will now be called Eternal.
Eternal stock price is down. Eternal stock price is up. But no, I mean, you people can debate on the name, but I think
he said both.
But the course
no,
is.
I mean, Swiggy went below its IPO price yesterday, so stock price has to be in the game.
Yeah, but this is normal course, right? Blinkit is now becoming the fastest growing engine. So you make it a sum of parts instead of everything known by the first founding company's name, and I think it's par for the course. Maybe.
Swiggy's competition is eternal.
That too. I mean, I don't know if the name actually tells you what the company is doing, though. That's my only thing. Eternal is what? I mean, so that would be my only observation. But yeah, in terms of saying that Zomato is not the only or the biggest part of the business, which it hasn't been for several quarters, is interesting. Yeah. So name changes in the offing, and that's why Zomato is something to watch out for. But our focus on Somani Ceramics this morning. Abhishek Somani, Managing Director and CEO, with us this morning, and he, of course, thank you, Abhishek, for speaking with NDTV Profit first up. So, Mr. Somani, let me just start by addressing the numbers and the fall that we've seen in volumes, the fall that we've seen in profits and margins. Some of this because of higher employee costs, of course. But if you can take us through your rationale of the numbers that we've seen this quarter with Somani Ceramics.
Yeah, first of all, I would like to correct there. I don't think there's been a fall in numbers. We've been able to grow by 4.5%.
I'm referring to your net profit, sir. I'm referring to your net profit, which is 58% down at 9.3 crores versus 22 crores. So those are the numbers I'm referring to. Of course, your revenue has grown up 5%.
We did have two JVs which have gone off, so there's an exceptional profit on that, loss in that. But otherwise, our margins have remained the same. It's at 8.4, and last quarter was 8.5%. So our margins haven't dropped, although there's been a muted demand. We've been able to hold on to that because it's a better value-added sales, and also we've not bought any sales, so our balance sheet is in check. So from that point of view, I don't think there's a serious impact. As far as the staff cost is concerned, it all depends on, we've not hired any more people, but it's just that the sales volumes are low. We have readied our staff for a much larger volume, and that has not come through in the last 2 quarters. But as and when that comes through, I think this will start evening out from that point of view. So in the next couple of quarters, you'll see that evening out.
So fair enough that your margins quarter on quarter have been fairly steady, but if I look at it year on year, there is a dip in margins from 9.6% to 8.3%. So to give us a sense of what is the new normal, was this a base effect playing out? Where do you see and hope for margins to go?
No, so 8.3, 8.4% is what we exited at Q3. Is clearly not the new normal. What's happened is where we added a lot of capacity, and we've not been able to utilize this capacity because of the muted demand. And in the tile industry, the capacity utilization makes a lot of difference as far as margin is concerned, and that's the drop which you see. But having said that, we're probably the lowest drop in the industry. Other players have dropped much more in terms of margin. Of course, that's no brownie points to us, but the point is, like you just mentioned, this is clearly not the new normal. we should be looking at least 150 to 200 bips increase over the next year, owing to the increase in volume, which we see will happen over the next few quarters because the projects have started coming up, and hopefully there would be lesser pressure from the Morbi sector, which is the cluster of ceramics, because with the wars coming to some kind of salience, probably freight rates will go down and margin, and the exports will start picking up from there.
Hi, Mr. Somani. Morning. This is Alex joining in as well. I just want to get a sense from you on your own base case assumptions for volume increase in the next financial year, since we're more or less ending this quarter. What will you end the year at, and how much do you anticipate it will improve in FY26? What is the base case, and what would be a disappointment in your opinion?
So this year would be a couple of % more than what we have done. So mid single digits is what we think we would be able to achieve now that, like you rightly said, the year is almost over. Next year, we're looking at high single digit, low double digit growth. And why it has not happened in the last couple of quarters is a little perplexing to the entire building material industry. But I think the front of the wall segment, with the buildings getting completion, with all the projects getting into completion stage, they should be much better off in the next year.
And in terms of, so you've already guided towards the expansion in margin to the extent of 150 basis points. But that is assuming that your input costs remain benign and you're able to maintain pricing. Any challenges to either of those that you anticipate?
Pricing should remain okay, and whatever little reduction we may have in pricing, if at all, that should be compensated by the higher capacity utilization. And on the other hand, we keep pushing for more value-added sales, which has started to pick up and will continue to pick up. As far as the input cost is concerned, our biggest input cost is fuel. I don't see fuel jumping very much. There is a little bit of an effect of the maybe 1% or 2% on owing to the dollar, the rupee slide actually. But that's a small component of the gas, the dollar component of the gas. Other than that, I don't see gas prices jumping up, and the rest of the raw material prices also I don't see going anywhere from here. So that should be under check.
Okay.
Okay, just Mr. Somani, last point from you on what is the outlook on demand. You spoke initially in our conversation about volumes which have not been as per your expectation. You're preparing your team, your sales team and all of your teams for an increase in volume. So two-part question. In your view, why has there been a drop in volume? Is this reflective of the overall demand scenario? And are you expecting an uptick soon, basis what?
So two things have happened. One is that there's been an added pressure from the Morbi sector in the domestic market, which is making the dealer a little jittery to hold on to stocks. That is owing to basically most of the Morbi sector was focused towards exports, and with the freight rates going up, they have dumped a little more of that in the Indian market. That has not affected our prices because that's a very inferior quality material, but it has put pressure on the psychology of the dealers. Secondly, on the other hand, the IHBs, the individual home owners, they have delayed their purchase or deferred their purchase, so there's an overall consumption which is lower. You can see that in the entire economy, nothing to do with the building material. Of course, the building material gets affected because it's a front-facing product. The builders, I think, also have coming to completion. The back of the wall did well in the last 2 years. The front of the wall, which is switches, tiles, plies, paints, etc., all of the building material which is front of the wall is slated to do better because all of these buildings which have been announced and sold have to get completed. Tiles remain to be the most competitive and the most preferred item for completing a building, just like a sanitary ware and bath fittings. So we do believe that this should be much, much better this year. Of course, we've been saying it even last year and it didn't happen. So not much to say on that, but we do believe that it's high time that this would pick up. And exports will only help ease the pressure in the Indian market. So both of those reasons we believe volumes would pick up.
All right, thank you so much, Abhishek Somani there, and best of luck for the next quarter as well. Speaking to us on the quarter gone by. All right, pre-open session is up and about. You saw the rates for Somani Ceramics flashing on your screen, but I want to pull up Sonata Software as well. Those numbers out yesterday, the street's not liking them. From what we're seeing so far, and you're almost at the end of the pre-open session. Same for BKG Foods, seeing a bit of a tough take. PI Industries as well on the losing side. So I'm just picking out for you what the first result impact is in these cases. Bharti Hexacom not half bad, about 3% up. I want to see what's happening with ITC. ITC, Britannia, Airtel, Bharti Airtel. Let's pick up some of those. ITC mildly in the negative, Britannia seen positive so far. As we wrap into the pre-open session at least, and Bharti Airtel also showing a tick of green, as is Godfrey Phillips for some reason, about 2.5% up. Hero Moto, strong set of numbers, 2% up on Hero as well. I'm wondering, Parag Bhai, if you have a take on ITC and Britannia?
Yeah, so basically, my ITC cigarette volume was better than estimate. I think there was one-time branding cost in FMCG of 180 crores, which brought their FMCG margins optically down. Let us see what company has to say on that FMCG one-time branding cost. But I would say that ITC, we own the stock and we continue to like the stock because see, we have too many, I would say, rate sensitives or cyclical sectors because I strongly feel that we are at the bottom of the economy cycle. That is what Mr. Abhishek Somani was also referring to in his interview. I think that is the state of entire economy today, at least the domestic cyclicals, that after 2 years of very sluggish business outlook, I think next year should be good, driven by government steps to boost consumption. At the same time, remain fiscally prudent, and most importantly, now RBI, whatever they will do in terms of cutting rates and putting more liquidity into the market. So imagine from both sides, from government and fiscal and monetary, there was a tightening last year, and which is going to get loosened up this year. Which is very positive for domestic cyclicals, and I would say that so ITC kind of balances that overweight stance of banks or NBFCs in our portfolio, and so HUL, ITC, or say Britannia kind of names actually provide a good balance to our portfolio. At the same time, I also have a view that mega caps have been completely sold out by FIIs, and that is where the opportunity lies in medium to long term. Of course, FIIs are not returning in a hurry, but ultimately, when they will see earning momentum, I think that is when they will jump in, and that is the time when mega caps will get rewarded. Already dollar and US 10-year are showing the signs that FI should come back. But let's see. I think they are waiting for earning momentum and they are not getting so much happy with the Q3 results of Indian corporates. I think Q4 should be significantly better than Q3 in many cases. And so I would say that so FMCG, pharma is very company specific. But within FMCG, I feel that they are the good balance providers to our portfolio.
Okay, fair call. And Parag and his firm have been into some of those firms for a while. Now 9:10. And just before I go to Harsh, the pre-open rates have settled, and watch out for PI Industries is down about 3.5%. So from amongst the larger ones, this one's certainly cracking because of the revision in guidance. So keep that in the back of your mind. The other one is Trent, which corrected quite significantly yesterday and just stabilizing today. Harsh is joining in with what the brokerages have to sum up for Trent. Harsh, good morning.
Very interesting, Neeraj. Good morning. Now, what you're seeing on Trent is largely cuts with regard to target prices, but brokerages are maintaining their calls on Trent, and what they're also saying is that they're overall bullish on Trent because the target price upside is still very, very strong. When you're looking at Bernstein, first off, they're maintaining the outperform rating, cut target price to 6,900 from 8,100. They are saying SSSG growth was a key issue in this particular quarter, which is same store sales growth. They are cutting their target price largely because of this metric, and they are saying that valuations are the lowest since 2021. So this could well be an opportunity. The current market price factors in a 15 to 17% EPS growth from FY24 to FY30, which they believe is conservative, and the stock reaction over the last month or so, which is down 26%, is a bit of an overreaction is what they call it. Jefferies, they've maintained their hold rating. They've cut target price to 5,800 from 5,900. They believe that earnings were just about in line, which was a bit of a disappointment. Investor concerns with regard to margins were largely maintained, and that came as a relief. The stock price correction was a bit of a shock, is what they are saying, is surprising, is what they call it. Citi maintained by, cut target price to 7,800 from 9,350, but they call this the top pick in India, consumer, discretionary and retail. They call this that because they believe that the valuation differential of a DMart, Titan and a Trent warrants the kind of upside that they are giving to Trent, which is almost 35 odd %. And therefore they believe that warranted the kind of upside that they are kind of giving it.
Important to note, thanks Harsh so much for that, but important to note they're cutting their target price from 9,350 to 7,800. It's still a considerable upside, but it's a significant drop in the target price that Citi is undertaking. Can we talk about that on the charts as well? Kush, of course, under pressure yesterday, worst performer even on the Nifty 500. And so not very often that you see a move like that. What would you do with the trend very quickly?
Still stay away or probably stay cautious. I think on the downside, you've got 5,000 and 4,700 as the next levels to watch for, because despite the kind of 35% drop, the stock is still seeing volume-backed drops, and the volumes are actually quite high on this one. So just be a little cautious. On the downside, 5,000 and 4,700 levels to watch for.
Okay. Anything that you're seeing from what is moved after the settlement of the rates that is an opportunity at the start, Kush?
Again, something from the pharma pack, which is Concord Biotech. It's an open call. So for the second target of 2385, I think you could still continue to hold on or maybe add a fresh.
Kush, I have a question though. Some of these pharma names have had a really strong rally. Would you book profits in yesterday I was asking, or day before yesterday I was asking if you should buy them. I'm asking you if you would book profits in a Laurus, Divi's or an Aarti Pharma. Very quickly, Kush, 30 seconds.
Laurus, I would continue to hold. Divi's, I would continue to hold. But you're right, because of the kind of momentum that we've seen, hold some of these with a trailing stop loss in place.
Okay, so hold them. Don't buy them, but hold them, but keep a trailing stop. Don't sell them either, because remember, these stocks have had a really strong rally, viewers. Let's see, when does the rally pause, if you will. The rallies always tend to pause no matter how good the story is. And the reasons come later. The stocks do correct. Happened with Trent, happens with Avenue Supermarts, happened with Bajaj Finance. Let's wait and watch what happens next. But here's how the markets are starting off. An hour or less than an hour before the RPI MPC decision comes out, 0.25% in the green. So the green is good to see. Asia wasn't particularly in the green today. Bring up IT, which is flattish, mid caps and small caps, and are they actually very, very flat, you have to admit. And this is fair, actually. You don't want something very brisk ahead of a very crucial MPC decision, by the way, from a market's perspective too. What's not doing well? ONGC. I suspect that this is more to do with crude than anything else. Reliance is also down. HCL Tech, Power Grid is the big loser, 3% up, but no big cuts per se. Even Stevens on the gainers and losers, not surprised with the reaction on numbers to Bharti Airtel, 2.5% higher. Britannia about 1.23% higher. Hero MotoCorp, M&M, Ultratech are amongst the others. So steady start, flat completely, and maybe Tamanwal market as well, but just want to see Aurobindo Pharma because the con call started at 8:30. The stock was supposed to start off well because the results were very strong, but the con call would have determined if indeed the commentary was strong or no. It started off absolutely flat, Aurobindo Pharma. So no, the street was long here. The numbers look very promising, Tamanna, but clearly the con call may not have sounded very constructive for the stock to start off the way it has.
So Auro Pharma, actually, if you go to see, the revenues were fine. The margins and PAT was in line. Some would say maybe even a little bit lower, but it was overall better than expectations, you might see an uptick, as you're seeing on your screen, post the con call numbers, as Neeraj has mentioned, actually going up pretty quickly. I don't know if you can pull up the intraday. Oro is looking like an interesting take. So, all right, that's the market overall. At least we're seeing green. I would give you that. Let's pull up the sectoral heat map for you and see if that green persists to some extent. On the fence is how I would describe the markets this morning on open. Nifty Mid Cap 100 about mildly in the red at this point. Central CPSE, your public sector companies, are showing a downtick, as is FMCG. I wonder if that's the ITC Britannia effect or what is happening there. Oil and gas also not looking great. Metals are okay. Realty may be poised for some kind of a relief in terms of rate. Let's pull up specific stocks, because that's where the story really lies. Bharti Airtel, let's start with that. Strong set of numbers. Britannia, strong set of numbers. Has there been an impact there? Let's look at some of those. TD Power is the other one we're looking at. About 3% up, 2.5% up on a Bharti Airtel this morning, and that is something that the street would like. A TD Power also about 4% up. JK Lakshmi also strong beat against estimates, and this was on our watch list, about 2% up. PG Electroplast is something we talked about, as we did with Gulf Oil. PG Electroplast profits have doubled. Gulf Oil has reported its highest ever EBITDA. So where you've seen a good set of numbers, the street has come in and supported. Not so much for a Bikaji Foods, PI Industries. I would add a Sonata to that list. Bikaji Foods in pain. We're going to actually speak to the management at 9:50 this morning. Let's wait to hear what they say and why in a festive quarter they've seen volume growth not as expected. 10% down right now. PI Industries, second consecutive guidance cut, which is why maybe about 2% down. NOSIL profit has halved in Q3. And Sonata Soft is the other one we should look at, actually, in pre-open session, showing quite a bit of beat. Continuing here, pain for Sonata Soft. Some acquisitions and order pipelines have also been announced, but the core numbers is nothing that the street has liked. 15% down nearly at this point. So it's all about results is what I'm spotting in the first few minutes, Alex. And the rest of the street largely on the fence.
No doubt. And also something that stood out to me as well from the broader market, something that is an investor favorite actually, Cochin Shipyard. The numbers came up. We haven't spoken about it today, but the stock is down about 3.5% right now. The PAT is down as much as 27.5%. The margins have contracted quite considerably, 866 basis points at 20.69%. I'm just wondering if we have a view on this. Is Parag Bhai with us still? Okay, Parag Bhai, any view on Cochin Shipyard? Have you looked at the numbers, and would you say that the drop in value, of course, you've seen that play out over a period of time, at any point would you start deploying?
So basically, see, Cochin Shipyard or Musgaon Dock are monopolies in their own nature. We don't own them in the portfolio at all. What we have in the portfolio is only HAL, and we had BL at some point in the defense stocks. And as we spoke on the budget day also, that now the table has turned towards consumption. So I would be more bullish on banking, NBFC, FMCG kind of names, and within infra-set, say cement, selective stocks in cement sector or selective stocks in pharma sector. So I am not too much into buying railway or defense stocks as of now. I think the biggest beneficiary of this rate cut cycle, whether it is deep or shallow, let's see. But the biggest beneficiary of rate cut cycle is NBFCs, which have a long tenure lending, which is done at a fixed rate, and they have a borrowing from banks, which is floating. There are 3-4 names in that space, but we own Awas out of it. But there are others like India Shelter Finance and others also, which are, I think, will be a biggest beneficiary because they have lended for long term and at a fixed rate, while they have borrowed from banks at a floating rate. So their margins will definitely expand, and it's a great business. 95-98% of your home loan book is completely self-occupied residential property. So the credit cost is also very less in that particular segment. So I would like to focus on that particular segment. So the results which have come in this segment are also fantastic. So that is my favorite space to look for today.
Fantastic. Okay, so point taken. Another stock that is doing well is Godfrey Phillips. Let's pull that up. It's up about 3%, and to a certain extent, I guess it is the knock-on effect from what you saw in the cigarette business for ITC. Any play here, Akush, would you say? And how do you view ITC as well at the start?
Well, ITC is something that you'd still want to consider from a medium-term perspective. It's got these medium-term support zones near the 425, 430 mark, very close to those. So, any kind of a support near this level, the stock will actually start consolidating. A break below this could actually retest 400 levels. But I think the kind of support that we've seen should hold. And this is a place where you start accumulating something like an ITC if you missed it, the last time around. Now, as far as Godfrey Phillips goes, not as constructive as ITC. The stocks had a longish period of fall. What we're seeing right now is a mild bounce, as you said, maybe something in line with what ITC is seeing. But other than that, a couple of resistance points on the way up. 4,800, 5,000. Some of these levels are going to act as a near-term supply zone. So not too constructive on Godfrey Phillips. Perhaps you can take this as an opportunity to lighten or exit. But ITC is something that you'd want to accumulate close to these support levels.
Actually, Kush, I want to bring up an important point. Now, the markets are kind of tepid. The bank nifty is extremely flat, right? Would you take chips off the table right now if you were long ahead of the policy? Or would you, because your earlier thought was that the nifty could go to 24,000. Would you take chips off the table, maybe rekindle them post the policy, or would you stay long right now?
No, 100% take chips off the table partially. In fact, Neeraj, if you'll recall, this is the view that I've maintained for the last 3 sessions. That one big event out of the way, the second one on the horizon. You don't want to take very heavy positions, especially if you've taken some positions from lower levels. You're sitting on a fairly decent profit. Why would you want to give yourself that risk of maybe seeing that erode any bit? So yes, I would take chips off partially, but if I do get any kind of a dip closer to the support levels, let's say 23,300 on the Nifty, perhaps 49,500 on the Bank Nifty, I would actually take that as an opportunity to create fresh long positions from there on ahead of the event. Even if the Nifty goes higher from here, another 200 points or so, I wouldn't have that FOMO feeling. Take chips off partially.
Big gashes, by the way, to select stocks. Bikaji Foods has been hammered, 12.5% lower now. Sonata Software, another company which missed margins, down about 15%. Cochin Shipyard, we already spoke, is down about 4%. As we speak, Honasa Consumer is at 211. So a lot of consumption, by the way, is taking a fair degree of stick in the session today, except for Britannia, which is up 1.5%. But on that note, Kushpura, Parag Thakkar, thanks so much for joining in. Parag, I didn't get a chance to talk to you at all today. Looking forward to talking to you maybe next week. But thank you so much for your time today, both of you. And speaking of consumption, I think the major FMCG earnings out of the way, one major theme in this quarter, you could argue has been some bit of, or not quite the expected volume growth, if you will. But let me get in Mahima first to do a setup of how the quarter was and what is to be anticipated. Mahima.
Right, so basically FMCG woes have continued this quarter as well. Raw material prices are going up and input cost inflation persists, and because of this companies are taking price hikes. Now price hikes are being taken to offset the inflationary pressure, but they are not to the extent that kind of offset the inflationary cost pressure for the companies, and they're being taken in phased manner, and this is kind of impacting the margins for the FMCG majors. All the FMCG majors that have come out with their earnings, margins have shrunk for them, and it is also leading to a decline in their volume growth. Most FMCG companies have come out with a low single digit of flat volume growth. In terms of volume growth being impacted, we are seeing the demand pressure also playing its role. Rural demand is coming back, but it is being offset completely by weak urban demand. In terms of companies that have not done well this quarter include HUL, where volume growth was flat. Management has downgraded the demand outlook from stable to moderating consumption environment. Gross margins contracted by 50 basis points. Godrej Consumer was also flat. Dabur was revenue was up 3%. But companies that did fairly well include Imami, Tata Consumer and Marico. So this is the overall view as to how Q3 has panned out for these FMCG majors.
Okay, thank you for that, Mahima. So you look at the whole consumption space as a mix of expectations of where that money saved by tax cuts will go, and a dose of reality on what their third quarters actually looked like. Now, with that setup, let me go to Abneesh Roy, Executive Director Research at Nuvama Institutional Equities. Abneesh, thank you so much for speaking with us, and always great to chat with you. Let's get your overview before we get into stock-specific stories, because we have so much to talk about. There's Trent, ITC Britannia, so much to unpack today. But let's start with your overview of what you've seen in Q3 so far. Abneesh, can you hear me? Okay. I don't think we have that line fixed yet. We'll try and get him back. But for example, you were talking about a BKG, Neeraj. Festive season sees a 3% volume growth. So what is going on? Even if I talk about, okay, staples have a limit, right? How many soaps, shampoos will come in. But even in snacking, you have seen a bit of a hint or a bit of a hit. Look at Trent and the kind of details that the numbers are showing you. I would say Britannia is a bit of an outlier, perhaps, if at all.
Yeah, I agree completely. In fact, let's pose that question to Abneesh Roy. Tamana, you want to take that? You had the opening thought with Abneesh.
Yes, Abneesh, my opening thought, if you could hear me. First of all, can you hear me, Abneesh?
Yes, now loud and clear.
Okay, super. No, so I wanted you to sort of set the context for our conversation on how you are looking at the numbers reported by all the majors in the consumption space and what that is telling us right now about their profitability.
No, I think Britannia, these are good numbers. If you see 6% plus volume growth and overall revenue growth of 8%, these are good numbers, and that's why the stock is up also. If you see this quarter, the palm oil has impacted all food companies and soap players. My sense is Q4 there should be some recovery because Q4 from day one the pricing growth will be there. While in Q3 the food companies took some hike, but it was not there for the full quarter. And in palm oil, we have seen some level of correction from the top. We also need to factor in the rupee depreciation because most of these are imported. I think the good results are from Britannia. If I see ITC, cigarette has done reasonably well, but in their FMCG, it was a severe impact on the profitability because of palm oil, because of maida being higher. And the notebook business also saw same issue of Chinese imports, and the overall margin pressure was there. So this quarter, we have seen that companies like Imami have done quite well. We have also seen the palm oil impacted companies like Godrej Consumer, HUL, BKG suffer a lot. And Britannia is somewhere in between. They have done reasonably well on the volume front. The gross margins are under pressure, but they have managed their other costs really well. So we are positive on Britannia, and we expect that pricing growth for Britannia will now become 2-3% from Q4, and FY26 could be even higher. So we are positive on Britannia.
How did you look at, for example, let me talk about a Trent and a Titan. And I think I heard you also asking a question on the Titan call, Abneesh. How would you look at some of these majors which have been street favorites and what their quarters then fared like?
Yeah, good question. So in any stock or any sector, we always see cycles. So Trent, if you see last 3-4 years, has done exceedingly well. But because of various reasons, for example, we have seen other competitors also ramp up. So Reliance is ramping up, Eusta, Shoppers Stop is also ramping up Intune. And then last week, Reliance has tied up with Chinese player Shein. So that's the reason why any stock which goes up sharply and then there is slight miss also in Trent, for example, still from a sector perspective, it is sector leading growth. But now expectations are so strong that even if 2-3% miss is there, there is a severe impact on the stock. Trend stock has corrected a lot, and my sense is these are good buying opportunity. Last 2 months, of course, all high valuation stocks have corrected a lot. Generally, markets have corrected a lot. So more of profit booking. But if I see the numbers, frankly speaking, these are good numbers, and overall store addition is also decent. 34% growth in revenue, 34% growth in EBITDA. How can these be bad numbers? But versus expectation and premium multiples, that's why the stock has corrected. But my sense is that pain is now behind, because now in terms of Zudio and other formats, they will continue to be strong. And in India, kind of large markets, Shein, Reliance, Eusta, and Zudio all can coexist. Coming to Titan, clearly in terms of margins, worst is behind. We have seen severe pressure in the jewelry margins. But in terms of the wedding season, next 2 quarters, we have strong wedding season. Plus price growth in gold will continue to help them. So we are positive on both the names, but from a structural perspective, these are very good quality companies. Titan hasn't corrected a lot, but Trent has corrected a lot. So I will say valuation comfort is now higher in Trent, and we will be positive on both the companies. So we have a buy on both the companies.
Yeah, actually, that was going to be my question, Abneesh, that is this the dip that somebody who wanted to always invest in Trent would have hoped for, and has it come? So you answered that question partly. Just wondering, I'll extend the conversation of Titan to the other gold jewelry companies as well, if you have them under your coverage. Any thoughts on any of the others aside of Titan? Because Titan is at one level of valuations, the others are maybe slightly different, of course, with reason. Any other coverage out there in the gold jewelry companies or gold retail companies?
So we cover only Titan, and that is the large cap company, and we like that. But on your question, yes, entire organized sector will continue to gain market share. Even Titan, which is such a large player, has got high single-digit market share, and the overall the unorganized space will keep losing market share to the organized players. So we think entire industry should do well. And in the next 2 quarters, Q4 and Q1, the wedding season is also very strong. Plus, the pricing growth will come because of the gold being at a high level. The only issue here is because such high sales numbers are there, the discounting is very high. And that's why the margin pressure is there for many companies. And the diamond part of the business is seeing pressure of the lab-grown diamond. And the diamond is a higher margin business. So we'll say that Titan is a preferred play for us. And that's why we have a buy on that. But entire organized space should keep taking market share from the unorganized.
Abneesh, hi, Alex joining in. On the valuation side, right, and you've kind of already answered that to a certain extent when you spoke about Trent and Titan, but I'm talking about the wider space as well. If we're talking about the Q3, as you've already pointed out, there are a few pockets where there were beats, but largely you are seeing question marks on the volumes, you are seeing question marks on the margins. Anticipating that will not materially change, at least heading into the next first quarter of next year, and you anticipate maybe second half a change, how does that affect the earnings picture and the multiples that you have traditionally given? We're not going to see that rapid growth that we were seeing in the past. So do you have to adjust your expectations on the earnings front and be okay with higher valuations? How do you see it?
Question. If I see staples, clearly worst is behind. Last 4 quarters, if you see, most companies have seen negative pricing. Now it has turned neutral for most companies. And from Q4, which is essentially first quarter of the calendar year, you will see that pricing growth for most companies in FMCG will be 2-3%. Now this is very important because that helps in operating leverage. Second is because of the union budget, the tax exemptions are there for all the salaried, which is a very big component, right? We are talking about 1 lakh crore for almost 30% of the taxpayers. There is no taxes, and for the rest of the people also, there's a huge tax benefit. So I will say urban slowdown, which is the key issue, that also should start recovering after some time. Like it doesn't improve from day one. I think the tax exemption will benefit all forms of consumption. It is not that only FMCG will see or only discretionary will see. Ultimately, I think both can see benefit, and it depends upon customer to customer. From an inflation perspective, if you see, crude oil is the main raw material for FMCG. It is almost at a 1-year low, just 3-4% away from 1-year low. You have to build in the rupee depreciation that partly makes it higher. But still, if you see, crude is going to be benign. Today, Trump has said that he will drive the crude oil prices lower. I think that's the main raw material for most FMCG companies. Coming to food companies, palm oil shot up 30-40% within 3 months, and it's around $1,200 currently. But if you see, in the past, we have seen palm oil at $1,800 also, and FMCG companies have managed margins. So it is more a case of volatility rather than the high margins. Rural demand will continue to recover. So my sense is HUL, Britannia, Dabur, all these companies, the valuation comfort is high. So I will not expect them to derate further. And last point will be, if you see this year, most strategists are expecting a overall challenging year in terms of stock market, because GDP slowdown is there in India and globally also. So in that scenario, what we see is generally defensives do come back, and FMCG, as I said, a lot of positives now. yes, the valuation comfort is also there. So I would expect that further derating is very unlikely in the FMCG. And in terms of Trent and Titan, valuation has corrected, but still it is not very, very comfortable. But from a 1 year or 6 months perspective, even Trent can do quite well because the growth rate still, I think 30% plus is possible for Trent.
Okay. Avnish, I'm sure, so you've already spoken about the companies that you like, but I want to push you a little bit to give us, if you anticipate in the overall picture, you've spoken about, of course, jewelry, you've spoken about fast fashion, but in the overall FMCG space, in your opinion, the most key opportunities, if you were to name 3, in your estimation, based on earnings trajectory and based on tailwinds coming together, which are the 3 ones that you would focus on most?
Yeah, so it's a tough question because there are too many moving parts there. I'll take first where the earnings growth in the near term, medium term is strong. Those will be the liquor stocks. So United Spirits, United Breweries, we are positive on both. One key reason is Andhra was almost zero for them. It will become 4 to 5% of the overall India business. And we have also seen that now there is a talk of the FTA, for example, raw material again, the glass cost is indirectly linked to crude oil prices. So if crude is soft, we don't see any problem in terms of the glass cost also. So that's on the high visibility in terms of numbers, next quarter, next 2 quarters. The marriage demand is also going to help in terms of the liquor demand. But valuation comfort is missing there. So that's the important thing, that you have to buy those on a bad day. But the earnings momentum will be with strong double digits in terms of revenue growth, EBITDA growth for both the companies. Now coming to stocks which have corrected a lot, worse themes behind, but the recovery will be gradual. I think HUL, Britannia, etc. look very good there. So I will name liquor stocks, HUL and Britannia as 3 names. But frankly speaking, because of the rural recovery and the union budget, I think all consumption stocks will see benefits. Some will see first, some will see later. But it's a large number, 1 lakh crore kind of a benefit government is giving. I think it will benefit all companies with some lag. Rural demand clearly is recovering. So these 3 names I like to shortlist.
Okay. Okay, Avnish, we'll leave it at that. Thanks so much for taking the time out and being with us. Really, really appreciate your time. You know, and consumption is the thick, buzzing word, and therefore interesting to have that conversation going today with Avnish to try and figure out where to invest from a consumption perspective. Now, it's not just consumption today, by the way. Airtel is in the thick of things. Mahindra will be in the thick of things. Let's start with Airtel first. It's hit the right note. 2-3 numbers looked okay, and of course. The question really is, what's next for Airtel? And then, of course, what is upcoming for Mahindra & Mahindra, as I said. I'll start off with Rucha, you first. Right notes for Airtel?
Definitely, Neeraj. So one key factor is the ARPU, that is average revenue per user. Now the company had targeted 300 rupees of ARPU by end of FY27 and start of FY28, and here it is bagged already 245 rupees of ARPU in the 3rd quarter. So even brokerages are believing that they are in clear state of achieving the 300 rupees average revenue per user. Now also about the numbers, well, India's mobile services business is the one which is important for them. Revenue up about 6%. EBITDA margin also came in at about 9%, higher than expectations. Subscriber were at 357 million versus 351 million in last quarter. So strong base of subscribers is also happening for them. Capital expenditure around 4,300 versus about 4,350 crore rupees versus around 4,000 crore last quarter. So capital expenditure is also not that much, and hence these are supporting the earnings. Now one key thing to note here is that the revenue numbers, margin numbers, etc. cannot be compared on a QOQ or on a YOY basis. This is because Indus Towers was previously an associate of the company and now is an subsidiary. So that is why I'm not going into numbers. But all in all, strong ARPU with subscriber numbers and even higher market share based on the TREI latest data all supports Airtel, and that is why it's up about 5% in today's trade.
Yeah, no doubt. And the ARPU number looks particularly strong, highest in the industry, of course, and certainly something to watch going forward as well. Very strong. They're up about 4.7%. But the other stock that was doing well at the start, let's pull up Mahindra & Mahindra. The numbers are not yet out. The stock is up about 0.8% because it's expected to be a very strong Q3 for this company, firing on all cylinders. The tractor segment is doing well, and so is the automotive segment. And remember, the company is going to be launching its EVs very soon, on the 14th, in fact, of February. Puneet has been tracking all of that very closely. Puneet, the numbers look good, right?
Well, definitely, Alex, the passenger cars or the four-wheeler segment has done very well. The sales have grown 19% in the Q3, so between October and December, and that is translating very strongly in numbers. The tractor sales have grown by roughly 12 to 13% in a time where something like an Escorts cohort has actually fallen in terms of volumes in Q3. So it's a very strong number in terms of sales, and that's translating into the financials as well. So revenue is expected to rise to 22% to come in at 30,000 crores just for the standalone entity as well. And it's a big, strong number. EBITDA is expected to rise 37%. This will increase the overall margins to roughly about 14.4%, up 160 basis points versus 12.8% in the same time last year. Profits is expected to rise another 20% at 2,920 crores. Now, a lot of auto companies, and there is variable numbers like inventory and deferred tax is something, so that will be a slight one-off. But apart from that, on the business fundamental side, it's very positive. As you rightly said, 14 Feb is the launch of the electric vehicle. You can go and start booking, and the company has also recently launched the whole the 9 variants, the timeline essentially. So the top variants of both models, BE6 as well as the XCV 9e, will come in mid of March of 2025. So it will have the full FY26 for the top variant, while the other ones will start from June all the way till August. But it will still get roughly 2 full quarters and a half quarters, also roughly 2.5 quarters of FY26 for all the electric vehicle numbers and sales as well. And Nuvama is expecting roughly 48,000 vehicles to be sold for the electric vehicle itself in the next year. So I think commentary will be something which will be key. They have a media briefing scheduled at 2:30, so we'll get you all the live updates, but it's expected to be a very strong quarter for M&M yet again, continuing the momentum over the last 6 to 7 quarters into the 8th quarter as well.
Much, Puneet, for getting us those details. Of course, if past performance is anything to go by or past experience, then it's likely that the pre-bookings for the electric vehicles will shut very quickly, because that really is a strategy that Mahindra has employed. They've created the buzz. I remember when XUV 500 was launched way back in 2011 was the first time they did this. 10,000 bookings, they shut it, and it shut for the next few weeks, and everybody is like, what is this new car? Why is it sold out? And that creates a lot of buzz as well. Incidentally, they've been ramping up production over the last several quarters, and they've closed up the delivery times as well, and that also reflecting in the kind of numbers that you're seeing in terms of production and wholesale sales, which, by the way, is what is reported to the exchanges every month. So certainly a lot of talking points. I would be keen on finding out what the inventory levels are and how quickly the deliveries are taking place in their key automotive SUVs that are doing particularly well at this stage. We've also got Auto Pharma that we've lined up for you, or rather we've spoken about this morning. Neeraj pointed out at the start, it was something that the street was watching closely. The con calls took place at 8:30, and the numbers broadly were good. You had a revenue beat, but you had the margin and the net profit which missed estimates. Of course, there's a lot more in the way of details that will come through once Varsha joins in and tells you about that. In fact, she's right here. Varsha, what stood out to you in the numbers? Why was there a miss on the margins front?
Well, thank you, Alex. If you see, talking about the numbers, there was a revenue beat, while margin and net profit were kind of in line, slightly missed, I would say. Let's talk about the revenue growth. If you see their international business, that is US business, degrew. It was down 2.3% now because of the lower Revlimid sales. But the EBITDA margin impact that you are seeing is due to higher employee cost and higher R&D expenses. And EBITDA margin before R&D was at around 26%. So yeah, because of the higher R&D cost, we are seeing this EBITDA miss, and also because of the higher employee cost that the company had already highlighted. If I want to talk about the con call details for the company, for Aurobindo, so overall it was a good con call. They are actually gearing up when it comes to GLP or the obesity drugs. They have maintained their EBITDA margin guidance of 21 to 22%, and they are when it comes to their biosimilar segment, they're gearing up for that as well. Biosimilar will have a good revenue impact in FY 27 and 28. They have got a lot of products which are under clinical trials, which will help company to grow. But overall, if I were to talk about the Aurobindo's con call, yeah, it was a good con call, and I think the stock is up like 2%. But on the earnings side, good revenue, margins and profits were in line, slightly amiss. Yeah.
Okay. Thanks so much, Varsha, for getting us those details. Now, of course, a lot of attention at this juncture is going towards the RBI monetary policy. You will hear in a very short while from the new governor of the Reserve Bank of India, Sanjay Malhotra, and there's widely expected to be a rate cut announced. In fact, most of the economists that were polled by agencies have actually suggested that there will in fact be a cut. So at this point, you have a little bit of caution that is playing out in the equity markets, and that is visible in the banking pack as well. But a few names are reacting very sharply to results, and we've spoken about a few of these as well. One of them is Bikaji Foods. Let's pull up the stock price and see where it currently is. Double-digit decline today, and that's because it was a little bit of a painful quarter, the third quarter for this company. Let me take you through the headline numbers. We will be joined by the management very shortly. The revenue is up about 14.5%. The EBITDA is down about 26% at this juncture, and margins have come in at 7.8% compared with 12%. So substantial erosion, Tamanna, in the margins.
Yeah, we're speaking with Rishabh Jain right now, the CFO of Bikaji Foods, and let's just get a sense of what's really happened in this quarter. Mr. Jain, thank you so much for your time with us here on NDTV Profit. Let's just start understanding why we have seen such low volume growth in quarter which has festive season.
So normally, thank you very much for joining this. So volume growth was close to 3%, and effectively last year we given some promo offer 10% extra. So if we include this, so our overall volume growth in is close to 80% in this quarter. So and value growth is close to 12%. Despite the challenging environment in urban as well as rural, so our company delivered a good performance at 12% value growth.
One sec, let me come back to that question. What has been the reason for low volume growth?
So basically, we've done some price rise in last two quarters. Number one, number two, in last year quarter three, there was some promo offer going on, which were given to consumers when there was in quarter three of FY 23-24. And this year we have removed that promo offer of 10% extra. So volume, if we see a pack growth, overall packet growth, there is good growth of close to 8%.
No, so this price cut which you gave of 10% last quarter, and then you took off that promotional price, where you are right now is your standard price. So volumes can expect to be subdued in that sense, Mr. Jain, isn't it?
Yeah, so volume was close. That's why volume was close to 3% and value is close to 12% because.
नहीं, मेरा ये सवाल है तो कंटिन्यू होगा ना फिर अगर आपका प्राइस चेंज नहीं हो रहा है then volume growth suppression will continue.
Per kg price has increased. Like last year we given in the same packet we given 440 gram, and this year we given 400 gram. We have removed a 10% promo offer. So accordingly, the value growth is higher and volume growth is lower. In this quarter.
Okay, and do you expect volume growth to come back?
Yeah, of course. So this quarter and coming quarters, we again see a volume growth of close to, target is to have close to 10 to 12% volume growth.
Basis what? How do you expect volume growth to go from 3% to 12%?
So ethnic snacks is again on track. Ethnic snacks is grown at 10% last quarter. This quarter and in coming 2-3 quarters also target is to grow this at 13 to 15%. Ethnic snacks, and which will drive growth of volume.
Okay, can we also understand to what extent are you going to have price hikes and grammage reduction? Because your input costs are continuing to grow, right?
So of course, the input cost mainly edible oil, which has grown in last quarter, which has affected our gross margin. We see a gross margin is affected by close to 5%.
Yeah.
And but yeah, in last quarter in December onwards, we're seeing good crop coming in. Raw material is supporting us. In this quarter also, raw material pricing is again softened. So we see again margin coming back in this quarter and coming 2-3 quarters.
No, but let me come back to my specific question. To what extent have you taken a price hike this quarter? Will you take further price hikes?
So in last quarter, we're taking close to 1.5% price hike in last quarter. And in this quarter also, we are evaluating and we'll take 1.5% price hike again.
So you will be taking another 1.5% price hike this quarter. And will you be reducing grammage?
No. So we done all the thing in end of last quarter. So only price hike is pending. Rest all has been done.
So then my question to you, Mr. Jain, basis of what you've said, if you take another price hike, will you not see volume growth hit even further?
We don't see. We see again this growth in January was good, and again we see a good growth in January in this quarter also. So we see again coming at 7-8% volume growth. That's our target.
Okay, so you're saying by in Q4 your volume growth will be back to 7-8%, but so far you've been seeing double-digit volume growth previously. How long before you get back to double-digit volume growth?
Next year, from first quarter.
From first quarter.
Yeah.
So, I know I'm repeating myself, Mr. Jain, but I must ask again because I've not got a clear answer, to be honest. How are you going to go from 3% volume growth in Q3 to double-digit volume growth by Q1 of the next financial year? What is going to change in 2 quarters? At a time when you're telling me that you're going to increase prices further.
Yeah, so like this quarter also we are seeing 7-8% volume growth. We are working on this, and from next year our target is to at least grow 14-15% value growth. That's what we're targeting.
Okay, all right. Let me get a sense of what your international market outlook is. That has done well this quarter. You've seen a 32% jump in it. How are you pushing at that end?
So basically, overall international market, be it US, be it Australia, doing well. And being Diwali season, there was big frozen segment which is doing well in export market and doing well. So that's how we see good growth in export markets.
Okay. So international markets you expect to do well. I want to ask you, Mr. Jain, that we talked about the impact of the budget, tax prices, tax rates have been cut for those under the new tax regime. Everyone's expecting a consumption boost. Do you think that there will be a consumption boost?
Yeah, we also see that it's good for middle class income, and we see good consumption boost for middle class, and we see again FMCG coming back to track in next year.
Thank you so much, Mr. Jain. So that's the management of BKG saying that they expect volume growth to go from 3% this quarter to double digits in Q1 of the next financial year. They're also expecting an improvement of 7 to 8% in volume growth in the next quarter, that's Q4. But honestly, at least I didn't get clarity on how exactly that would happen. The answer I got is we are working on it. But you listen to that interview. Tell us what you think. We'll take a very short break. The big event just in a couple of minutes. Policy on the other side. We're waiting for the governor's speech. Stay tuned.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, बिजनेस नहीं है इसमें। This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for, President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है शाहरुख खान.
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप मिक्स्ड मिलेट्स डालते हैं.
आपको ट्रम्प साहब को खिचड़ी खिलानी है?
हाँ, तो खिचड़ी खाना नहीं है?
What is the one vegetable you will never eat?
मैंने मेथी खानी बंद कर दिया है.
आप करेला, बैंगन as
I love करेलास.
First of all, they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
All right, the big event, and we're counting down for the monetary policy. We're waiting for Sanjay Malhotra, the RBI governor, to deliver his first policy statement. So that countdown begins. Let's just take you through why this policy is so crucial this time round. Like I said, it is the first policy from the new governor, Sanjay Malhotra, and the RBI has not cut rates in nearly 5 years. This is expected to be the first rate cut we see this time round in nearly 5 years. A 25 basis point rate cut is what is being priced in and expected by economists, brokerage firms, and of course, the street. This becomes crucial. Some might argue not nearly enough. This becomes crucial at a time of a slowing economy. Remember, the GDP has come down consistently for the last 3 quarters for India, and the last quarter GDP was the lowest in 2 years, which is why this tonic boost of a rate cut is so crucial. The government, if you saw in the budget from the government side, the focus on fiscal consolidation is razor sharp. They have in fact lowered, not just met, but even lowered their fiscal deficit targets for this year and for the next. When the government is not going to come in and spend, how do you boost an economy? That's when the RBI comes in. If rates are cut, if liquidity is pushed, one could hope for a boost in the economy and in growth. That's what equity markets are watching out for this morning. Rate cut and liquidity measures from the RBI also become very, very important if a tariff war breaks out. Remember, right now, between US and China, tariffs have come into place and increased. We don't know how much it will spread. At that point, the Indian economy needs to be bolstered with enough liquidity. Core inflation has also shown some signs of deceleration, which means there could be the right time for a rate cut. In terms of the impact that a rate cut could have. All right, there we have the governor. Let's go.
The Monetary Policy Committee met on 5th, 6th yesterday, 7th today of this month, You are all aware that the governor's statement after the MPC meeting contains the resolution of the MPC with regard to the policy rate and stance. It also contains announcements and measures which have a bearing on the monetary and regulatory policies. The Monetary Policy Committee resolution is, of course, of interest to a large number of people from various walks of life. It impacts the lives of virtually all citizens of the country. The resolution also provides the rationale and the thought process of the MPC, and therefore is of relevance to businesses, economists, academicians, and the finance world. Apart from these MPC-related announcements, the governor's statement has become an important medium for the Reserve Bank to highlight its priorities on which it would like its regulated entities to focus their energies on. It is an opportunity to point out areas of concern and challenges for the stakeholders to address their attention to. It is an occasion for the Reserve Bank to articulate its views on critical areas of interest. I will continue with this practice of a detailed statement after each MPC committee meeting. Now, before I come to the resolution of the MPC, kindly allow me a moment to reflect on the experience of the flexible inflation targeting framework. You are all aware that this inflation framework was put in place in the year 2016 and it was reviewed in the year 2021. You are all also aware that this is a monumental change in the monetary policy history of our country. And so I thought it fit that I reflect on the experience of the flexible inflation targeting framework. Well, I believe that it has served the Indian economy very well over these years, including the very challenging period since the pandemic. The average inflation has been lower post the introduction of this framework. Moreover, CPI has mostly stayed aligned with the target given under this framework, barring a few occasions of breaching the upper tolerance band since its inception. We in the Reserve Bank and the Monetary Policy Committee will continue to improve the macroeconomic outcomes in the best interest of the economy, using the flexibility which is embedded in the framework, while responding to the evolving growth inflation dynamics. Moreover, we will strive to further refine the building blocks of this framework by making advances in the use of new data, improving nowcasting and forecasting of key macroeconomic variables. We forecast, you are aware, growth, inflation, etc., because this is actually a forward-looking policy. And so we'll continue to do that and develop more robust models. On the regulatory front, I would like to mention, and especially there has been a lot of media attention with regard to some of the proposed regulatory changes pertaining to liquidity coverage ratio, expected credit loss framework for provisioning by banks, the prudential norms governing projects under implementation. We will continue to strengthen, rationalize, and refine the prudential and conduct-related framework. I think this is very important in the overall interest of our economy. The interest of the economy demands financial stability and consumer protection. Our mandate in the RBI is to enhance both of them. At the same time, I would like to emphasize that the economic interest also warrants increasing efficiency in the economy, and this too is our duty. We recognize that just like there are no free lunches, regulation to enhance stability and consumer protection too is not devoid of costs. There are trade-offs between stability and efficiency. we will keep this trade-off in mind while formulating each and every regulation. It will be our attempt to strike the right balance, keeping in view the benefits and costs of regulation. I also want to reassure all stakeholders that we will continue with the consultative process which the RBI has been doing over the years in this regulation making process. The suggestions of the stakeholders are very valuable, and we will continue to give serious consideration to them before taking any major decision. We will also ensure that the implementation of such regulations is smooth. We will give sufficient time for transition, and where regulations have major implications, the implementation will be done in a phased manner. Coming to the global economy, the global economic backdrop remains challenging. The global economy is growing below the historical average, even though high-frequency indicators suggest resilience, along with continued expansion in trade. Progress on global disinflation is stalling, hindered by services price inflation. With receding expectations on the size and pace of rate cuts in the US dollar has strengthened, bond yields have hardened, emerging market economies have witnessed large capital outflows, leading to sharp depreciation of their currencies and tightening of financial conditions. Divergent trajectories of monetary policy across advanced economies, lingering geopolitical tensions, and elevated trade and policy uncertainties have exacerbated financial market volatility. Such an uncertain global environment has posed difficult policy trade-offs for emerging market economies. The Indian economy, though continuing to remain strong and resilient, also did not remain immune to these global headwinds, with the Indian rupee coming under depreciation pressure, as you would have noticed in the recent months. At the Reserve Bank, I would like to assure all of you we have been employing all tools at our disposal to face the multi-pronged challenges. With this backdrop, let me now come to the Monetary Policy Committee resolution. As I mentioned, we met these last 3 days, concluding today. And after a detailed assessment of the evolving macroeconomic and financial developments and the economic outlook, as I mentioned, we are forward-looking, the MPC decided unanimously to reduce the policy rate by 25 basis points from 6.5% to 6.25%. I repeat, the MPC unanimously decided to reduce the policy rate by 25 basis points from 6.5% to 6.25%. Consequently, the Standing Deposit Facility, SDF, the SDF rate shall be at 6.0%, and the marginal standing facility rate, also called the MCF rate, and the bank rate shall be 6.5%. The MPC also decided unanimously again to continue with the neutral stance and remain unambiguously focused on a durable alignment of inflation with the target while supporting growth. I shall now state the rationale for the decision in brief. The MPC noted that inflation has declined, supported by favorable outlook on food and continuing transmission of past monetary policy action. It is expected to further moderate in 2025-26, gradually aligning with the target. The MPC also noted that though growth is expected to recover from the low of Q2 of 2024-25 this year, it is much below that of last year. Last year, you are all aware, it was 8.2%. This growth inflation dynamics opens up policy space for the MPC to support growth while remaining focused on aligning inflation with the target. And accordingly, the MPC decided to reduce the policy rate, by 25 basis points to 6.25%. At the same time, the MPC felt that excessive volatility in global financial markets and continued uncertainties about global trade policies, coupled with adverse weather events, pose risks to the growth and inflation outlook. This calls for the MPC to remain watchful. Accordingly, it decided to continue with a neutral stance. This will provide MPC with the flexibility to respond to evolving macroeconomic environment. With this now, I come to the assessment of growth and inflation. First of all, growth. As per the first advanced estimates, real GDP growth for the current year is estimated at 6.4%. The numbers were released by MOSPI recently. This is a softer expansion after a robust 8.2% growth last year. Going forward, economic activity is expected to improve in the coming year. Agricultural activity remains upbeat on the back of healthy reservoir levels and bright Rabi prospects. Manufacturing activity is expected to recover gradually in the second half of this year and beyond. Early corporate results for Q3, and we have more than 50% of the results now as we speak. It indicates a mild recovery in the manufacturing sector. Mining and electricity are rebounding from monsoon-related disruptions in Q2. Business expectations remain upbeat as evident from the PMI Manufacturing Future Output Index. Services sector activity continues to be resilient. PMI services, however, declined from its recent peak. On the demand side, rural demand continues to be on an uptrend, while urban consumption remains subdued, with high-frequency indicators providing mixed signals. And we are aware we got the Nielsen survey report also just yesterday. Going forward, improving employment conditions, tax relief in the union budget, moderating inflation, together with healthy agricultural activity bode well for household consumption. Government consumption expenditure is expected to remain modest. Higher capacity utilization levels, robust business expectations, and government policy support augur well for growth in fixed investment. Continued buoyancy in services export will support growth. Global headwinds, however, continue to impact uncertainty to the outlook and pose downward risks. Taking all these factors into consideration, the RBI has estimated that real GDP growth for the next year to be at about 6.7%, with Q1 at 6.7%, Q2 at 7%, Q3 at 6.5%, and Q4 too at 6.5%. The risks are evenly balanced. Coming now to inflation, headline inflation after moving above the upper tolerance band in October has since registered a sequential moderation in November and December, standing at 5.2% now. Going ahead, food inflation pressures, absent any supply side shocks, should see a significant softening due to good Kharif production, winter easing as we witness every year in the vegetable prices, and a favorable Rabi crop prospect. Core inflation is expected to rise but remain moderate. Rising uncertainty in global financial markets coupled with continuing volatility in energy prices and adverse weather events, presents upside risks to the inflation trajectory. Taking all these factors into consideration, CPI inflation for the current financial year is projected at 4.8%, with Q4, the current quarter, at 4.4%. Assuming a normal monsoon, CPI inflation for the financial year 2025-26 next year is projected at 4.2%, with Q1 at 4.5%, Q2 at 4%, Q3 at 3.8%, and Q4 at 4.2%. The risks are evenly balanced. I will now come to the external sector. The India's current account deficit moderated from 1.3% of GDP in Q2 of last year to 1.2% in Q2 of this year, 24-25. According to the World Bank, India, with an estimated inflow of $129.1 billion US, continues to remain the largest recipient of remittances globally last calendar year 2024. The current account deficit for this year is expected to remain well within the sustainable level. As on 31st January this year, I may inform you, India's foreign exchange reserves stood at 630 plus billion US dollars. This provides us an import cover of more than 10 months. Overall, India's external sector remains resilient as key indicators stay robust. I would like to mention over here, and especially because there has been commentary in the media about the Reserve Bank's exchange policy. Well, the Reserve Bank's exchange rate policy over the years has remained very, very consistent. Our stated objective is to maintain orderliness and stability without compromising market efficiency. The Reserve Bank believes in the market efficiency of the markets that we have in India for Forex. Accordingly, our interventions in the Forex market focus on smoothing excessive and disruptive volatility. It does not target any specific exchange rate level or band. The exchange rate of the Indian rupee is determined by market forces, and we will continue with this policy. Coming now to liquidity and financial market conditions, I may state that after remaining in surplus from July to November 2024, system liquidity as measured by the average net position under the liquidity adjustment facility did turn into a deficit during December 2024 and January 2025. This drainage of liquidity is mainly attributed to advanced tax payments in December 2024. You are aware there are quarterly advanced tax payments to be made, December being that particular month. For the advanced tax payments for Q3, that did have an impact. Capital outflows, again, one has witnessed some capital outflows because of various reasons. Forex operations, and a significant pickup in currency in circulation as we witness every year in January. It has been, however, I would like to mention over here that we have observed that some banks are reluctant to on-lend in the uncollateralized call money market. They are passively parking funds with the Reserve Bank. I take this opportunity to all the banks to urge them to actively trade amongst themselves in this uncollateralized call money market, so as to make it deeper and vibrant for better signal extraction from the weighted average call money rate. The Reserve Bank is committed. I want to assure everyone that the Reserve Bank is committed to provide sufficient system liquidity. We have taken a number of steps in this regard, and we will continue to monitor the evolving liquidity and financial market conditions and proactively take appropriate measures. I repeat, proactively take appropriate measures to ensure orderly liquidity conditions as may be required for the system. And when I say liquidity, it means not only transit, overnight liquidity, but also durable liquidity to meet the requirements of the system. I now come to financial stability. The system level financial parameters for the scheduled commercial banks continue to be healthy. The credit deposit ratio for the banking system at the end of January 2025 was at 80.8%, broadly similar to that on 30th September 2024. Bank liquidity buffers are sufficient. Though the net interest margin moderated, return on assets and return on equity are robust. The system level parameters for NBFCs too are very healthy. I also take this opportunity today to mention that the Reserve Bank has been observing Financial Literacy Week annually since 2016. This is with the purpose to enhance financial education in our country. Last year too, we did this campaign. This campaign was focused last year on empowering youth adults. This year, recognizing the critical and multifaceted role of women in society, this campaign will emphasize on women's role in financial decision making and household budgeting. I sincerely urge all banks to actively participate in this campaign on the theme Financial Literacy, Women's Prosperity. It starts from 24th of this month. Now, before I conclude, I shall be announcing some additional measures. Necessary directions and circulars for these shall be issued separately. First of all, on digital security, the rapid digitalization of financial services has brought convenience to all of us, at the same time efficiency, but it has also increased exposure to cyber threats and digital risks, which are again getting sophisticated day by day. The surge in digital frauds is a matter of concern. It warrants action by all stakeholders. The Reserve Bank has been taking various measures to enhance digital security in the banking and payments system. Introduction of additional factor of authentication for digital payments is one such measure. It is now proposed to extend this to online international digital payments made to offshore merchants who are enabled for such authentication. Second, the Reserve Bank shall implement the bank.in exclusive internet domain for Indian banks. Registration for this domain name will commence from April this year. This will help avoid banking frauds. This will be followed by the fin.in domain for the whole of the financial sector. The banks and NBFCs, I would urge them to also continuously improve preventive and detective controls to mitigate cyber risks. They must develop robust incident response and recovery mechanisms, reinforced through periodic testing for operational resilience. Third measure that I am announcing today, over the past few years, we have expanded the suite of interest rate derivative products available to market participants to manage their interest rate risks. We shall now, to this suite, include forward contracts in government securities. This would facilitate long-term investors, such as insurance funds, to manage their interest rate risk across interest rate cycles. It will also enable efficient pricing of derivatives that use government securities as underlying instruments. Fourth, to enhance access of retail investors to government securities. The Reserve Bank has taken a number of steps earlier. There's another step, that I am announcing today, and this pertains to expanding the access of NDS Home, our platform for trading in the secondary market transactions for government securities, to non-bank brokers who are registered with SEBI. A number of them are registered with SEBI. They will also get an opportunity now to participate and trade through the NDS Home, the electronic trading platform of RBI for government securities. Fifth, in view of the various developments in financial markets and market infrastructure over the past few years, we shall be setting up a working group with representation from various stakeholders to undertake a comprehensive review of trading and settlement timing of markets regulated by the Reserve Bank. There are some 5 such markets which have different timings. The group shall submit its report by 30th April this year. To conclude, considering the existing growth inflation dynamics, the MPC, as I mentioned earlier, while continuing with the neutral stance, felt that a less restrictive monetary policy is more appropriate at this current juncture. The MPC will take a decision in each of its future meetings based on a fresh assessment of the macroeconomic outlook. We are committed to conduct monetary policy and take such measures as appropriate, which are timely, carefully calibrated, and clearly communicated to facilitate conducive macroeconomic conditions that reinforce price stability, sustained economic growth, and financial stability. Thank you, Namaskar, and Jai Hind.
All right, that was the first speech from Governor Malhotra after taking charge, and of course the 25 basis point rate cut came, of course a tweak in rates as expected, but Neeraj, no poem, no quote in the end, just to see what the new governor's style is. I would say very to the point, very business-like, very, very specific. Said Q3 numbers have come in, and business as usual, and means business.
So 25 unexpected lines. I thought, reasonably dovish, if you will, maybe not as much, but I think our guess will be better placed. But 25 basis points was the need of the Arthamana, so I think that's done. And let's see if there are any other non-policy measures taken in the run-up to March.
I would not call it dovish. I don't know, but we'll ask Katrina L. We'll ask Katrina L joining us, Director Economic Research, Moody's Analytics, and it's so great to have you on the show, Katrina, as we break down what the monetary policy is talking about. Neeraj and I, since this morning, have been debating on whether this will be dovish commentary or not, because the 25 basis point rate cut was largely expected. Would love to know your take on that and your first reactions.
Yes, I think it's a positive development that the RBI has finally decided to cut rates and deliver that 25 basis point reduction. I think what's clear is that, there's a really difficult balance that they've got at the moment. On the one hand, they do have, domestic demand, which does need that additional support. But on the other hand, they do have that really weak rupee that they're balancing as well. And it seems through today's decision that they are prioritizing strengthening and working towards improving domestic demand over the next couple of months. So in terms of forward guidance, I'm not sure at this point we can be really clear of whether this was a dovish or not, because let's remember that this decision was largely anticipated by markets. And I think that the RBI is treading really carefully about any forward guidance, just because there's a whole lot of uncertainty in the external environment, particularly around tariffs and how inflationary or not they will be, and also the potential implications of that weak rupee and how that's going to feed through to domestic inflation in India. So I think they're continuing to tread really carefully and will be guided by the data, in particular the inflation data and also the growth related data as well, to see how quickly they need to continue with this easing cycle.
Some calls to banks as well, by the way. So that was the interesting piece and watch out for. But Aditi Nair is here. Aditi, what did you make of the policy statement? 25 basis points on expected lines. Would you call this a dovish policy, a neutral policy with a rate cut? How would you classify it? And what stood out from the statement for you?
So I definitely won't call it dovish. He did mention upside risks to inflation. I think there was a very hopeful note which was struck in a sense, talking about resilience amidst global uncertainties, etc. But it was a very pragmatic policy, and I think overall very much in line with what we were expecting, that we'll get a rate cut without any change in stance. And even towards the end, the mention that we're going to look at the outlook every single time to decide what we're going to do. I think that's absolutely the right approach. In any case, this rate cut cycle is expected to be very shallow. We're not expecting more than one more rate cut. So there's very little point actually to change the stance to accommodative. So I think it's much better that we've retained it at neutral. And this gives all the flexibility to the MPC to decide policy after policy what looks best for the Indian economy. And a couple of more points, 4.2% CPI inflation for next year, that's in line with our own estimate. And what that's basically suggesting is that neither are the tax cuts expected to be very inflationary. And while, of course, the upside risks to inflation were mentioned, but again, similar to our own view, that the exchange rate depreciation will have a much bigger impact on the WPI and a smaller and more lagged and delayed impact on the CPI. So while upside risks were mentioned, the CPI inflation projection actually for FY26 has been mentioned at 4.2%, which is in line with our own extant projection as well.
Aditi, hi, Tamanna here. Just wondering on what you made of the GDP forecast and the inflation forecast. They've stuck to the inflation forecast. I think GDP second quarter has been tweaked down a little. Just your reading into where Governor Malhotra thinks growth will go.
So actually, the GDP growth forecast, I think, is a little bit on the higher side. We are at 6.5% each for FY25 and FY26. I suppose the MPC has just taken the NSO first advanced estimate of 6.4% instead of giving a new estimate now.
Aditi, sorry, Aditi, you will have to excuse me. So sorry, I just want you to complete your statement, but we have Mr. KK Mistry on the phone line, so I'll have to go to him for a minute and get his view first, and then we'll continue the conversation. Mr. Mistry, thanks for joining in and taking the time out. What did you make of this? Not dovish seems to be a consensus.
I think completely along expected lines. That given the global economic uncertainty, the trade wars going on, and all of that, the stance remains unchanged, and a 0.25% reduction in interest rates will help, hopefully help boost growth further. That coupled with the fact that existing home loan customers will get the benefit of the 25 basis points cut in rates, particularly, obviously customers who are linked to the repo rate, which is the bulk of the customers. So all in all, as expected, good policy. The stance continues unchanged, and I think we will now start seeing the growth pick up in the system.
Mr. Mistry, hi, Tamanna here. In terms of the outlook we saw from the governor, and I'm asking you this because the 25 basis point rate cut was widely expected, priced in by the market and everyone who watches this event very closely. But on the outlook of whether we will see another 25 or another 50 basis point this calendar year, what sense did you get from what Governor Malhotra was saying? And of course, his first speech was being watched very, very closely.
I think the governor said that growth is picking up in the system. He also said that the outlook on inflation is neutral. I don't think he seemed to be very worried about inflation. And if we had good monsoons next year, then I think you would see 2 more rate cuts of 25 bips each. If you don't see good monsoons, my expectation is about 25. So anything between 50 and 75 for the year would be my expectation, depending on data, depending on how things work out.
Are you in agreement with the growth outlook? Just before we came to you, sir, Aditi Nair was giving her view that she thinks that the growth outlook is a little on the optimistic side. Are you seeing yourself signs that there would be this kind of a recovery in growth?
I think there will be a recovery. I personally think, and I may be differing from the earlier view, I think you may see even a pickup in growth beyond the 6.7% that RBI talked about for next year. You could see 6.7 probably getting closer to 6.8, or if you're lucky, maybe a little more than that. Obviously, depending upon good monsoons and the macroeconomic environment in the rest of the world not getting completely beaten down.
Mistry, would you have, considering that March is around the corner and liquidity conditions, though RBI has done enough measures, but would you have hoped for some more measures around liquidity specifically to be announced, or can they be done beyond the policy as well?
We've seen that liquidity measures are always usually announced beyond the policy. The only liquidity measure really announced in the policy is a cut in the CRR rate. We saw a cut in the CRR rate in the last policy. And therefore, I don't think one would have expected a CRR cut this time. But you saw that a couple of weeks ago, not even a couple of weeks ago, about 10 days ago, RBI, through these OMO operations, has injected or will be injecting a lot of liquidity into the system. This quarter also important because this is the fourth quarter and you will see the largest installment of advance tax being paid in the current quarter.
Got it. Mr. Mistry, just one last question from mine. In the two instances that you spoke about your constructive opinion on growth, you mentioned domestic factors completely. Could global growth worries bring a question mark to even the RBI's estimate? Forget your assessment that it could be higher as well.
Look, I think globally we are living in a world of complete uncertainty. No one knows what's going to happen 3 months, 4 months from now. We've never seen this kind of global uncertainty any time in the near future.
Right.
So global factors will affect our growth all over the world. India will be least affected. I repeat, least affected compared to any other big country, simply because our domestic economy is very strong. And the measures taken in the budget in terms of leaving money in the hands of people will push consumption. If consumption picks up, local consumption picks up, then that itself will create need for more capacity, more products being produced, and therefore more investment. So whilst there will be an effect, I still think that despite the global environment, we should still be looking at a growth maybe marginally higher than what RBI has said. Unless there is a very major global catastrophe, which we can't predict, or oil prices shoot up beyond what we are expecting.
Just one last point, Mr. Mistry. Are you expecting a fair enough pass-through of this rate cut? Because that always becomes a question.
I would think so. I mean, the rates, the repo rate, most of the loans are now linked to repo rate, particularly the housing loans. So there it is absolutely automatic.
Okay. Thank you so much. KK Mistry there on his first view on the policy. Let me come back to Aditi Nair. And Aditi, sorry we had to interrupt you there because we just had that 2 minutes with Mr. Mistry. But do complete your point. And I think it's an important one to underscore why you think that the RBI is maybe being a little optimistic on the growth outlook.
So just to kind of go back a step, certainly we expect growth is going to rebound from the lows that we saw in Q2. There's no doubt about that. For FY25, the NSO has placed the advanced estimate at 6.4%, which the MPC has probably taken as a given right now. And that's what they normally do. Then they don't give a fresh estimate of their own for the current year once the advanced estimate is there. So on 6.4%, they've indicated a 6.7% growth for next year. Our house view at ICRA baseline view is 6.5% each for both these years. So that's why I'm saying they're a tad higher than where we are. And at 6.7%, they're actually quite close to the upper end of the eco survey's 6.3 to 6.8% range as well. Domestic demand is recovering. Rural is expected to be better, much steadier this year. Urban demand should also recover, particularly the unevenness that we saw at the middle and the bottom of the pyramid. That should recover post the budget based on both the tax cuts, which will help part of the urban economy, and all the other measures as well, which we think will also be supportive. But it will mainly be domestic demand and the government capex, which is going to drive growth. We hope private capex will come back stronger in FY26, but that really remains to be seen. Does it continue at the modest sort of pace that we're seeing right now, or does it amp up substantially, given the kind of global uncertainties that we have that are going to have an impact on merchandise exports? How soon will we really know what is the exact tariff implication on India vis-a-vis other countries? That's very important. Do we end up getting bucketed with the BRICS? Do we escape that? Do we have any tariffs imposed on Indian exports at all? Are they less or more or equal to other countries? There are too many unknowns. So we don't really expect merchandise exports to be a driver of growth. As of now, services exports are still doing very well. So that is something that will continue to be supportive.
Got it. Okay. Well, Katrina, Aditi, please stay on. We've got a battery of other guests joining in as well. And two people who got it absolutely right. Jaideep had spoken about this way back, that maybe some liquidity measures first and then a rate cut in February. It's come out. Jayesh Mehta 3 days ago joined us, spoke about the crossing fingers of a rate cut coming through, and that has come true. So both of you would be happy. Jayesh, I'll start with you. Is this coming exactly with what you anticipated, or would you have hoped for something more in the policy?
No, that's exactly as anticipated. And in fact, one more change, I would say, if you really look at the MPC policy, when we said flexible inflation targeting policy, that was supposed to be flexible. That doesn't mean that we have to go to 4. If your real rate is too high, even at 5%, if the real rate is too high and the growth is struggling, you have room to cut rate, and which is what they have done this time around. And that's why I actually look at it, there is more scope, because if you look at their, and one more thing he also said is forward looking, right? So if you look at their inflation projection for the next year, and if nothing changes in April policies, we can actually see, further rate cut because even at 6th quarter, and if you look at the projection of around 4.2, we are at 2%, almost 2% real rate, right? And therefore, there is enough room to cut that rate and no need to wait for 4% to come through.
Got it.
So that's a big challenge.
Yeah, well, it certainly is. Okay, so that's as Jayesh's take, and I'm sure, more questions for our panelists, but quickly getting a take from Vishwanath Nair, our banking editor, who's right there at the RBI headquarters. Wish you got the chance to read the whole statement as well. Quick takeaways.
Quick takeaway, the last bit that the RBI governor said right before he left the room was a less restrictive monetary policy was warranted. That's what the MPC felt. And while he said that for future policies, we will take a fresh look at data and then decide what we want to do in the upcoming policies. But this was a clear indication, according to me, that there is a likelihood of a sort of a dovish stance coming in from the Reserve Bank governor on future rate actions. Another important point, and this is something that I want to ask Jaideep Iyer at RBL Bank as well. He's pointing out specifically to banks, saying that you're parking too much money with the RBI passively, and that you should use that, participate in the call money market and on-lend it to other lenders. I want to ask Jaideep, is that in your view a significant problem at this point in time, and maybe some of the liquidity issues that the banking system is facing could be resolved partly through the system itself redistributing that liquidity?
Hi, morning everyone. Thanks, Vishwanath. I think honestly, I don't think call money is a big issue from a banking sector standpoint. I think generally we've seen very less demand in call money, because it is generally not being considered good for banks to borrow in call money, and therefore there is no demand, and therefore even the lending doesn't really happen. So at one point in time, several years back, the call money market was a fairly large market, and I think it's now fairly insignificant and irrelevant, because it's also associated with a little bit of let's say negative liquidity scenario at a specific bank level, and therefore banks have generally avoided taking access to call money markets in general.
Okay. Okay.
This is a big deal.
Yeah. Okay. We'll come back to Vishy for more on this. Alok Singh also joining in Treasury Head, CSB Bank. Mr. Singh, thank you so much for speaking with us. Just your first take on the policy and the outlook. Before the policy announcement, everyone was very sure about 25 basis points, and then there was a varied view on whether 50 to 75 this calendar year. Just wondering if you have rejigged your assessment for rate cuts as a total this calendar year after listening to the governor.
Yeah, good morning and thank you. So I believe my outlook on policy is that it was a very balanced view given the conditions prevailing, especially in the dollar rupee market. So dollar rupee, if you see, has depreciated by more than 3%, I think, in last couple of months, which is a significant move. And that is inflationary as well. So 25 was factored in, and I believe that the statements hinge towards the dovish, and we believe in the policy stance for the economy. We believe that the liquidity and the rates work hand in hand. You cannot. So RBI has already started addressing the liquidity conditions. You have seen the announcements in last couple of weeks, and they have given the cut now. But having said that, I still believe that going forward, the rates cut are embedded. They will come. But looking at US scenario, how the rate scenario is panning out, where it's believed that they will hold for some more time. And similarly, even the Bank of England spoke yesterday. So we will have to look at a global perspective as well. And looking at that, keeping the neutral stance, and then probably taking a better call in April would be more prudent. And I believe that at least 2 rate cuts are more there in the policy stance in next 1 year.
Okay, Katrina, coming on this, I mean, BOE sounding a bit dovish, Bank of Mexico sounding dovish. The government has given that 4.4% fiscal deficit target as well. Does it embolden the RBI to do more? Let's say a couple of rate cuts more. And where are you on the growth argument here? Mr. KK Mistry said that he believes that the RBI's number may be a bit conservative. Aditi disagrees, of course, and with her reasons. What is your reason? Or what is your assessment?
So our expectation is that we will see growth actually not pick up as optimistically as what the RBI is expecting. We're looking at about a 6.4% GDP growth rate. I think it's going to be like quite a difficult operating environment. We know the challenges about exports, but of course, exports aren't that key economic driver for India. It's more about what's happening domestically. And I think 125 basis point cut doesn't materially change the game at this point. I mean, sure, we do have a bit more fiscal support coming on board, particularly from April around those adjustments for middle income households. But I think it's still going to be a challenging environment as well. And I think one thing and one area that, we don't pay enough attention to as we should is that, labor supply overseas and that flow through to remittances and then that impact on private consumption. I mean, if we do see a material pullback in labor supply of overseas workers in the US, then that could actually flow through to a weaker consumption picture as well in India. And of course, consumption is such a critical driver of the economy. So I think that's a risk that is quite frankly, flying under the radar at this point that we need to pay really close attention to. And I think in terms of how much more the RBI is going to move, I don't think we're going to see as much movement as what we've seen from other central banks like the ECB, the Fed, the Bank of England. I think they're going to tread a lot more carefully because the one complicating factor for the RBI when it comes to easing policy that these other central banks don't have as much is around the currency. And because we do have such a weak rupee, that potential flow through to imported inflation is a concern. And I think one thing as well that we need to keep a close watch on is, energy prices are low at the moment, but if we do get a resurgence at the same time that the rupee is extremely weak, then that's going to be particularly troublesome for an economy like India. So I think we're not going to see much more cuts. I think it's going to be a shallow easing cycle this year, which really does limit the revival in domestic demand that we will see as a consequence of that.
I want to get Aditi's view on this. What next? Because even from a market's perspective, we're now looking at what is the quantum of rate cuts that can be expected. And I agree with you when you say that the governor was very clear in pointing out potential trouble on the horizon, whether it's geopolitical or otherwise. Are you still penciling in, or are you penciling in 2 more rate cuts? And what is the quantum you're seeing this year?
We're penciling in 1 more rate cut. Okay. That's what we were penciling in before today as well. Quite frankly, if we were to be looking at 2 more rate cuts, then I think they would have changed the stance to accommodative. I'm not sure they would have continued with a neutral stance if they were going to be considering 2 rate cuts going forward. And that's why I think sticking with a neutral stance makes sense in this situation where if you're only going to cut rates one more time, why would you have moved to accommodative? And I know I said it before, I'm going to say it again, the focus on the upside risk to inflation, I think that's another hint that they're not looking at too many rate cuts going ahead.
But Jayesh, come in, please. On that, the RBI unequivocally saying that we will take every quarter, assess the data, so on and so forth. If the monsoons are good, so and food inflation does get under control, does it open up the door, or are you also of the camp that it's probably just at best one more rate cut? Plus, couple that up, Jayesh, with what do you think is the bond yield trajectory for the near term? How do money markets see this policy and the upcoming belief about the policy?
So I think firstly answering the same as Aditi said, neutral means maybe one more rate cut. That's what the bond market thinks. Of course, I do have a slightly different view. In this uncertainty world, right, you can't give any directional stance on the policy, and that's why it's neutral. You want to be flexible within 15 days, even before next policy, if something happens, they want that flexibility. And that's why I would emphasize that neutral means something which is the global uncertainty. That's why it's a neutral stance and not on either way. Coming back to further rate cut trajectory, I do believe there is room to go, maybe more than one rate cut, maybe two rate cut. Assuming, see, as of today, we are looking at as of today, and even RBI is looking at as of today. That's why the neutral stance, because we don't know what happens in 15 days or next 30 days. So much of uncertainty in the world. But assuming their projection, which is there, nothing changes dramatically in next policy or next two policies, we will see rate cuts because if you really look at the growth projection has been reduced, inflation at 4.2 for next year gives almost 200 basis point real rate. Like, when your growth is lower, you can't have such a high real rate. Like there was a time we were focused on 1% real rate, and right now we are, last 1 year we have been at 2% real rate. So I think when the growth slows down, how to make sure the real rate also comes down. And that's where I see more room for them to cut, assuming that their inflation trajectory and their inflation projection pans out the way they have projected. Maybe 10, 15 basis point doesn't matter, but around that line, it should not be that 4.2 becomes like, in next policy, the projection becomes maybe 5% or 5.5%. That is a different situation. So looking at the current scenario, there is enough room for a rate cut further.
Mr. Mehta, I just wanted to get your take on the governor's comments on the currency. And he started by saying that there is a lot of commentary on the RBI's positioning on the currency. He goes and he took pains to say that we don't take any steps to intervene on the rupee vis-a-vis any other particular currency. What is your take on what you made of his comments on the currency and any cues from there on what the RBI's approach is going to be to a weakening rupee?
So I would say this is going back to the old RBI. There was some difference in the last couple of years, but it's the old RBI where currency, they were never targeting a rate, but it was more like targeting the volatility, right? If there's a large move, definitely they need to come in and intervene, and that's what they were doing. I think last 1 month, they've changed that situation, and even volatility is relative, right? Like, if the world has moved only by, say, I'm giving a very hypothetical number just to give an example. If the world has moved by 2% and if we move by 2%, that's fine. But if the world has moved by 0.2% and we are moving by 2%, that's excessive volatility. So that's how, as compared to the global currency movement, if we move in the same similar trajectory, they should be okay with that volatility. It's only when our currency has a dramatic difference as compared to the volatility of the world, they definitely intervene. So they are not targeting. Say earlier, the market was very sure there was this 84 buffer, then 84.50 break, 85.50 break. So there was this number. I never understood why that number thing, right? But there was always this number, 87, 87.50. So people were trying to do that. Now they are, beyond that, it's just compared to how the global currencies move, and then if that moves dramatically, we are okay to move dramatically. So that's the way I would look at it.
Yeah, well, maybe if the Chinese yuan is depreciating consistently, how can maybe the rupee not? But interesting point, Jayesh. Jaideep Iyer, we asked you a specific question around liquidity, but the overall budget, overall policy view, Jaideep, what do you make of the statements coming out? And do you reckon that, again, a view around whether it's 2 or 1 or none?
Honestly, Neeraj, more than I think future rate cuts, as we discussed earlier, I was at least happy that the liquidity measures came first and then we've had a rate cut. In a normal environment, I would have expected and wished for more liquidity measures, more durable liquidity measures before rate cuts, because everybody would know that this is the first time where we have an externally benchmarked loan book for banks, largely on repo. And we have seen the first down cycle in rates. This is the first time after the regime change of externally benchmarked rates. So it's and we've not seen deposit rates materially come down. So it's from a pure banking standpoint, we would really prefer easy liquidity and therefore deposit rates at least directionally coming down before there are multiple rate cuts. So right now, given the circumstances of a relatively challenging macroeconomic environment, dollar rupee issues, uncertain geopolitical environment, I think this is the best we could get. But in a more stable environment, my wish would have been higher. So that's one. The second interesting point that I noticed was that the governor did mention the cost of stability, the cost of regulations. And I think this is the first time, at least I would want to interpret this statement positively from a banking standpoint, that that the regulator does, the RBI does recognize that there are significant costs attached to high regulations which the banks have seen over the last few years, and maybe optimistically one could therefore expect some moderation in the pace at which regulations have come.
Okay. Thank you so much to all of you for joining us today on our wrap-up and our assessment of the policy. No harm done. I think that's one big takeaway. 25 basis point rate cut as expected. A careful and very nuanced commentary on the outlook from Governor Malhotra, and also sets the stage of what to expect, that this RBI, the Reserve Bank, will be completely open to all kind of headwinds and threats on the horizon, if any, quick to react as and when they need to, but nothing to be alarmed about right now.
Yep, that's the long and short of it. With that, it's a wrap on this coverage of the RBI Monetary Policy Committee decision. Of course, the presser comes in at 12, and you might want to tune in for that as well. But up next, we get some of your queries answered with regards to the markets, which are doing okay.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan, announced in 2021. The second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hi, thanks so much for joining in. You're watching NDTV Profit. This is Ask Profit. My name is Alex Matthew and with me is Mahima Vachrajani. And we've got lots to talk about because just a short while back you had the first presentation of the RBI monetary policy by the new governor, Mr. Malhotra. And it was along expected lines. There was a cut in the policy repo rate by 25 basis points. Most people had anticipated this. And let's see how the market has reacted. It's, I guess you can say that it was in the price and to a certain extent that has played out because the Nifty 50 is absolutely flat at this juncture. It wobbled a little bit, but it has recovered. And it's a very narrow range if you think about it from the start to finish. Remember, we closed at 23,603 yesterday, and it's more or less where we were yesterday as well. Let's talk about the broader markets, and you have the mid-cap index that's just about flat at this juncture and the small-cap index which is down about 0.5% or thereabouts at this point, or 0.33% or thereabouts. Let's talk about banks though, and the Nifty Bank is currently trading with cuts of just about 0.2% or thereabouts, and it's going to be interesting to watch how some of these names react over the course of today and of course in the coming days as the liquidity scenario is something that is developing. It's still in deficit, remember, and the RBI is going to take all of the measures that it expects it will need to in order to maintain durable liquidity, is what the Reserve Bank of India Governor Sanjay Malhotra had to say in his first address as Reserve Bank Governor. We're joined today by Sameer Dalal of Natvarlal and Sons Stockbrokers, as well as Kushal Gandhi, who's technical analyst at Stocksbox. Thank you so much, gentlemen, for taking the time as always. Sameer, you were probably anticipating this, as were a lot of other people. Do you have any specific banks that you're looking at that will immediately look to benefit from this rate cut? I know a lot of them have been going a little slow on the unsecured side, which is where the real credit growth has been over the last year. So what are you looking for in the banking space?
So, the banking space, the stocks that we've identified and we discussed on your channel don't change. So we continue to like the likes of HDFC Bank, IndusInd Bank, IDFC First Bank in the private side. And on the PSU side, Bank of Baroda, even though they didn't have the best of numbers, I mean, if you look at it, the pain points are over. We believe the growth opportunity will arise and they are working on that. And that valuation comparatively are quite reasonable, so that remains our topic. So that doesn't change anything. Yes, it was expected, I think, to a large extent that the rate cut would come. And government is already working on the liquidity. Before the rate cut, they already announced 150,000 crores of liquidity, which is slowly getting infused into the system. So as that continues to happen, hopefully the rate transmissions will happen. It's not going to happen immediately. But when the governor cuts, one thing everyone got to remember, that when the governor is indicating of a cut in the interest rates, he wants that transmission to eventually happen. So he will ensure that there's enough liquidity in the system. Does it change anything for the banking stocks right away? No, it doesn't. But yes, what we can hope is that the growth momentum, because lower interest rates heading down probably can drive some amount of growth momentum from companies who want to put in capex, thinking that, look, if interest rates are headed down, this is the time to start investing because growth will come back in a stronger way. So maybe from all those points of view, hopefully the growth picks up for the banking space as well.
Right, Sameer, just to add to that, IIFL Capital did come out with its first cut with respect to what impact this repo rate cut will bring on banks. Their analysis shows that NIMs will be impacted by 5 to 10 basis points, and they see relatively lower impact on the PSU banks, and they believe that impact of 25 basis points rate cut is already built in. So nothing much with respect to Alex, the stock performance is what IIFL Capital builds in. Let's move on to our first query for the day. Then we have this query is from Madan, who's from Hyderabad. He's holding Vatek Vabag 200 shares at 1550 a piece, and he's sitting at a loss of if you can pull up the number, there you go, 31,000, so 32,000 odd rupees, and he wants to know whether he should hold for the next 3 months to see some profits at least. Kushal, is that the right reading on the charts right now for Vatek Vabag?
Well, yes, a positive view on Wabak. I think the declines, they're showing some now minimal resilience. So I think that's a positive development. And over the last couple of trading sessions, you'll see, it's undergoing some nice accumulation phase. So the risk reward is also quite favoring, just in case he wants to average at the current market price. So I'm positive on the stock, hold it with a stop loss near 1292. And my target on the upside is 1683.
Okay, 1683 is a call on Vatek Vabag. Our first caller of the day, Asad, is calling us from Bengaluru. Hi, Asad. How can we help you today? Morning.
Yeah, hi, good morning. Yeah, actually I have this Amara Raja Batteries share for 1081. I have 50 shares. So basically want some insight on that, whether I need to hold, because results are on tomorrow. So I just wanted to check whether I need to hold or I need to exit.
What was the thesis when you bought it, Asad? Did you buy it for the long-term prospects?
Yeah, my insight is for long-term. The reason for buying is basically the PE has come down. I mean, comparatively, when compared to Excite batteries, and considering the EV battery future, right? So I thought maybe I'll go with it.
Okay. All right. I'll come to you, Sameer, on this one, on the valuations, and of course, awaiting the numbers that Asad is talking about. What do you make of this company?
We are positive on the entire battery space, and especially even on Amara Raja, right? We believe the entire EV space, and which is going to see traction, will see companies which are setting up these huge factories of lithium-ion batteries benefiting from that. Amara Raja is one of them. Yes, valuations are not at all compelling. They're trading at 20 times trailing earnings, which is not expensive. Growth in the near term may be a little subdued, given the fact that we've seen a bit of a slowdown, and not slowdown, but the growth has not been great for the automobile sector, right, in the current year. So growth for the battery segment also, we believe, will be a little subdued. So maybe this year we won't get, but once we see the pickup happening in the electric vehicle sales, and they have the battery up and running, which is going to take another year at least, I think. I'm not sure of the timeline exactly at this point, but it's going to take at least another year. So maybe in the future, you will see the earnings uptick coming quite strong. We have a buy recommendation on it, and one should hold on to it. I wouldn't worry if you're a long-term investor. One result doesn't change anything, whether it's up or down. If it corrects, I would say add on to it from a longer-term perspective.
There is, in fact, a sharp reaction in the bond yield. From what I can see, there is a 15 basis point increase from the previous close on the 10-year. What you're seeing on the screen is the 7.1 coupon 2034, and there is an increase. It's currently at 6.75 or thereabouts, so it's cooled off maybe a tad bit. And maybe my feed on my phone is a little delayed, but there is no doubt a sharp spike in the bond yield. Perhaps to a certain extent, pricing in what will happen in the rest of the year, and also certain measures that the governor has announced that could have a bearing on how yields function. Of course, there was widely expected to be this rate cut. Maybe the projection on what is anticipated in the next year based on the projection for inflation is something that the street is looking at. And I'm talking about Mint Street here, not Dalal Street. And so bear that in mind. We will try and get you a sense of why the bond yields have spiked as they did. Of course, the rupee has not moved too much from where it was before the policy, but certainly the bond yields are going to be something that you should watch out for. Generally, you would say that if during a quarter there is a spike in bond yields, it has a bearing on treasuries for the banks, because a lot of these banks have a significant amount of a hold to maturity bonds. So the actual impact is not very significant, but they have to have mark-to-market addressing of these changes in the yields. When the yields spike, you generally see a fall in the face value or the price of the bonds, and that has a bearing on treasury performance during a quarter. So certainly something to watch. We'll get you a view on how that is. For now, let's turn to SBI for an intraday trade. Of course, you saw the results earlier in the week. In fact, yesterday, right? We had SBI results yesterday.
Yes.
The stock is down about 1% or so. I'll come to you, Kushal, on the charts. It's an intraday view that is being sought. What would you do here?
Pessimistic view from an intraday point as well. I mean, the stock has been trading with below the shorter term moving averages, and they're acting as constant supply. So my sense is, even if you want to place an intraday bet, it has to be about 752 on a closing basis on a 15-minute chart. Until then, it's an avoid.
All right, so that's the view coming in on SBI with respect to the charts. GE Shipping is the next counter. Sunita from Hyderabad is holding 20 shares bought at 1160 a piece. She wants to know whether she should book losses or buy some more stocks to average out at the current levels. What's the outlook with respect to this stock from a longer term perspective, Samir, if you have a view on this one?
Unfortunately, GE Shipping is something we don't cover, so I'll toss it over to you.
Okay, Kushal, with respect to the charts, how does the charts fare for GE Shipping? Okay, I believe we have an audio issue with Kushal right now. Let's move on to the next query. Then LIC is the counter. Praveen has accumulated 200 shares at a price of 1010 for LIC. His question is whether he can accumulate more or wait for some time for correction at the present levels. What's the view with respect to this, Samir, then?
We've already seen quite a bit of correction, right? He's already down 20% from where he bought it. So I think it's time to add on. Look, we remain positive on the entire life insurance space, and LIC is the largest player in the space with greatest reach. They have a lot of value in their investments, which they will keep unlocking over a period of time. Profitability will grow as we believe the markets will keep expanding in India over the next many years. They will stand to benefit from all of that intrinsic value that they hold in all their investments. Plus, like I said, look, India is a very underpenetrated market. We've discussed this in the past. I think we are at about 4 or 5% in terms of value when it comes to life insurance, whereas internationally that goes up closer to 80-90% also. So the scope to grow is great, and given their reach and their brand value, I think they will be able to do that. They're coming up with the right products over a period. They keep coming up with different things. Of course, the government has taken away a little bit of the incentive of these ULIPs and all these investment themes. But as the dust on that settles, I think people will continue to make these investments, because at the end of the day, everyone's looking at, if I'm putting in X, Y, Z, what am I getting back? And LIC has some of the best products for that. So I think it will do well, and you can add on.
All right, add-on is the view coming in on LIC from Samir. We have our next caller, Pradeep from Kerala is calling in. Pradeep, a very good morning to you. How can we help you?
Hello.
Hi, Pradeep. Go ahead with your query, Pradeep. I can hear you. Okay.
Hello.
Yes, Pradeep, I can hear you. Go ahead with your query.
Hello.
Okay, I think there is some problem with his audio, but I believe he's holding NCC 2,000 shares bought at 309 a piece, and he's sitting on a loss of roughly 1.9 lakhs. Samir, your view on NCC, whether he should keep holding it and whether his losses will reverse, or should he exit and book the losses?
I think you can continue to hold on. Look, the entire infrastructure space in India is going to see a lot of momentum. NCC is doing the road projects, doing certain other construction activity projects, which they have a decent order book. They've, of course, the last quarter results, today the stock is down because the quarterly results were not the best in the sense that the growth was not that great. The profitability and margins took a bit of an impact. We believe all of that will reverse over time. Look, we've also had a year where the government has been a little slow in generating orders for the infra space. And that we believe will also start reversing in the month of March. And then when we have the next year coming on. So overall, as long as the order book continues to go, which we believe they are competitive with, the stock will continue to do well. It's trading at 18 times earnings. I will not say it's cheap for a construction company given they work on thin margins, but given the growth opportunity and given the quality of the balance sheet, I think one can hold on. If it comes down a little further, again, closer to about, say, 180, you can buy some more and average up a bit.
All right, so hold on and average out at 180 levels is the view coming in for NCC. The next counter that we're talking about is NMDC. Robin from Bengaluru has bought in some quantities in this particular counter. He wants to know what will be the movement with respect to this counter on the charts. Kushal, I'll come to you. NMDC, what are the support and resistance levels that you're watching out for?
Yes.
In NDTV, the immediate support comes near 63.05. Immediate resistance is 68.93. So I think a decisive closing about 68.93, will confirm a double bottom pattern that is evolving. And also 69 levels is where you find the 50 DMA. So I think that zone holds a very critical resistance. So a close above that would attract further bullish momentum.
So that's the view coming in on NMDC. We have our next caller. Rajan from Mumbai is calling us. Rajan, a very good morning to you. I believe you have a query on Zinka Logistics.
Good morning, madam. Yeah, I am Zinka Logistics. I was allotted in IPO in November 2024. I would like to have the views of both the analysts in case one of them is not having the IPO view. I am a long-term investor ready to hold for 3 years. Kindly explain me the prospects of this company.
Got it. Rajan, I don't think we'll have enough data on the charts for Zinka Logistics yet because it's just newly listed. But Sameer, if you have a view on Zinka Logistics as well as the entire space, if you can give a perspective.
So sadly, the Zinka Logistics, we don't have a view. And I'm not even sure what part of the business they follow. So I don't know which part of the logistics are part of the business you want me to address.
So Zinka Logistics is basically into digital trucking platforms. So they give telematics, load marketplace, vehicle financing for trucks specifically.
So, a similar company which does some of that is Tata Technologies. I mean, they have these apps and softwares which can help you track some of this. So that is a counter we do cover. We remain positive on that. The stock has seen a very significant correction, and the correction has rightfully come because, growth has been subdued. Again, I've been talking about the fact that it's not only the logistics are part of it that they do, but they also have other parts of the businesses, right, which cater to car sales, the automation and the electronics and all of that go into the car. So once we see auto sales picking up, we believe that is one of the counters that will do well, but it's again very small, the percentage of the part of the business of Zinka probably that is doing. So it's not a direct comparison on that one.
Got it, Sameer. The next query that we have is on MobiKwik. Do we have the name of the, yes, Varun. Varun is from Karnataka, is holding 650 shares of MobiKwik, bought at 540 a piece. He's sitting on a loss of more than 90,000 is what he's saying because the current market price is around 393. When can he expect a recovery in this stock is his question. Sameer, by any chance, do you have a view on this one?
These platform companies will gain more traction. So I think, look, the results were not the best again in this quarter. I think once the entire space sees more and more traction happening and more of these payment systems getting on, we will see the operating leverage play through. So if you want to be invested in a company like this, I think you got to be invested from a 3 to 5 year perspective, minimum of 3 and on the upper side 5. So if you do have that kind of timeline, yes, you could recover your money in the short term. I think pain will probably still persist.
Got it. The next query that we have is on ONGC. The viewer's name is Sharwani Reddy. She wants to know whether she can keep holding ONGC for the next 3 months. Kushal, on the charts, ONGC, how does it fare? Okay, I think Kushal, we are having problem connecting him.
I believe we've got Ajay Manglunia who is logged in and who's joined us on the phone line, I believe, Managing Director and Head Fixed Income at Incred Capital. Ajay, just trying to understand the reaction in the bond markets. I may have read it wrong in terms of the increase in the bond yield. So can you clarify which, so there is an increase in the bond yield. So what are you reading in terms of the immediate reaction, Ajay, and how do you explain it?
So market was kind of expecting a token rate cut, which was delivered in the today's MPC meeting outcome. 25 basis point rate cut is something largely was expecting by the market, and it's after a very long time, 5 years later, there is a rate cut in Indian environment. What market was disappointed was some answer to the liquidity. Market was expecting that there could be some kind of a delivery on the liquidity front, which was kind of kept silent, and we have seen that RBI has kind of been doing enough in terms of providing liquidity. Market might be expecting a longer durable liquidity, since we see a lot of liquidity deficit in the market, and that's what is kind of disappointed in the yields in the government securities has gone up by 4 to 5 basis points. It's a knee-jerk reaction, which we can say, and over a period of time, we will see the moderation in the yields.
I just want to clarify, because I'm looking perhaps at what is not the benchmark, what we have on the screen. What is the coupon on the benchmark right now, Ajay? Because we don't look at this very often. The 10-year benchmark, you're looking at 6.79?
6.79 is the new benchmark right now. Earlier it was 7.10.
Yeah.
So both are traded, but I think more volume is in the 6.69.
6.79. And do you anticipate that this will be something that eases over the course of the next few weeks as liquidity conditions improve?
Yeah, definitely. As we see the market in this security was trading in the range of 6.65 or around 2-3 basis points up and down, and today with the knee-jerk reaction with kind of no mention about the liquidity measures in the policy has disappointed a few traders, and they kind of book profit. It may kind of be somewhere about say 660 to 670 range for some time before it settles down at its own levels. I think 665, 663 is the level where we could see this being traded. February is a month where probably there is no major government borrowings, and as we enter into the next financial year, the borrowing will recommence from the next financial year in April onwards. So we could see some rally in this paper going forward.
Last point, Ajay, and a quick one. Right now, we've got a rate cut as was anticipated, but as you've pointed out, the street is reacting to liquidity. The base case assumption, as I understand it, is for another rate cut sometime this year. And would you say that once the liquidity scenario eases out, you could see a move down to in the 10-year bonds, in the long-term bond yields? And when do you see that playing out?
Bond yields, as we have been talking about, is more of a stable. The immediate impact of the rate cut will be on the shorter tenor papers like CP, series, money market instruments will immediately have a transition for this rate cut. The next rate cut probably people might be expecting in the April, which is the next policy time, and by then we will see the new financial year borrowing will also commence. So we don't see huge rally in the 10-year. The rates might be stable. The more comforting factor with the market is likely to be the stability. Stability in terms of liquidity, stability in terms of rate trajectory, stability in terms of currency, and all of these are basically points to watch out.
Fantastic. Thanks so much, Ajay, for joining us, for giving us that quick view. Just a small clarification. These are not bonds that you look at on a daily basis, as a result of which there would have been a little bit of a confusion. What you see on your screen, or you saw on your screen, was actually a 7.1% coupon, the earlier benchmark. Right now it is 6.79. That's where most of the trades are taking place. And the current yield on that paper is at 6.69, and it has moved up very sharply. You can call it sharply because it is a substantial move. 3 and 4 basis points in a day is actually pretty sharp, but it is likely to stay range bound is what Ajay has just pointed out. Let's go to the next one.
Right. The next counter that we have is, Zentech is the next counter. Dhanush from Karnataka wants to acquire Zen Technology from a longer term perspective, that is 5 years, and he wants your opinion on this, Samir. Zen Technology is the counter, if you've studied the company.
Zen is something in our coverage universe that's not there, but I can tell you about the IT sector, where we believe that the entire space is very richly valued at this point of time. We've been saying that, look, everyone's factoring in a recovery in the US markets and growth will come back, and because of which these strong cash flows will start improving. But we are not as constructive on the recovery in the US market, especially in the IT side. We believe that if the US market goes through a bit of slowdown because of the impacts that Donald Trump is taking of cutting spendings in a lot of places, putting in certain amount of taxes, if H-1B visas rules change, all of those could affect, and valuations are fully priced. So no coverage on Zen, but a slightly cautious view on IT.
Okay, we have our next caller, Ricky from Mumbai is calling in. Ricky, a very good morning to you. I believe you have a question on Trent.
Yeah. Hi, very good morning.
Good morning.
Actually, I have 25 shares of Trent with an average price of 5,500.
Okay.
And yesterday there was a result of Trent.
Correct.
It has missed the estimate. Yeah, but there was very deep correction. So is it a time to accumulate more shares, or should I wait more for further corrections?
Correct. Samir, I'll come
and
to you.
I even want to know the technical view.
Sure.
I even want the technical view of
I'll take one fundamental view from Samir. Samir, Trent, he's bought it at 5,500. Should he accumulate more at the current levels? Because quite a bit of correction has taken place on this counter.
So yes, I agree, a lot of correction has taken place, but you also got to realize that the stock ran up all the way from 2,000 to 8,000, right? So we are just seeing a correction, but if you look at it from a year and a half ago, it's still up quite significantly. Okay, so why was there a correction in the stock price after a result where they delivered a 35% top line growth? Okay, so I'll try to answer it the way I understand it. One of the disappointments that we saw in the numbers, at least that I saw in the numbers, was that same store sales growth was a bit muted. It was in the single digits. For retail businesses, especially like the ones where Trent, where you're renting out space, the higher SSSG that you get leads to a huge jump in the operating leverage, which was missing. Secondly, the growth that has come from new store additions. New stores, when you add, yes, the top line may grow, but these stores take time to stabilize and become profitable, of at least anywhere between 3 to 6 months before they start breaking even. So you've probably seen a lot of growth in the top line because of that, not as much growth coming from the SSSG, the same store sales growth, and till the urban consumption sees a bigger uptick. I think that is that is the big concern, that if SSSG does not go up, then how do you justify these 80 times forward valuation multiples? So I think that is the reason we saw a correction. Should I continue to add on to the stock? I think yes, you can buy onto the stock. Look, the product that they have, the expansion that they have, and the different verticals. So Zudio is doing extremely well at the low end. You have Westside, which is fashionable but still very reasonably priced, and then you have the Star Bazaar, which is the FMCG part of their business, where they are also launching their own brands,
right,
which will continue to do well. So we think that it's a great 3-year play. One can add on from a 3-year, but expect it to be sideways for the near future.
Okay, fantastic. Thanks so much for that view. And Samir, Kushal, thanks so much for joining in. And that brings us to the end of this edition of Ask Profit. Completely out of time. Do stay tuned. Lots more coming up on NDTV Profit.
सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, बिजनेस नहीं है इसमें। This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है, शाहरुख खान।
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप मिक्स्ड मिलेट्स डालते हैं।
आपको ट्रम्प साहब को खिचड़ी खिलानी है?
हाँ, तो खिचड़ी खाना नहीं है।
What is the one vegetable you will never eat?
मैंने मेथी खानी बंद कर दिया है।
मतलब आप करेला, बैंगन ऐसा?
I love करेलास।
Is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the big... Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Well, today we're talking about Ixigo, also known as Travenue, and what we're tracking today is, well, largely the company which is into travel and tourism. But now we do know that this particular company has also listed just last year. So there is a lot of interesting data that we can potentially put out for you. We start off with talking about what the company is all about. We have incorporated, it was incorporated in 2007, and the company runs an online platform, and many of you may be familiar with it as well, as it provides information as well as booking services for the travel industry. It also provides software development and maintenance services to its customers, and this bookings will involve bookings for trains, flights, buses, hotels, what have you. Now, in terms of the latest metrics, what we are seeing is that the monthly average user stands at around 87 million. That's around 8.7 crores, and users from about 2,400 towns uses the Ixigo website. We also have deep penetration as far as the tier 2 and tier 3 towns are concerned. For the company, it stands at a little less than 94%, and the lifetime transacted users stand at around 41 million. So that's as far as what the company does and what it's all about. But I'm going to get in my colleague Mahima to tell us about how things can pan out for this particular company and how things have come through. So what we usually do is we talk about the various fundamentals of the company. This would include the income statement, the balance sheet, cash flows, return ratios, moving beyond the financial statements. We also look at the shareholding, what the stock has done, as well as what the street makes of it along with the valuations. So Mahima, good morning and thanks for joining in. Why don't you take us through the revenues first, and as well as the profitability for this particular company, and the several revenue streams in this case.
Right. So in terms of revenue, if we see the 9 months FY25 performance, they're already standing at 629 crores of revenue, which in FY24 they'd done 655 crores. So they're nearing their FY24 mark, and there's still one more quarter to go. So they certainly outperform in FY25 as compared to the FY24 metrics. The 3-year CAGR for revenue has been 69% for the company. EBITDA has grown to 55 crores as compared to 43 crores in FY24. So EBITDA is already much higher than what they did in FY24. In terms of margins have significantly improved from 6.7% to 8.9% when it comes to the 9 months FY25 figure. And net profit, however, has come down, and this is because their advertisement expense overall has gone up. In terms of multiple revenue streams, since it does bookings from different aspects, flights, trains, hotels, etc. They have agent services charges, they have payment gateway charges, value-added services, advertisement income, airline commissions, and convenience fees are some multiple sources of revenues, which kind of augur growth for the company. In terms of key operational metrics, the gross transaction value was up 48% YOY this particular quarter, and monthly transacting user was also up 38% for the company this quarter. So both of these combined, the gross transaction value as well as the monthly transacting users, is what has kind of aided the revenue for the company, Agam.
Right. So that's, talking about the income statement. Let's also talk about how things have panned out when it comes to the balance sheet. And it's on a strong footing. To be honest, I wasn't expecting a company which is relatively new to the scene, and of course very, very new to the stock market, certainly, to have such a good balance sheet. So it's debt-free. It does have about nearly 600 crores as shareholders' net worth. This is, of course, accumulated, profits as well. And cash at bank stands at around 143 crores, even as it sees a negligible gross debt currently. So it does seem like it's on a very strong footing coming down to the balance sheet. And I'd reckon it is largely the same for cash flows as well, Mahima.
Absolutely. So in terms of cash flows, the cash flows have improved, when we compare the first half of FY25 versus the first half of FY24. In terms of cash flow from operations, it stood at around 19.4 crores in first half of 24, which is more than, more than tripled in first half of FY25 to 70 odd crores. And in terms of net cash flows, which was negative in first half of FY24, has turned positive to 28 crores in the first half of FY25. So, this financial year has turned out to be a good year in terms of cash flow as well. So we give a thumbs up in terms of cash flow as well.
Fair enough. So, actually, if you consider all the 3 financial statements, they look very, very good. And based on that, I'm going to come down to return ratios. So, return ratios are improving. There's no doubt about that. But they are not to the tune of 20%, 25% is what we might expect from an ideal situation. But we're not going to give that a thumbs down just because those ratios are down, or rather not up to the mark, because we have seen these ratios move from the negative well into on their way to hitting that 20% mark around there. So as far as the return on capital employed is concerned, at the end of 2024, that stood at nearly 17%. Return on assets stood at around 12.5%. This is coming from the negatives. So, which is why, they've seen an improvement. But once we see the company hit 20% mark, well, we'd probably give that a thumbs up as well. For now, we're going to go with a neutral. But Mahima, let's talk about the shareholding as well. This one is a very interesting one for this particular company.
Absolutely, because there's no promoter shareholding in this particular counter. And which is why, we'll probably give this particular metric a neutral rating, because there's no skin in the game when it comes to the promoters, right? But we've seen that FIIs have been increasing their stake. Their stake has been increased from 59.8 to 61.1 in December 2024. DIs have seen a slight downtick in terms of their stake, but public holding has kind of remained strong. Slight downtick seen with respect to September 24 and when you compare that to December 24 quarter. But in terms of an interesting thing to watch out for here is that both the CEO as well as the co-CEO and the director of the company are holding quite a significant stake in the company. Alok Bajpai, who's the CEO of the company, not the promoter of the company, holds 4.86% stake, so almost a 5% stake in the company. And Rajneesh Kumar, who's the director and group co-CEO, is who's again not the promoter of the company but holds around 5.21% stake in the company. So both of them combined are holding around 10% stake of the company, Agam.
Right, and this is an important one. And while the founders, the co-founders do have stake in the company, a lot of the decisions will come down to the influence of all the institutions who hold, significant amount of ownership in the company as well. Of course, one might find it heartening to know that the co-founders still have a significant stake, but again, it's going to be something of, middling in terms of our ratings as far as the shareholding is concerned, which is why it's a neutral. But we move on and talk about street credentials. And, well, the stock has done well. I would say that, again, we don't have too much data to move around with, considering it was listed back in June of 2024. So from its issue price, if you was subscribed for the IPO at that point in time, and if you were issued the share price, the shares, which was at around 93 rupees per share, you're looking at a 69% return. But even if you consider and would have bought the company on the listing day, it's given you 17% returns from the closing on listing day all the way until now, and which is not bad. So it has, to a certain extent, also outperformed the benchmarks, the mid cap and the small cap indices. So it's going to be a thumbs up there as well. That said, again, Mahima, let's talk about the valuations here. They do look very, very expensive.
Right. Before I go to valuations, the 17% mark is despite the kind of correction that the market has seen in the past, 1 month or so. So that's why we've given thumbs up when it comes to the street kit. But yes, valuations does not paint a very rosy picture. If you compare it to the peers, Ixigo is right now trailing at a P of 131 times. So despite of the kind of growth that we've seen in the company when it comes to the revenues, which have grown at a CAGR of around 69%, the stock has seen a lot more traction as compared to the growth of the company, which is why we're seeing the trailing PE at 131 times. Now that compared to its peers, TBO Tech trades at around 81 times, EaseMyTrip trades at 26 times, and Yatra Online trades at 81 times. So right now the only cheap option, comparatively cheap option available in the market is Easy Trip Planners. But yes, valuations definitely a concern, which is why we've given a thumbs down for this particular metric.
And of course, we must remember that these are trailing 12-month valuations. Now, no matter what kind of growth we can see the company, even if they do double their bottom line over the course of the next 12 months, even based on that, you're looking at a price to earnings ratio of around 65 times.
Right.
So it is slightly on the higher end. But finally coming down to the analyst recommendations now. Well, given the fact that it's a relatively newer stock on the stock exchanges, we don't have a lot of coverage on the stock. Also, in terms of absolute size, it's not a very large one in terms of market capitalization, which is why we just have two analysts on the street at the moment, at least as far as our consensus is concerned, who have a buy rating with an upside potential of around 11%. And because of the fact that there is a relatively lower number of analysts covering it, we'll give it a neutral rating, and that brings us to an overall rating of around 5.5 out of 8. So there you have it. That's the rating coming through. But do remember that so far the company has done very well in terms of its key financial statements. That includes income statement, the balance sheet, as well as the cash flow statement. Of course, we'll continue to keep an eye on all the several other factors. But Mahima, on that note, thanking you for joining me and taking us through these ratings for the company. And we'll move this conversation forward. We are now in conversation with Alok Bajpai. He's the chairman, Managing Director and Group CEO of ixigo. Alok, good morning and thank you so much for joining in. Alok, we've seen what you all have done over the past few years, over the last 9 months as well. The question now comes down to how are we looking at growth over the next 2 years?
So if you look at the ixigo story, right, it's a bit unique in some aspects because we did not start out as an OTA when we launched back in 2007, and the journey over a decade that we've had by serving the next billion users and building out utility use cases on trains, buses, and then becoming transactional just before COVID. I think that was a transformational moment for us because we already had a lot of traffic and we started serving our customers better by helping them complete transactions on our own platform and build value-added services on top. So, our trajectory on revenue is reflective of the fact that, we've been working very hard on converting ourselves from, pure play utility app that we used to be many years ago to a transactional one. And therefore, our monthly active users were growing, but our MTUs also started to grow. And we started seeing transactions ramp up across train, bus, flight. And we did a couple of smart acquisitions during COVID as well, which and one more recently, which have also sort of aided this kind of growth. But if you look at the overall trend line on that growth, right, and you zoom out a bit, you see that last quarter, our revenue run rate, if you look at the annualized number on that, is almost 10 times of what our revenue used to be back in 2019 pre-COVID, right? And so it's not just a doubling over the last 2 years, but it's a trend that's been on for the last 5 years, where we on the top line level. And I think the only thing that has earned us that is the fact that we've been extremely focused on customer experience with a specific focus on the next billion users.
Right, Alok. So, moving you towards a transactional app from a utility app right now, keeping all these factors into consideration with the kind of trends that you all have seen over the past few quarters and years, how does this product mix change over the next few quarters and years as well? What can you tell us about the latest changes that are taking place as far as your company goes?
Yeah, so I think the shift you're referring to is more on the product mix, right? Like how people are increasingly buying flights and buses through ixigo. I mean, trains, we were already the market leading OTA with dominant share. And I think that share has also moved up. We were close to 58% of the online travel agent train booking market as of December, right? And I think bus and flight is where we've really doubled down. And if you look at our flight growth, 73% GTP growth year on year. I mean, just for perspective, the overall domestic flyers grew by about 11% during that quarter, right? So we've actually grown almost 6.5, 7 times faster than how fast the overall sort of passenger market is growing there. On buses also, we've grown at 63% YOY last quarter. And if you understand why this is happening, it's kind of natural in my mind that this is something that, we have a right to grow faster on, because we are starting from, people in tier 2, 3, 4 towns who maybe earlier were only taking trains or buses, and now today, are coming and actually booking flights. And even though we don't disclose these numbers, but there's a large chunk of these who might even be flying the first time of their life, right? And I think the interesting thing is, if you're adding that many new flyers, right, and you're seeing them come from places like Gorakhpur or Varanasi or Ayodhya or Nagpur, Jaipur, right? And also doing international trips, some of them, right? So I think that's where the Ixigo journey has been, really doubling down on. And if you again think about the macro trend, right, the per capita incomes in our country are going to continue improving. The aspiration levels of the middle class will keep growing, right? And if you just think of where will the next 100 million flyers in our country come from, I mean, the clear answer is they're going to come from people who today are not flying yet. And therefore, not that they're not traveling yet, they'll be traveling on buses and trains already, right? So, in that sense, the nature of the audience we've built out over the last decade fits beautifully with where the apex velocity of growth will come from in the flight segment, and we are natural beneficiaries of that, right? And of course, I'll give a lot of credit to the execution of the team that has built a super product. We have market leading features out there, right, in terms of being able to track flights in real time and get updated about your boarding gate or your that your flight is running delayed or that your baggage has arrived at a certain belt number. So we really handhold the customer end to end. Our customer service is fantastic, and we are probably the only OTA in the world disclosing things like how fast we refund customers, how fast we pick up calls, right? 92% of our calls, actually close to 94% of our calls last quarter were picked up within 2 minutes. That number improved from 92% the quarter prior. And if you look at the average refund time that we have, 3.5 hours, right? I mean, when we were becoming an OTA, the biggest grouse we heard was people would not get refund and they would have to call up someone, email someone to get their money back, right? Their hard-earned money back. And we said, this is something we got to change, right? And that's why we started disclosing these metrics to put that pressure on ourselves to continue improving them. So we've been very fanatic about customer experience, and we will continue to use that strategy to grow faster.
Right, so Alok, the travel and tourism sector is ever evolving, also changing very, very quickly. Want to ask you now about the areas of businesses that you aren't at the moment, but will look to move into or are already planning strategically investments into.
See, hotels, we've been talking recently about that it's a area of priority for us. We recognize that for most OTAs out there, hotels is a sizable chunk of their revenue, GTV, etc. And globally, in fact, the established template globally was you launch for flights and you build hotels out, and that's how people used to build OTAs. It's just that in India, only 4% of people fly. So our strategy was to go after train and bus with equal fervor and sort of build those out, because you want to tap into the middle class. You want to start with train, and as that person graduates up into flights, hotels then becomes an important leg, because naturally when you know that somebody is going at from A to B and then staying in B for like 3 days, they would need some kind of accommodation, right? So that's why we've been kind of doubling down on building the right product, on getting the right supply, all those things in the last few quarters. And I think over the next few quarters, you will hear more from us around that. It's too early to talk about more details there. And, again, ancillary like value-added services that we have, whether it is Ixigo Assured, Price Lock. Recently, we launched Travel Guarantee, which basically gives you up to a 3x refund if your waitlisted ticket on train doesn't confirm, so that you can buy a flight or a bus instead, or even another Tatkal train. I think those kind of products, we'll continue sort of innovating and coming out with. If you look at our track record in the last 4 years, we've come out with a bunch of these, 5 to 6 of these, right? And I think each product solve customer problems as well as improve, our ability to monetize.
Right, Alok, we've run out of time on the show, so I'm going to take a moment to thank you for joining us and taking us through the outlook for the company. Well, on that note, that is all that we have for this edition of KYC, but lots more lined up on the other side. You're watching NDTV Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in?
Hello and welcome. You're watching Markets at 12 here on NDTV Profit, and this is Harsh Saita. Let's take a look at how markets are currently doing. Well, the Nifty now just off the day's high, so positivity starting to creep through, it seems. A fifth of a percent higher on the Nifty, and we're just about at the 23,650 mark. The top is just below 23,700, so that's something you may want to keep your eye out on. Let's also look at what the Nifty Bank is doing, because it's a rather big announcement with regard to where the Nifty Bank is concerned. plenty of choppiness in that index while the policy statement was on, and you can see that choppiness on the graph in front of you. But 0.1% lower is where the Nifty Bank is currently settling in at. So a muted kind of response from the Nifty Bank. Within the PSU banking pack though, the response is even lower, 0.6% lower on the Nifty PSU Bank. The private banking index doing relatively okay in that sense, absolute flat line where the private banking index is concerned. Let's look at some other indices in focus. The Nifty Auto is up around 1% thereabouts. You're also seeing very good traction on the Nifty Metal, 2.5% higher on the Nifty Metal in fact, and 1.5% up on the Nifty Consumer Durables Index as well. So those are some indices which are doing decently okay in trade today. What's not doing well, the FMCG index. We spoke about the PSU banking index and the IT index, kind of a muted move on that one. The FMCG index is down around 1% thereabouts. What are broader markets doing? Let's pull up the advanced decline first off to start off with. Thereafter, let's look at the Nifty mid cap. And while we are at it, we'll also have live visuals for you very, very shortly on the press conference post the RBI MPC. Those live visuals on your screen as we speak. But the Nifty mid cap up around 0.5% thereabouts. The Nifty small cap index also absolutely at the flat line. Okay, let's go across. So maybe another minute or so before we cut across to the post MPC press conference, and of course the first press conference which will be presided by the new RBI governor, and let's cut across to that.
You may please exit from the right hand side, please. Thank you.
Okay, would be curious to know, is there a possible second rate cut, and how quickly will that happen? What are the liquidity measures that the RBI is poised to take? And all of that and more, of course, as part of all this, all the Q&A that will go around over the next hour or so.
Hello,
interesting one.
Good afternoon. Welcome to this post-monetary policy conference, first of this calendar year 2025. Friends, we have with us Governor Reserve Bank of India, Shri Sanjay Malhotra, Deputy Governors Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri Swaminathan J. We also have with us Executive Directors Dr. O.P. Mal and Dr. Rajiv Ranjan and other colleagues from the Reserve Bank. To begin with, as is the practice, I'll request Governor to make his opening remarks. After that, we'll have the question answers. Governor, sir.
Well, good morning, good afternoon, and welcome to this press conference. I already made my statement, which we have also uploaded, and I'm sure you would have already gone through it. I do not have anything more to add. The MPC resolution, the rationale for it, and some of the other additional measures that we have brought in are very clearly communicated over there. So I think we can directly move towards the Q&A. I think that will give more time for all of you to ask additional questions. So we can begin, I think, with the Q&A directly.
Thank you, sir. Just before we begin, a couple of announcements as always. I'll request you all to please wait for your turn and restrict to one question per person. And if time permits, we can always go back for the other one. So you can see my colleagues on the aisle with mics in their hands. So they will give the mics to you. So please speak in the mic so that people outside can also hear you. So there are 27 participants from the media today. And with your permission, I'll call out their names. I'll request Lata from CNBC to ask her question.
Thank you, Governor and Deputy Governors. So I just want to first clarify a language part and then my question. because in para 7, where you are announcing the rate cut, you say that the MPC remains unambiguously focused on durable alignment of inflation while supporting growth. So inflation first, then growth. In the immediate next paragraph, you are saying the growth inflation dynamics open up policy space for the MPC to support growth while remaining focused on aligning inflation. So should we read this as deliberate or casual? And the question I have is, rate cuts normally get passed on when liquidity is surplus. So would your stated policy be to keep liquidity surplus in the interbank system or just adequate? Thank you.
So let me come to your second question first. I think that was attempted in the statement also that we made. And you would have observed in the last couple of months and even before that, that it has been the endeavor of Reserve Bank to provide as much liquidity as is required. And when we say liquidity, as I also mentioned in my statement, it is both, overnight as well as durable liquidity. We have taken a number of steps. You are aware, that we introduced, perhaps for the first time, a regular pre-announced, every day overnight repo rate operation. So this was primarily to give confidence to everyone that this window is always available insofar as the transient or the overnight liquidity is concerned. Even for the longer term durable liquidity, we have announced steps of about 1.5 lakh crore, some of it which have already been put into operation. 20,000 crore of OMOs have already been done, another 40,000 crore later on. Today, we are going to have a 56-day VRR for 50,000 crore. We are always watchful. We'll be nimble. I want to assure that we'll be very, very proactive in providing whatever liquidity requirements are needed. That's one of our jobs, and we will do it. Coming to your first question, I really did not, understand as to what you are. Everything, every statement, every word that is mentioned in the MPC statement, and especially, the resolution, because you were pointing at the resolution, is very, very well crafted, thought out, and deliberate.
Thank you, sir.
Thank you.
Thank you, sir. Next will be Swati from Reuters.
Thank you so much, sir. So your growth forecast for next year is at 6.7%. This is yet again at the upper end of the government's range. They've given us a 6.3 to 6.8. And as we saw last year as well, RBI had to lower their projection towards the end. What gives you so much optimism on growth, especially when you're saying that, you remain neutral purely because inflation risks could come up again with the heat waves, etc. So what gives you the optimism on growth, sir? Thank you.
See, all the parameters we analyze very regularly, the high frequency indicators that we have. And whether one looks at agriculture with good reservoir levels, and I've made detailed assessments even in my MPC statement. You can go through them as to what are the reasons. Actually, they are all given over there. So in interest of time, I am just shortly, very briefly indicating them. So whether it is in terms of agriculture, whether it is in terms of consumption. Now, you also, recently had the Nielsen survey, the consumption numbers over there, at 7% plus, augur very well. And this is the kind or the range, of projections that we too have for personal consumption. And similarly, the manufacturing activity, is also kind of picking up. The PMI levels that we got were very comfortable over there. So all this gives us the optimism that we will have what the numbers we have projected. I also mentioned in my statement that we will continue to improve, our macroeconomic models, our nowcasts and forecasts, so as to be able to give as precise a number as possible. Please bear in mind that these are just forecasts. Every day, situations change. And as people say, as your facts change, your opinions also change. So those, it's subject to that. Thank you.
Thank you, sir. We'll move to Mr. Manojit from Business Standard.
Thank you, Governor. Thank you, Puneet. Is it fair to say that at this point in time, the priority is growth over inflation? And what could be the real rate at this juncture of growth inflation dynamics?
See, the RBI Act has given us a very, very clear mandate. Our primary objective, see, for some countries, you are aware, it's a dual objective, where very explicit dual objective to have both price stability and growth. In our case, the primary objective, that is not to say, the other objective is not important. The primary objective is inflation, is price stability, keeping in view the growth objective. So we will continuously, focus on that, trying to meet, these objectives. We will try to align the inflation with the target that has been given to us, at the same time supporting growth. At present, as the resolution also says, we felt that time has come that we can be more supportive of growth because inflation is coming down. It is expected to go down. However, it also says that we will maintain a neutral stance so that we are able to proactively respond to the evolving macroeconomic conditions. Thank you.
Sir,
Thank you.
Real rate. What could be the real rate according to you, given the current growth inflation dynamics? The real interest rate.
See, today we are at 6.25%, and the inflation is 5.2%. That is the CPI inflation. The WPI is lower. So that would give you, a real rate of about, let's say, 1.5% or so. That's what it is at present.
Thank you, sir. Moving on, we'll have Mr. Anup from Bloomberg.
Sir, coming back to the inflation forecast, inflation target again. We have 2 to 6% inflation band. You have that convenience of that band also. You mentioned that of the flexible inflation targeting, and at the same time, your original target is 4% for the medium term. So, just wondering, will you be comfortable if inflation remains within the 2 to 6% range, or you will want to see inflation durably settling around 4%?
Sorry, what did you say your name is?
Anup Roy from Bloomberg.
Anup Roy. I'll ask you, when you go to an exam, in that exam, the maximum marks are 800, let's say 100. The passing marks are 40. What do you aspire for? Do you aspire to pass, or do you aspire, to do extremely well? Well, some may, like to just pass. In RBI, we like to we like to be on top of everything.
Thank you, sir. May I have Mr. Ankur from ET Now?
Hello, Ankur Mishra from ET Now. While economic survey says that 6.3 to 6.8% is the growth forecast for the next financial year, and you have taken the upper end. When I asked this question to CEA, that is there a possibility of 7% plus growth, he said yes, it is possible. I want to ask you now, as per your assessment, is there an optimistic possibility of that? And one more question, sir. Regarding the ECL provisioning and project financing norms, you have mentioned in the statement right at the front, but you also said phased implementation. Now these implementations are as soon as from next month or 1st of April. As per the draft norms, of course the final norms are yet to come. In project financing norms, it was mentioned that it should be 2% in the current financial year, and then in FY26 and FY27. Similarly, for LCR norms also, 1st April 2025 was the tentative date which was given. I want to understand, where do we stand here? Is there going to be a deferment, or these will be implemented? Thank you.
Your first question, whether 7% is achievable. See, these are difficult questions to answer, but nevertheless, I would like to stick my neck out and say that certainly India can, achieve 7% and plus growth rate. We should certainly, aspire for that. Coming to your second question, which is related to some of the guidelines, that we have issued, LCR, ECL, project financing norms, etc., etc. I made it very, very clear, that we will be doing a balancing act. It is not only about stability. It comes with a cost. We will be very, very conscious of the costs that it brings in, so that, we make efficient use of our resources. I want to also clarify, because you asked specifically about LCR, and we did make a mention over there that we will give sufficient time. I do not think 31/3/2025 is giving sufficient time. So certainly they will not be implemented, before, at least, before 31/3/2026. That's the kind of timeline that is needed at the minimum. The draft regulations were circulated. We have got comments. We are examining them. It will take time for us to examine. You see, liquidity is important for everyone. Let's please, try to appreciate that why we are doing this. We are doing this primarily, so that there is no run, on the banks. You would have witnessed it, in 2023, there was a run on some of the US banks because they do not have, such kind of regulations. Now we have those regulations. But whether the liquidity that we have, provisions that we have, whether they are sufficient or not, that and they need to be always, continuously need to be improved. So that's why, we had provided for certain more liquidity to be kept vis-a-vis some of the deposits which we felt, would perhaps, have a higher runoff. That has been provided in these draft regulations. At the same time, we have got now comments from other stakeholders that there may be lower liquidity requirements for some of the other deposits. So we are examining that also. As soon as we are able to examine all the suggestions. And I'm very happy, to note, having come here to the Reserve Bank, that we do, an impact analysis over here. So that impact analysis will be done, has been done to some extent, but come, with the suggestions that have now come in, we are revising our estimates, our impact analysis, and we will give, a time frame as to when one can expect LCR. Similarly, the other guidelines also we will give sufficient time frame. You can rest assured, that they will certainly not be implemented as quickly as 31/3/2025, because that will certainly not be sufficient time. We do not want to cause, any disruption. We will ensure a smooth transition.
So LCR,
thank you.
You said not until March 26.
Yes.
Thank you, sir. Please, let's go with the flow.
Let him ask a clarificatory question only with regard to this.
Please speak in the mic.
26. It will not be before 25.
Be very, very clear. It's more than 1 year. 2 months, less than 2 months is too short a window for the banks. We realize that. And so, we will give at least 31, at least. Doesn't mean it has to be 31/3/2026. We'll aspire for that. But we want to make it very smooth, and it will also be phased. It will not be, that all the regulations, all the norms kick in from day one, which will be at the earliest 31/3/2026.
Thank you, sir. Next is Hamsini from Money Control. Yes.
Hi, sir. I'll stay put on this part around regulations. Your language also today seemed to indicate that there will be a lot more consultative process in the way that you would go about building regulations. You did clarify on LCR, but what we've also seen, especially in the last 4 years, and more so in the last 1.5 years, is certain banks and NBFCs facing ban on businesses, certain aspects of businesses. There are 2 large banks still waiting to come out of restrictive business policies. Would you rethink your approach on how you would want to target banks or work with them to rectify some of the follies? And as a clarification, you did mention about LCR, but what about on project finance and investment guidelines that banks are permitted to take in subsidiaries, etc.? Would you want to defer, or there has been request for a deferment on that as well? Would you want to consider those proposed policies also favorably, sir?
See, ECL was only a discussion paper. Even the draft is not out. So there is no time frame for implementation of ECL guidelines. Similarly, project finance, you can rest assured, I think they will need more time. 31/3/2026 is the earliest. Moreover, they need to be seen in conjunction with each other. There is a certain amount of overlap between ECL and project finance. So we are examining, because for project finance, the draft regulations were certainly published, comments have been received, suggestions have been received. We are examining them, and we'll come out with something, I want to assure all of you, that which balances the interests of the public, the depositors, the financial stability, which is very, very important for our country, and at the same time, the concerns of the banks, keeping in mind the efficient use of resources. And what was your second question? Sorry, is on two banks, where we have cease and desist measures. See, these measures are taken after great consideration, after great thought, after giving opportunity to these entities, whether it is these banks or others. I'm not making reference to any particular entity. And these are measures actually of last resort. We would not like to use them too often. This is a measure of last resort to be used in the rarest of the rare circumstances, when all other measures have actually failed, and they are again in the interest of the public, and we'll keep this policy going forward as well. Thank you.
Thank you, sir. Next will be Ms. Gopika from the Mint.
Thank you, Puneet. Thank you, Governor. My question is on inflation forecast. You've retained the inflation forecast for this year and next year. But have you taken into account the impact of rupee depreciation while accounting, or have you factored in the impact of rupee depreciation while calculating or looking at the forecast? And my second question is on the new Deputy Governor. For monetary policy, when can we expect the appointment?
Second question you have to ask the government. It's not for me. Your first question, yes. The latest rupee to dollar rate was taken into account while making all our projections. So, and we also do various sensitivity analysis. So yes, a brief answer to your question is yes, that was certainly considered while making our projections.
थैंक यू सर. अब मैं जी बिजनेस से एकता सूरी को आमंत्रित करूंगा.
गुड आफ्टरनून सर. सर, हमने आपकी स्पीच में सुना कि आपने फ्रॉड्स के ऊपर बात की कि .in होगा बैंकों का डोमेन नेम, लेकिन बहुत सारे इश्यूज हैं जो कस्टमर्स फेस करते हैं फ्रॉड्स की. अगर हम बात करें, सबसे पहले कोई रिपोर्ट करता है फ्रॉड तो उसे पैसा जल्दी वापस नहीं मिलता. दूसरा, पेस्की कॉल्स बहुत ज़्यादा आते हैं नॉर्मल मोबाइल नंबर से. बहुत बार आपने बोला है कि आप टॉपअप लोन्स, जो होम टॉपअप लोन्स है, उसे पर्सनल लोन्स की तरह एडवर्टाइज मत करें. अभी भी वो हो रहा है. 140 नंबर्स भी आपने बोला है ट्रांजैक्शंस और मार्केटिंग के लिए होंगे, लेकिन वो भी कोई नहीं सुन रहा. तो ऐसे सिनेरियो में क्या आरबीआई कोई स्ट्रिक्ट एक्शन लेगा बैंकों के ऊपर ताकि ये कस्टमर का बचाव हो इन सब सिनेरियोज में?
निश्चित रूप से हमारा पूरा प्रयास रहेगा कि जो भी हमारे ग्राहक हैं, जो जनता है, उनको अधिक से अधिक सुविधाजनक तरीके से बैंकिंग की समस्त सेवाएं उपलब्ध हों, चाहे वो बैंकिंग फ्रॉड से संबंधित हो जैसा कि आपने कहा, या आपने कहा पेस्की कॉल्स उनको आते हैं, उसमें किस प्रकार से जो है हमें उसमें कार्य करना चाहिए, किस प्रकार से हमें उन्हें हिदायत देनी चाहिए और क्या हमें उसके खिलाफ एक्शन लेना चाहिए, वो निश्चित रूप से इस संदर्भ में लिया जाएगा। और अधिक आपने कई सारी छोटी छोटी चीज़ें पूछी हैं, विस्तृत जानकारी के लिए मैं अनुरोध करूंगा हमारे डीजीज को कि वो आपको इसके बारे में कुछ और, क्योंकि हमने कई कदम इसके बारे में ऑलरेडी लिए हैं, तो संक्षेप में मैं रिक्वेस्ट करूंगा स्वामीनाथन जी को और राजेश्वर राव को कि वो इसके बारे में बताएं। और आप यू कैन स्पीक इन
thank you, sir. Thank you. I think I'll take the liberty of responding in English.
I know you
avoid any ambiguity.
Yes.
To avoid any ambiguity. Thank you, sir. I think just to supplement on that, yes, you also mentioned about the steps that we have already taken. So as far as the regulated entities are concerned, instructions are already in place to use certain series of 140 or 1600. We also do a lot of awareness campaigns to educate the consumers how to stay away from pesky or fraudulent calls. It is also put in place from a regulation perspective, limiting the liability of customers in unauthorized electronic banking transactions is in place. The provision to give us shadow credit pending full investigation is also kept in place. And adherence to this is also examined when we do the on-site supervision. But oftentimes there are also pesky calls that emanate from unregulated entities and apps and platforms. This is something which only an active collaboration of the government, regulator and the law enforcement we will be able to work on. But this is something which we are conscious of, and we will take every possible step to ensure that the consumer's interest is protected. And wherever there has been a loss, it is our endeavor to work towards an early redressal.
Sir, I know you've mentioned a lot of things that are already in place, but since banks, even if RBI continuously keeps on saying that you have to do this, banks do not listen. Till the date, banks have advertised home top-up loans as personal loans, saying take the loan, use it for your marriage, use it for travel. Or, when you go for a loan, they insist on taking, you have to take an insurance or a credit card. Mis-selling is on rampant. So on these issues, any supervisory action?
See, there are 2-3 issues that you mentioned. Each of them, of course, the framework is certainly in place. Oftentimes, as Governor also mentioned, many of this behavior which is not consistent with the regulations, we resolve through dialogue. A supervisory action which gets publicized is only in the rarest of the rare cases where there are egregious violation or the most outlier behavior. Otherwise, oftentimes, the supervisors engage with the entities on a bilateral basis and ensure that the regulatory guidelines are adhered to. So that shall be our endeavor. You may not get to read them in the media, but wherever there is a non-compliance, on an annual basis and also on an ongoing basis, we deal with the entities, and oftentimes they all are complied with over the course of time.
Just to add to DG Swaminathan, the guidelines are already in place regarding top-up loans, what are the end use, etc. If it is given for unauthorized different purposes, it would be taken as an unsecured lending and will have to be dealt with accordingly by the bank. That is one point. As regards this mis-selling and forced insurance, RBI guidelines are already in place regarding this mis-selling issues, and we are also looking at comprehensively reviewing these guidelines. We should be trying to come out with some guidelines shortly on this area also, on the conduct of the banks in various areas.
Thank you, sirs. अब मैं अनुराग शाह से आग्रह करूंगा कि वो अपना प्रश्न पूछें.
Thank you, Puneet sir. Thank you, Governor. सर, जिस तरह से आरबीआई ने भी कहा था कि जो बैंकों के द्वारा इंश्योरेंस कंपनियों में निवेश किया जाता है या फिर जो दूसरी सब्सिडरीज में निवेश किया जाता है, उसके निवेश से जुड़ी हुई गाइडलाइन जो है वो आरबीआई की तरफ से कब तक आ जाएगी, और क्या उसमें हम ये भी देख सकते हैं कि जो बड़ी इंश्योरेंस कंपनी है कोई बैंक के अंदर मेजॉरिटी हिस्सा खरीदने का भी उस तरह का प्रावधान होगा? और सर, अभी जब जिस तरह से कुछ वक्त पहले वित्त मंत्री ने भी बैंकिंग प्लेटफॉर्म के जरिए मिस सेलिंग की चिंता जताई थी, चीफ आईआरडीए के चेयरमैन के द्वारा भी चिंता जताई गई थी, स्पेशली इंश्योरेंस के संदर्भ में, तो क्या आरबीआई का डेटा भी उसको सपोर्ट करता है या फिर आरबीआई का क्या कहना है?
नहीं, देखिए, जैसा कि अभी आपको स्वामीनाथन डीजी ने बताया कि मिस सेलिंग के हम लोग बिल्कुल सख्त खिलाफ हैं। कोई भी इस प्रकार का यदि वाकया होता है, इस प्रकार का कोई भी इंस्टेंस हमारे ध्यान में आता है, तो निश्चित रूप से उसके विरुद्ध सख्त से सख्त कार्रवाई की जाएगी। आप इस बात के बारे में बिल्कुल 100% निश्चिंत रहें कि किसी भी ग्राहक के विरुद्ध यदि मिस सेलिंग की कोई भी शिकायत है तो रिजर्व बैंक उसके लिए उसके साथ में नहीं है और उसके विरुद्ध में उस बैंक या रेगुलेटेड एंटिटी के विरुद्ध में कार्रवाई होगी। कार्रवाई किस प्रकार से होगी, जैसा कि पीजी स्वामीनाथन जी ने भी आपको बताया, वो हमारे को उसके लिए ऐसा नहीं है कि हम उसको बैंक को बोलें कि हम आपका रजिस्ट्रेशन ही बंद कर देते हैं, लाइसेंस बंद कर देते हैं, ऐसा तो नहीं किया जा सकता, आप भी ये समझेंगे। लेकिन हम इसके लिए बहुत ज़्यादा गंभीर हैं और इस प्रकार की अगर कोई घटनाएं होती हैं तो उनको गंभीरता से लिया जाएगा। पहला आपका जो प्रश्न था वो था कि किस स्वरूप में जो बैंकिंग कंपनियां हैं और उन्होंने कई सारी अपनी सब्सिडरीज वगैरह बनाई हुई हैं, एनबीएफसीज हैं, इंश्योरेंस कंपनीज हैं, उसके बारे में एक मसौदा जो नियम का है, रेगुलेशंस का, वो हमने प्रकाशित किया है और उसके बारे में कई सारे सुझाव हमारे पास में, टिप्पणियां, सुझाव हमारे पास में आए हुए हैं, उनका हम अध्ययन कर रहे हैं। देखिए, जैसे मैंने आपको बताया, ये सब चीज़ों को हम ध्यान में रखते हुए उनके सुझावों को पूरा से गहनता से अध्ययन करने के बाद में ही कोई निर्णय लेंगे। मैं इतना ही इसके ऊपर मैं आपको बताना चाहूँगा कि अगर कोई कंपनी या बैंक एक और सब्सिडरी के मार्फत से वही बिजनेस, वही व्यापार करती है तो उससे जो है दो प्रकार की हमारे को समस्याएं सामने आती हैं। एक, कॉन्फ्लिक्ट ऑफ इंटरेस्ट रहेगा, क्योंकि वो सेम कंपनी है तो इस कंपनी में व्यापार हो या उसमें हो तो देर एक कॉन्फ्लिक्ट ऑफ इंटरेस्ट है। दूसरा जो इसके अंदर में समस्या है वो ये है कि एक रेगुलेटरी आर्बिट्राज है। बैंक्स एक अलग कानून के ढांचे में कार्य करते हैं, एनबीएफसीज एक अलग कानून के ढांचे में करते हैं, तो उसकी वजह से जो रिस्क्स हैं एनबीएफसीज के वो बैंक्स के ऊपर में न आए, इसके पीछे में ये जो हमने जो मसौदा प्रकाशित किया है उसके पीछे में ये है, ये उसके पीछे में विचार है। ये बात भी हमें ध्यान है कि कई सारी कंपनियां, कई सारे बैंक्स ऑलरेडी इसमें लेगेसी इश्यूज हैं, तो वो ऑलरेडी जो हैं उन्होंने इस प्रकार की कई सारे एनबीएफसीज, कंपनियां, सब्सिडरीज स्थापित की हुई हैं। तो उनके बारे में अब हमें क्या करना होगा, क्योंकि हमने ही उनको इस प्रकार की पहले अनुमति दी। तो अब इन सब चीज़ों को सोच करके और विचार करके किस प्रकार से हम आगे इसमें एक सब मिलजुल करके, ताकि लोगों के जो डिपॉजिटर्स हैं उनके भी ध्यान को, हित को ऊपर रखते हुए, और साथ ही साथ जो हमारे अन्य जो हितधारक हैं जिनमें बैंक भी सम्मिलित हैं, बैंक के ओनर्स सम्मिलित हैं, तो उनको सबको ध्यान में रखते हुए ही हम कोई कदम इसके बारे में लेंगे।
धन्यवाद सर। अब नेक्स्ट विल बी मिस्टर विश्वनाथ फ्रॉम NDTV Profit.
Good afternoon, Governor. Thank you so much, Minister. Governor Vishwanath Nair from NDTV Profit. Two things that made sort of a debut in your speech. First was the less restrictive monetary policy, which I think a lot of people expected a rate cut but weren't sure how long this is going to last. So I just want to understand from you, when you say that the MPC feels a less restrictive monetary policy is appropriate in the current juncture, is it limited to this policy, or are we talking about the next few quarters? And the other, second part which made a debut, and that's in continuation with these regulatory moves, is the cost of regulation, which I've never heard the RBI talk about. At least the RBI always talks about the need for regulation, not so much the cost for regulation. Yes. I just wanted to understand from you, so far a lot of my colleagues here have written about how the RBI is a no-nonsense regulator, sort of an iron fist type of regulator. Are we changing that face at all?
I can't talk, about the past. It will not be correct on my part, to sit on judgment. But I would certainly say that RBI as an institution has been able to, over the years, carry out the mandate that has been given to it. And I would also like to say that I do think that the cost of regulation may not have heard of it is a different thing. But I think back, consciously or unconsciously, I think consciously, this would certainly have been a factor in determining what, they are going to do. You may not have heard it, that's a different thing. So I can't say about that. But what one can see, having been outside the RBI and having interacted with the RBI, been on board of the RBI, is that certainly, all these factors are certainly, considered while making any regulation. So it's not only, about financial stability, it is also, about the cost at which, these things come in. I only made it very, very clear so that everyone is, assured about that. So this is one. And second, you said, whether this is policy only for this. Well, obviously, when we are keeping a neutral stance, and as was mentioned, the rationale for that is the tremendous uncertainties, that we are facing today. That does not call us, to change our stance. So our stance remains neutral. This less restrictive policy is only, for this particular MPC meeting, and not, going forward. This stance continues to be neutral. Thank you.
Thank you, sir. Next, we'll have Mr. Chris from FT.
Hi there. Thank you very much. I was wondering how concerned you are about the recent pressure on the rupee going forwards, and are you also worried about imported inflation?
Well, the rupee is the rate, that the rupee settles at is a function, of the demand and supply, number one. Number two, I would also like to say, that we should really, not be looking at, but that's, perhaps our job, and so we do it. We should not really be looking at, a day-to-day kind of a volatility. It is, more the long-term rate, that we should be looking at. And when I say this, I say this, not only for the rupee, but also for other asset classes, whether it is the Sensex or the Nifty, or whether, it is the gold prices or the asset prices. Day-to-day movements may not be, all that, important. As I mentioned, this was certainly factored in while deciding on the rate cut and the stance that we are maintaining. It was certainly factored in. That's one thing I would like to say. And the second thing is, of course, as you are aware, that a higher or a lower, or depreciated rupee certainly, puts pressure on inflation. But at the same time, global uncertainties are also, I think a higher worry, for us would be the global uncertainties as to how, that pans out. So global uncertainties even if the trade wars, the tariff trade wars were not to carry out, but just the uncertainty in itself is something which is worrisome, and that because that has direct impact on growth, that has direct impact on investment decisions, that has direct impact on consumption expenditure decisions, which get deferred. So let's keep in mind that and a lot of the appreciation of the dollar and the depreciation of the rupee is actually linked to this uncertainty. So this uncertainty being the underlying cause to a great extent of the dollar strengthening, rupee depreciation is not good for growth, and it's not good for imported inflation. So that is something which we all need to be cognizant about.
So that's the governor clearly indicating that with regards to where the rate cut cycle goes, the stance remains absolutely neutral. So in line with market expectations, to sum it up all, we have the MPC which has gone ahead and cut the repo rate by 25 basis points, and this is for the first time in nearly 5 years. In fact, the SDF rate shall be at 6%, and the marginal standing facility rate, that is the bank rate as well, that be at 6.5%. The previous one is at 6%. In terms of the press conference, the primary objective of the RBI Act is to focus on inflation. Secondly, the new liquidity coverage ratio that we're talking about, the norms that were announced, that will not be implemented before the 31st of March 2026. So that's an important one to watch out for. And clearly, with regards to where the rupee move goes, the governor is indicating that you should look at the long-term movement of the rupee. In fact, in terms of the key takeaways as well, if you see, the loans are expected to also get cheaper, and this is on the back of the 25 basis points rate cut. The stance has remained flexible, and RBI is cautious, watching global headwinds, and they've said inflation is easing, and they're acknowledging the slowing growth as well. So that's to sum up the overall. But how many more cuts are we going to see in the current financial year is going to be a key question from here on, because a lot of expectations are there could be another one, which is of a 25 basis points. If that happens, an overall 50 is what we should be watching out for in FY26 as a whole. But let's quickly slip into a short break. Lots more lined up on the other side on Profit Plusers. Please stay tuned to NDTV Profit.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI, इसके लिए सेंटर्स बनाए हैं।
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, business नहीं है इसमें। This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है शाहरुख खान.
You tweeted recently after President Trump won the election that can I make something for you?
तो एक तरह की खिचड़ी है जिसमें आप
Welcome back. You're watching Profit Buzzers. Let's quickly just look at what markets are doing as we speak. If we could just pull up Nifty 50 as well as Bank Nifty on the screens. You are seeing some bit of pressure that's coming in. 23,576 is where Nifty 50 is trading at. From the day's highest levels, we have seen some bit of profit booking that has come in. So clearly, it seems that the 25 basis points cut is something that the markets had already priced in as well to an extent. In terms of banking majors as well, let's just pull up Bank Nifty on the screens and then the PSU Bank Index very quickly. There you go. You have Bank Nifty as well, which is trading at the day's lowest levels. And you have the Nifty PSU Bank Index pretty much near there with cuts of almost 1% coming in there. So that's the overall market landscape that we are watching out for. But one stock that is in focus is a Cummins India on the back of earnings. Let's just quickly pull up the stock on the screens. You have the revenue and the profit numbers that have actually gone ahead and beat street estimates. In fact, the management is first speaking to NDTV. 2.7% is the kind of cut that we are seeing in terms of the stock price. But let's first welcome in Shweta Arya, Managing Director at Cummins India, to talk to us about what's worked, what's not worked. Shweta, good afternoon and welcome to the show. My first question coming to you is, in terms of the estimates, the revenue pad absolutely beat what the street was estimating. There has been a slight miss in terms of where the EBITDA margins are concerned. And what I understand is it's on the back of the product mix change that has happened. If you have to look at the numbers internally, is it in line with what you were expecting, or are there any deviations?
Line with what we were expecting. We were backed by strong domestic demand, and we were able to execute really well. So our power gen segment, industrial segment, aftermarket, in all of those spaces in which we operate in, we were able to execute well along with strong demand. We were able to see positive demand in the export segment as well. So this was in line with our expectations.
That's in the domestic market. How are you looking at the exports? Because the commentary does tell us that there was some bit of uncertainty with regards to global markets. And how soon are you expecting a recovery to come in on that front, and what's the growth expectation?
The export markets continue to be a mixed bag. We provide our products to various markets around the world. And since we operate in so many markets around the world, the geopolitical situation in different markets is different. We have seen positive moves in certain markets. However, with the new tariff changes that are expected to come in, we are now evaluating how they will impact each of these different regions globally. So at this point in time, we are evaluating. It's a wait and watch stage.
And with regards to your outlook on the demand, on the revenue and margin guidance, where does it stand for the fourth quarter as well as for FY26?
For the fourth quarter, for the full financial year this year, we maintain that we will see double-digit growth in our revenue. And for the next financial year, we see positive domestic demand. We see our exports also showing some positive moves, although it is a wait-and-watch situation because of the tariffs. Our endeavor will be to maintain double-digit growth in the next financial year as well.
Okay. And with regards to the pricing dynamics, that is something that the street was watching out for as well on the CPCB 4+ engine market, right? What would you have to add?
We are watching the pricing in the market. All the competition has launched their products. Our product is very well accepted in the market. It's a big technological shift for the market, and our product has been very well received. There's a lot of reliability we have been able to demonstrate. We continue to watch the price. Our belief is that it will take a quarter or two for the pricing to settle in the market because the content for the product has changed, and this is a big technology shift. It will take some time for the price to settle.
And which segment, Shweta, are going to be growth drivers? Because a lot of chatter that's happening that this power generation demand is going to be led from data centers as well, of the big tech majors that are coming up. How big a segment is this going to be from here on?
For our power generation segment, data centers continues to be a demand driver. So does the mission critical power segment, the segment which requires power for applications which are like hospitals and others. So that demand continues. Commercial reality as a segment in the power generation space continues to show steady demand. On the other hand, our industrial market as well, where mining or rail with infrastructure spent in the country, capital expenditure that happens in these spaces, we will continue to see demand.
And what is the kind of outlook with regards to where capacity addition goes?
So the capacity addition for us, we have our projects lined up. We continue to invest in manufacturing capability to upgrade our manufacturing facilities, to get a new technology in our plants. We have scale from where we provide products for the domestic market as well as export. And as I mentioned, we will continue to see domestic demand grow. So to fulfill the demand, as well as to continuously upgrade our manufacturing facility, we have outlaid projects and we will see CapEx coming in for those projects and for helping us fulfill our demand for our consumers.
And what's the kind of CapEx that you're lining up, if you could quantify that for us?
This is mostly sustenance CapEx for our plants. There are a variety of projects that are getting launched. I won't be able to give you a number, but with a large number of projects that are coming up.
Okay. That we are with the CapEx aspect of it, Shweta. From the recent budget announcement on the CapEx plans, do you think the government CapEx spend that is going to come in is a welcome move according to you? And in tandem to that, do you think private CapEx will then pick up as well?
So the government has laid out 11.2 lakh crores investment. And we see that is a positive move towards the infrastructure growth that the government has been talking about towards building a Viksit Bharat. We believe that also the push towards clean technology manufacturing, the national manufacturing mission launch, and then the credit guarantees to the MSMEs that have been laid out in the budget. These will bolster demand in the market. So our belief is that it will be positive for boosting domestic demand in the market.
Right. And when you talk about the US policy as well, how big an impact are you expecting in terms of business?
So the US policy and the tariff changes that have been announced globally do impact the supply chain for Cummins Inc. Relatively for Cummins India business, the impact is lesser because our supply chain is largely localized. And we also serve a large variety of segments. So while I say that, the tariff changes, we will have to evaluate the impact because they can lead to higher inflation, they can lead to higher regulatory scrutiny, and that can impact demand as well as margins. On the other hand, it can also be positive for exports out of India. So it needs to be evaluated further. We need to wait and watch. We believe that with a very strong local supply chain, the diverse segments that we serve in domestic markets as well as exports, we will be able to navigate these challenges. The challenges do remain, however.
Right. So, Shweta, my question coming to you is, we're talking about a double-digit growth coming in at least in terms of this year, as well as that's the ambition for FY26 as well. Take into consideration probably things don't work in our favor, right? Then what's the bare minimum that you could see? Because I think even Cummins Inc. has clearly categorically come out and said that they are projecting total revenue, including the JVs, to increase 10% in 2020 for them itself. So overall, with all the challenges, if they come in, is 10% the bare minimum? And if everything goes well, you could outmaster that number? Or is that a concern? I mean, how are you looking at that 10% number?
Our endeavor is to maintain the double-digit growth outlook. And with the segments in which we operate, the power gen, the industrial, the aftermarket, based on what we see from a demand perspective and the infrastructure spend in the country, we maintain the outlook on double-digit growth.
Right. All right, Shweta. Thank you so much for speaking to us at NDTV Profit. So that's the management of Cummins India, clearly categorically maintaining that endeavor of a 10% double-digit growth that even the global management also indicated with regards to where the India arm goes. The stock has recovered slightly from the day's lowest levels, but the pressure does continue. Cuts of around 2.8% coming in there. But shifting focus and coming back to the MPC, the post-presser policy, my colleague Vishwanathan Nair asked the governor about the regulators' less restrictive stance as well as the cost of regulation. Here's what he had to say. Please listen in.
Two things that made sort of a debut in your speech. First was the less restrictive monetary policy, which I think a lot of people expected a rate cut but weren't sure how long this is going to last. So I just want to understand from you, when you say that the MPC feels a less restrictive monetary policy is appropriate in the current juncture, is it limited to this policy or are we talking about the next few quarters? And the other, second part which made a debut, and that's in continuation with these regulatory moves, is the cost of regulation, which I've never heard the RBI talk about. At least the RBI always talks about the need for regulation, not so much the cost for regulation. Yes. I just wanted to understand from you, so far a lot of my colleagues here have written about how the RBI is a no-nonsense regulator, sort of an iron fist type of regulator. Are we changing that face at all?
No, I can't talk, about the past. It will not be correct on my part, to sit on judgment. But I would certainly say that RBI as an institution has been able to, over the years, carry out the mandate that has been given to it. And I would also like to say that I do think that the cost of regulation may not have heard of it is a different thing. But I think back, consciously or unconsciously, I think consciously, this would certainly have been a factor in determining what, they are going to do. You may not have heard it, that's a different thing. So I can't say about that. But what one can see, having been outside the RBI and having interacted with the RBI, been on board of the RBI, is that certainly, all these factors are certainly, considered while making any regulation. So it's not only, about financial stability, it is also, about the cost at which, these things come in. I only made it very, very clear so that everyone is, assured about that. So this is one. And second, you said, whether this is policy only for this. Well, obviously, when we are keeping a neutral stance, and as was mentioned, the rationale for that is the tremendous uncertainties, that we are facing today. That does not call us, to change our stance. So our stance remains neutral. This less restrictive policy is only, for this particular MPC meeting, and not, going forward. This stance continues to be neutral.
Right. So that's the RBI governor. But let's just also get in Vishwanath, who's our banking editor, to actually give us a sum up of the key highlights of the policy. Vishy, over to you.
All right, so policy as expected, but still resulted in a lot of smiles. Of course, the RBI governor, in his maiden monetary policy speech, Sanjay Malhotra, has delivered a 25 basis point rate cut. This was widely expected by most economists who were polled across the country. 25 basis point rate cut, while this is an initial sort of a move towards an easing cycle, what stood out was more important, the statement that he made towards the end of his speech, where he said that the MPC felt that there was a need for a less restrictive monetary policy because that is what the economy needed. As far as the growth and inflation outlook are concerned, largely the same, but says some minor changes. Your GDP growth for FY26 is pegged at 6.7%. This is on the upper end of the government's own sort of estimate of 6.3 to 6.8% GDP growth for the next financial year. Similarly, on inflation, yes, it is coming within the 4% band. It's not still below 4%, but those are all healthy signs. According to the RBI governor, food inflation is showing signs of moderation, and unless there is some kind of major sort of supply side issue, food inflation will likely continue to moderate. It is important, of course, to also look at how the RBI governor is playing up the issues with respect to global uncertainty. So yes, there is a global macroeconomic uncertainty. Secondly, trade policies are uncertain at this point in time, and material weather changes. These are all key risks which could affect future monetary policy, growth and inflation outlook. So that's something that the RBI governor is keen to point out to the rest of the system. Overall, while he maintained what was widely expected in the monetary policy, one statement that he made apart from this also caught my eye, which was when he said that regulations are not devoid of costs. So that was an important sort of message that is coming in. That the RBI governor is recognizing that yes, for financial stability and for orderly functioning of the financial system, good regulations are essential, but regulations are not devoid of cost, and therefore the RBI will keep that factor in mind for future drafting of regulations. Remember that regulations around liquidity coverage, regulations around project financing, regulators around expected credit loss framework for the banks, all of these are pending finality at this stage, and all lenders in the system are awaiting the RBI's green signal on when these rules will come into play and what is the final form that they will take when they do come into play. So those are all key issues that the RBI governor has covered in his maiden speech. Over on to 12 o'clock, when the RBI governor will address the press, we'll probably get to ask some questions to him then.
Right, so I think that was just a recorded toss coming in from Vishy just ahead of the press conference, and hence he's alluding to the press conference in this one as well, but to be noted. But moving from there on, another important announcement that did come in from the RBI today is with regards to the launch of the exclusive bank.in domain to tackle financial frauds. Now, what would this do is that the banks will have to change their internet domain name to bank.in. The reason for this is mainly to strengthen the security further. They will extend the additional factor of authentication for digital payments to online international transactions involving offshore merchants. In fact, what they've said is that the Reserve Bank shall implement the bank.in exclusive internet domain for Indian banks, adding that the initiative will take effect from April 2025, and it will aim to help customers differentiate between legitimate banking websites and fraudulent ones. Additionally, a fin.in domain will be introduced as well for the broader financial sector. So that's the overall landscape in terms of the additional announcements. But now, the key is, how does this impact the markets and which participants get impacted with regards to the RBI rate cut? I have my colleague Harsh who's joining us to tell us about the specific stocks that could get impacted in the wake of the rate cut. Harsh, over to you.
Well, thanks so much for that, Hiral. Three pillars in which I'm going to break this down into. One, lower loan rates and EMIs. So that's the first part of it. Lower loan rates, what is the impact of that on lenders? That's the first part of it. The second part of it is the rupee might see some bit of weakening, if at all, and therefore export-facing sectors may well benefit. And the third part of this is to spur consumption, because EMIs will likely come down as a result of the rate cut, and therefore bringing a bit of a smile to consumers as well. I want to first start off with the lenders. NBFCs in particular, they will see the repo-linked borrowings that they take from the market, the cost of that will fall, and therefore will aid margins to the tune of loan rates not getting adjusted, and basically those rates not getting passed on to borrowers. So to that extent, margins will get better and a straight flow through to ROA. So cheer with regard to where lenders is concerned. It's a positive impact for them. Just pulling out some names. M&M Financial, the PBT impact of this is roughly 2.8% as per Morgan Stanley estimates. Stock is already moved 5% plus in the last week or thereabouts. SBI Cards, again 5% move on the stock over the last week, 2.6% PBT impact as a result of this. Manappuram, 2.5% again in PBT impact, and the stock has moved up 4% as a result of this. Those are three big impact names On the negative side though, because there is more floating rate borrowing and more fixed rate lending which has happened, you might see some bit of reduction when it comes to margins, and therefore you have an LIC housing 7% negative impact on PBT, PNB housing 2.5% negative impact on PBT as a result of this 25 basis point rate cut, and Canfin Homes 2.3% again PBT impact, and you might see those start to flow through as early as Q4 partly and Q1 FY26. They will get, these are some of the stocks which will get impacted. For banks, marginally negative in the near term because margins will come off, but positive in the medium term. So you'll see banks ROAs getting slightly impacted, anything between 5 to 10 basis point impact, because margins will get hit, and therefore you might see around a 5 basis point impact on ROA for most banks. Now in terms of currency, export facing names, you might want to keep that on your radar. IT stocks, pharma stocks, and some auto stocks, something like a Sona BLW gets 40% of its revenue from North America, Samvardhana from US, China 29%, and JK Tyre 16% of its revenues come from export. Outside of that, even Balkrishna Industries and Polycab may well see some bit of positive impact as a result of this. Last off, consumption theme may well benefit a little bit more as a result of the rate cut that has come through.
Right, thanks Harsh for getting us the details. So that's the kind of impact that we could see in terms of stocks. But we just have a Kotak which has come out with their report as well on the RBI MPC. What they've said is that the focus is now back on growth as inflation will gradually move towards the target. That is what they're indicating. And they're expecting the rate cut cycle to remain absolutely shallow. Another 25 to 50 basis point rate cut is likely. And they've reiterated that, they've said that the RBI has actually reiterated its commitment to provide sufficient system liquidity. That's what is coming out from Kotak as well. So overall, if you see in terms of the markets, there is that slight bit of pressure that has continued to build in as well. But let's quickly hear out a score of experts and analysts what they had to say on the back of the rate cut. All of the guests who we spoke to as well during the policy.
So our expectation is that we will see growth actually not pick up as optimistically as what the RBI is expecting. We're looking at about a 6.4% GDP growth rate. I think it's going to be like quite a difficult operating environment. We know the challenges about exports, but of course, exports aren't that key economic driver for India. It's more about what's happening domestically. And I think 125 basis point cut doesn't materially change the game at this point. Sure, we do have a bit more fiscal support coming on board, particularly from April, around those adjustments for middle income households. But I think it's still going to be a challenging environment as well. And I think one thing and one area that, we don't pay enough attention to as we should is that, labor supply overseas and that flow through to remittances and then that impact on private consumption. If we do see a material pullback in labor supply of overseas workers in the US, then that could actually flow through to a weaker consumption picture as well in India. And of course, consumption is such a critical driver of the economy. So I think that's a risk that is quite frankly, flying under the radar at this point that we need to pay really close attention to. And I think in terms of how much more the RBI is going to move, I don't think we're going to see as much movement as what we've seen from other central banks like the ECB, the Fed, the Bank of England. I think they're going to tread a lot more carefully because the one complicating factor for the RBI when it comes to easing policy that these other central banks don't have as much is around the currency. And because we do have such a weak rupee, that potential flow through to imported inflation is a concern. And I think one thing as well that we need to keep a close watch on is, energy prices are low at the moment, but if we do get a resurgence at the same time that the rupee is extremely weak, then that's going to be particularly troublesome for an economy like India. So I think we're not going to see much more cuts. I think it's going to be a shallow easing cycle this year, which really does limit the revival in domestic demand that we will see as a consequence of that.
We're penciling in one more rate cut. That's what we were penciling in before today as well. Quite frankly, if we were to be looking at two more rate cuts, then I think they would have changed the stance to accommodative. I'm not sure they would have continued with a neutral stance if they were going to be considering two rate cuts going forward. And that's why I think sticking with a neutral stance makes sense in this situation where if you're only going to cut rates one more time, why would you have moved to accommodative? And I know I said it before, I'm going to say it again, the focus on the upside risk to inflation, I think that's another hint that they're not looking at too many rate cuts going ahead.
If you really look at the MPC policy, when we said flexible inflation targeting policy, that was supposed to be flexible. That doesn't mean that we have to go to 4. If your real rate is too high, even at 5%, if the real rate is too high and the growth is struggling, you have room to cut rate, and which is what they have done this time around. And that's why I actually look at it, there is more scope, because if you look at their, and one more thing he also said is forward looking, right? So if you look at their inflation projection for the next year, and if nothing changes in April policies, we can actually see, further rate cut because even at 6th quarter, and if you look at the projection of around 4.2, we are at 2%, almost 2% real rate, right? And therefore, there is enough room to cut that rate and no need to wait for 4% to come through.
I still believe that going forward, the rates cut are embedded. They will come. But looking at US scenario, how the rate scenario is panning out, where it's believed that they will hold for some more time. And similarly, even the Bank of England spoke yesterday. So we will have to look at a global perspective as well. And looking at that, keeping the neutral stance, and then probably taking a better call in April would be more prudent. And I believe that at least 2 rate cuts are more there in the policy stance in next 1 year.
Right, so that's the key commentary and the reactions that are coming up. But very quickly, let me just pull up 3 stocks: Federal Bank, IndusInd Bank, and an Axis Bank. And these are the ones which are reacting positively on the back of the draft LCR guidelines that are unlikely to be implemented before the 31st of March 2026. Positive for all these 3 names. So watch out for these counters. And very lastly, if you talk about the ECL and draft project financing norms, they are also unlikely to be implemented soon, at least a year away. It is still only a discussion paper and not even a draft, on the back of which you have PSU banks which are in focus, REC, PFC and IRDA. Let's pull up PFC, REC and IRDA as well. These are the 3 stocks. IRDA, to the extent, almost all of them are trading near the day's highest level. So these are a few of the other reactions that we should be watching out for as well. But let's quickly slip into a short break. On the other side, we'll be joined by the management of Thermax to talk about their 3rd quarter performance. Please stay tuned.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI, इसके लिए सेंटर्स बनाए हैं।
Sources tell
NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits.
Welcome back. You're watching Profit Buzzers. Let's just quickly look at a VST Industries, an interesting number because the revenues have just grown around 0.5% to 1% at 367 crores. A good spike coming in terms of the stock, and that's because the profit number has been spectacular. 136 odd crores versus I think 53 odd crores. So almost a 3 times number is what you're seeing in terms of the profit number, and that's the reason why you're seeing this kind of a spike with regards to where VST Industries is concerned. So an interesting counter to watch out for from here on. But staying with the earnings, you have Thermax as well, which has reported numbers. Let's just quickly pull up that stock on the screens and see what's happened. The profits have actually dropped by around 51%. Revenues have gone up, margins have taken a hit. Still, you do see the stock which is trading in the positive with gains of around 2.4% coming in there. In fact, we at NDTV did speak to the management as well. You have Ashish Bhandari, who's the Managing Director and CEO at Thermax. Let's listen out to what he had to say.
Forgetful quarter for sure. And we finished below my expectations, some surprises, you could say. Some things that we could have done better. I think if there was any good news, to me it was that there wasn't a structural miss, so to say, and I expect a very good Q4. And I've got 3 reasons for that. First, on the revenue side, we missed more than 500 crores of revenue, which was relatively profitable, had more than 10% profitability, more than 60 crores sitting out there that we could not ship in the last 2 weeks of the quarter. Variety of different reasons, but bottom line, we did miss. We recovered that in January pretty quickly. which showed it wasn't a structural shift. And then this quarter, we're just monitoring it week to week to make sure that there are no slips on what happens on the revenue side. Second, on the projects bit, which is where we have had fair bit of pain through the year. Two of our worst projects, or two portions of our worst projects, went through their worst portions in this last quarter. One was FGD, where one particular FGD project, which was the earliest one we had taken, finally went through its final bit. So it had a load of losses that got reconciled at the end. And bio-CNG, which is a growth sector for us, but with a lot of learning, where a lot of that learning is over. There may still be some pain, but that pain won't be as bad as what we went through last quarter. And finally, on the orders side, there are two parts to the orders side. Yeah, one, you will see industrial products, which is the relatively profitable part of Thermax. There we grew our orders by 40%. And overall, the backlog there has grown quite well. The portion which is less profitable, which is the government projects, which are typically large, we didn't get anything in the last quarter. Yeah, and we were okay to not bid on less profitable projects and work the business towards a better margin profile long term. So some of that impact we saw. But I think even there, I expect better times ahead, because our pipeline of big projects now has also grown quite substantially.
Noted. Okay, so well, all the best for the good Q4. Does the the opinion around what the budget does for capex is divided, if you will, Ashish? The headline numbers on that day seemed disappointing, and then we had a series of people who came in and said that if you couple the number which has been kept steady, or a 10% growth versus the revised base, plus the grants being given to states for the numbers, then the actual number is not bad on that base. Because you call a spade, I would love to know how you thought about those numbers and on what the government has done in the budget.
I think they've taken a very sensible path forward. Ultimately, for us to grow, private capex is the one that needs to come in. And for private capex, the simple fact is demand. And how do you help demand, both domestically and internationally? I think that is the focus. Actually, I would have liked to see more on the international support, especially when the rupee is now better positioned. The US will go through an interesting portion. This is a time to perhaps give boost to exports on many different fronts. I think would have liked to see more out there, but otherwise a sensible budget. And even
that's the management of Thermax. But quickly, M&M numbers are out as we speak. In terms of the profit, 2,960 odd crores. The expectation was 2,921. So it seems pretty much in line in terms of the profit number. Let's quickly just look at the revenue number as well. The expectation was around 30,837 crores. The number has come in at 30,964 crores. And these are standalone numbers that we are watching out for in terms of where M&M goes. The profit number above the estimate by around 40 crores odd, so you can call it somewhere in line. But I'll wait for Puneet to join us and let us know as to what he was expecting versus what has come in. In terms of the revenue, 3837 was the expectation. 3964 is where that number has come in at come as well. The key things that you were watching out for in terms of the clear margin number was an expansion of around 160 basis points at 14.4%. But let's see what that margin number calculation comes up to be. And the expected EBITDA was around 4,451 odd crores. There is a slight bit of a slip that's happening in terms of the stock price, a correction there. Pretty much flat now. It's going to be interesting to see if it slips into the negative, because all eyes have been on this one. If you talk about the PV sales in the third quarter, they were up around 19%. Farm equipment sales were up around 19% as well. And the key highlight and the commentary that the street will be watching out for will be, and what happened in this quarter was the launch of the BE6 and the XEV9. And the highest volume growth is what they had seen in the industry as well. But overall, in terms of the key number, 30,964 is what we're picking up. The EBITDA has come in at 4,810 crores, which is also above street expectations of around 4,459 crores. So in terms of the top line, a marginal beat on that front. Bottom line as well, a good number that we are picking up so far. Profit of 2,964 is the number versus an expectation of 2,921. And if you see in terms of the volumes, the highest volume growth is what M&M has seen as well during the quarter. 4,810 is what we are watching out for in terms of the EBITDA as well versus the estimate. Margins have come in at 15.5%. The expectation was 14.4. So again, that number is above what the street was estimating. Let's just quickly pull up the stock. It's now up around 0.7 to 0.8%. So after that sharp dip, but it still doesn't seem to have come up, because 3,198 was the day's high on a M&M currently, and then the lowest 3,119. We are close to 3,152, 160. Slight up move that could come in as well. In terms of the key things that we should be watching out for was the order bookings for EVs and demand outlook for tractors. So that commentary will be interesting to watch out for from the management presser as well. And Nuvama had indicated a robust revenue growth, which was mainly supported by the increase in volumes, and the realizations were also expected to be better this time around. So any number in terms of the realization from the press conference will be watched out for. And the margins in the tractor segment is what is supporting as well this time around. So that's the overall number that you are watching out for in terms of where M&M goes. The numbers are above the street estimates, at least in terms of the net profit and the revenue is in line, and that's the stance coming in from Puneet, who's tracking the auto space pretty closely. But overall, if you see PV sales up 3% in the quarter, have been up around 19%. Farm equipment sales have also grown by around 19%. So profit revenue in line, and I think that's what the street is not really reacting to. Margins have seen a good surprise on the upside. 14.4% was what the street was estimating. It's come in a little above 15%. I think 15.5 is what we're tracking. Sorry, the EBITDA margin has now been corrected to 14.4. So that also is in line with what the street was estimating. So all three numbers in line, and that's the reason why you're seeing a pretty flattish move in terms of where M&M is concerned. In fact, my colleague Puneet will be joining us shortly. Puneet, the key numbers, what is your take? Because it seems across parameters, the numbers are in line with estimates.
Yes, Hiral, definitely. It's bang in line with estimates, and we had the sales figures already that we had discussed earlier on also while giving the preview. But these numbers have come in bang in line. So revenue coming in at roughly about 30,538 odd crores. That was versus estimates of about 30,837 crores. So very, very close in line. EBITDA margins have come in at 14.4%, and it was estimated to be exactly that same number. So that's another key positive. And the net profit has come in at 2,964 crores. Estimate was of 2,920 crores. So again, another key figure, and as you rightly said, all three numbers have come bang in line. The other one aspect is that the change in inventory number, while every quarter for an auto company it is variable and changing, that's coming at 1,332 crores in this particular quarter versus the same time last year it was 308 crores. So it has had an impact, but I think this was factored into this particular quarter because there was a build up in terms of the finished good inventory as well as this thing for the company, because it has been growing at an exponential pace which has been outpacing the industry growth as well. So apart from that, I think that's one of the key numbers. And we mentioned the sales figures. So passenger cars in this particular quarter had grown by roughly about 19%, and they've come at roughly 1,42,000, while the farm equipment sales have also grown at a similar percentage of 18%, coming in at roughly 1,21,000. So overall, it is the results are in line with all the numbers and the estimates that we have had. So it's a big beat. We should see the stock reacting positively at it. So we also have the media briefing today at 2:30 in the afternoon. So we'll see more comments, especially for the electric vehicle aspect, because they've announced the launch of the same, and the bookings start from the 14th of Feb for both the BE6 as well as the XCV 9e. But overall, here it's a beat on most parameters. It's come in line with all the estimates at this particular quarter.
Thank you, Puneet, for getting us the details. Let's us also get across to Avinash Guraksakar. Avinash, your first read in terms of the numbers. Puneet does tell us across parameters, it seems the net profit revenue and the margin front, the numbers are absolutely in line with what the street was estimating.
Yeah, I think numbers are in line. I think both on the top line front as well as on the EBITDA margin front. I think what is promising is that both the passenger car business and the farm equipment business has shown strong volume growth. And I think now going forward, markets would like to await what is the management commentary, especially on the electric vehicle product segment, where several new products have been launched by the company. So I think in all, the markets are satisfied that, despite the challenging period for the auto sector, I think numbers have come in much better than the street expectations. And hopefully, the fourth quarter will also be equally good, typically because the Jan to March quarter is always considered to be a bumper quarter for auto companies. So I think net, the stock should react positively on these numbers.
I hope I'm audible to you. I just had one question. How are you seeing, the current market in this particular aspect? Because we are seeing M&M coming in line with estimates, and Maruti had also done well. How do you see the current move by, the income tax also has been, been one of the key aspects that up to 12 lakhs there will be no income tax. Do you see M&M being one of the clear beneficiaries, or do you see, car makers like Maruti as well as Hyundai who have a smaller car portfolio as well to be larger beneficiaries of this income tax benefit?
No, I think, the reduction in tax for people who have got income up to 12 lakh rupees is not going to drive, vehicle sales in the luxury or the higher end categories. Typically, I would say that, this kind of benefit is largely going to be enjoyed by the two-wheeler kind of companies, because where the ticket size is much less. So the tax cut for people earning up to 12 lakh rupees is not going to be significantly impacting demand for the luxury vehicle. But still, I would believe that, these are aspirational kind of, vehicles which most customers always migrate from a lower end vehicle. So, definitely in the medium to long term, demand, in the luxury segment will also grow. But specifically, what the budget has done is going to spur demand, especially in low ticket two-wheeler kind of products, where the mass market is a very huge market. I don't think that's going to be a market where Mahindra and Mahindra will obviously get a major share out of this.
Right. So Avinash, overall, when you talk about the EV segment as well, the kind of launches that they've come up with, at least in the third quarter, they were one of the best, in fact, the highest clocking in terms of sales. How are you seeing the trajectory with regards to market share?
No, I think, clearly Mahindra has invested a lot of capital on technology, on product development on the electric vehicle sector. And I think clearly, it's going to be a matter of time. The market is competitive, but I think, if the product is priced competitively, if the product is actually does pretty well on the road, then I think gradually, electric vehicles for Mahindra and Mahindra are going to be a clear focus area. The management has also mentioned very clearly that they're going to invest a lot of time and money on this segment, because this is one segment where they believe that over the next, say, 3 to 5 years, growth could be quite significant. But I think it's going to be a slow kind of, progress and a slow wait. So we'll have to wait how the new products which have been launched actually do and how they are accepted, by the customers. But I think looking at the ground reality and the ground kind of feedback, these products definitely seem to be much better than competition. So I think it's, going to be a couple of quarters before we get to know how successful Mahindra will be in the EV space.
And Avinash, I just had one question, on the compact SUV space as a whole. We have seen that roughly from 6 lakh to 15 lakh, that segment has been growing very well. Now, M&M had introduced the 3XO in May of 2024, and that has been driving the growth along with the Thar. Do you see any kind of benefit or, further launches also in this particular core category? Because you've seen competition from Hyundai as well with the Exter and the Venue, and Maruti, of course, has a plethora of products between the 6 to 10 lakh range. Any kind of outlook do you have in this particular segment of compact SUVs?
No, I think, Mahindra will definitely like to consolidate its market share. But I think, as you rightly mentioned, there are many products available in this segment. So competition is also equally fierce. And, obviously, getting the right volume share in this segment is very important, because margins are going to come under pressure because almost every manufacturer is trying to bite into this segment. So my sense is, yes, I think this is a growing market, a growing segment where customers get value for money. But I think you'll have to wait and watch as to what kind of pricing Mahindra gives for the vehicle, because, that is going to finally decide what kind of volume growth they can expect here.
Right, Avinash, when you talk about pricing as well, at least with regards to the EV, it's on the higher end from what they've announced yesterday. Do you think that will be a deterrent? And if so, what would be your call? What would you advise investors to do with an M&M?
So I think on a medium term to long term basis, we have been advising our clients to accumulate Mahindra & Mahindra. See, as a diversified player both on the farm equipment and the passenger car segment, Mahindra has positioned itself pretty well. Most importantly, in the electric vehicle space, they've been taking a very conscious and a very cautious kind of approach. But as you rightly said, EVs are not going to drive the growth immediately. It will take at least a couple of years before they get a decent market share. And I think unless and until the government also announces some major tax relief, some incentives, customers are also a little wary of buying electric vehicles because the initial capital cost is quite high. So my sense is, the initial ICE products only will drive the volume growth initially. And of course, depending on how markets take these electric vehicles, because unless and until we see some moderation in prices, only then the volumes will grow. Until then, it's going to be a very niche market where I think, margins could come in, but I think volumes will still take a long time.
Right. So overall, that's going to be an interesting move with regards to M&M. But now if you see the stock, uptick of around 2% coming in there. So yes, a positive reaction in terms of the stock price. If you see in the last 6 months as well, 19 to 20% is the kind of returns that we've seen. But yes, it's been a pretty volatile ride for the counter. Almost, a multi-bagger in the making, because 86% is the kind of returns that we've seen in the last 1 year as well with regards to where M&M goes. But completely out of time with that, it's a wrap on this edition of Profit Buzzers. Lots more lineup on the other side. Please stay tuned to NDTV Profit.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए।
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, business नहीं है इसमें। This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for, President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है, शाहरुख खान।
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप
Hello and welcome to NDTV Profit. My name is Meeka Barve and we're now in conversation with Motherson Sumi Wiring India, and to talk about the quarter gone by and what lies ahead of the company, we're joined by Mr. Mahendra Chhabra, the CFO of the company, and Mr. Anurag Gahlot, the COO at Motherson Sumi Wiring. Welcome to the show. First up, Q3 numbers were impacted by the greenfield related setup costs. So till when are these costs expected to stay, and when do we expect them to inch up higher in the coming quarters?
Okay, thank you for taking us on NDTV. As we have given in our press release also that our Q3 revenue has grown by 9%, whereas market has grown by around 3%. So we have outpaced the market also. And we have also given that these three new greenfield, there are the cost, which are the ramp up cost, which has expensed upfront into the system, and there is a timeline also when the SOP is going to start into these three new greenfields. In the Pune, if you have seen that Q2 and Q4 is the ramp up, whereas the other two, where we are talking about Navagam and Kharkhoda, is going to be in Q1 as well as in the Q2 FY26. So these ramp up costs are really associated with the directly related to the SOP, the start of production into these location. So I think it will be in the coming next 2 to 3 quarters, this is going to start, and then it will get normalized accordingly.
And so the FY25 capex guidance was at 200 crores. H1 95 to 100 crores was spent. What has been the capex this quarter, and is there change to the guidance?
Yeah, so capex plan for the financial year was 200 crores. So far, we have spent about 135 odd crores, and we plan to stay within the budgeted capex of 200 crores. So we should be within that 200 crores for the year.
Got it. And in terms of the timeline or of expectations for the Kharkhoda plant as well as the Navagam plant that you've been investing in, when is this going to come on stream?
I think this is already given into the timeline when the SOP is going to start, and SOP ramp up takes a little bit of time in line to the what customer is given their schedules or given their volumes, they are according to that. But once the SOP start, I think between 8 to 10 weeks you will see that these ramp up happen quite well.
Got it. And once the ramp up happens in terms of your revenue potential and expectation from the coming three plants, where does it stand up, and what financial year can we see that actually coming in?
The figure we have given of 2100 crore is on annualized basis. So we can see that it has started from Q2 of FY25 and then spreading up to the Q2 of FY26. So we can calculate that cycle. Maybe in the next, after that, in the next 12 months, you can see that realization of that sales completely, subject to if customer is making what they are forecasted to us, the volumes they have forecasted to us.
Got it. So I want to come to your EV revenues. What was the share of EV revenues as a part of total sales in Q3 as well as 9 months? And do we expect this to, where can we expect this to go over in the next 2 years?
EV sales share is approximately remain between 3 to 4% in that. And it all depends what customer is going to make. It's all subject to that. You must have seen that there are new launches in the country in last 2 quarters, and they are on the both powertrains, ICE and EV both. So in case they are making the EV the volume they are forecasted, then this share will sales share will increase accordingly.
Got it. And in the high voltage wiring harness is a part of your EV revenues. Is this a high or a low margin business? We wanted to know more about this segment.
It's difficult to say, to quantify the margins on the business wise on EV or on the ICE. Idea is that, when you start when you take the business of either EV or ICE, you have to understand that in a vehicle, the EV goes into the engine area, and in the room area, it remains as similar as ICE. So there are low voltage harness also involved into this, and high voltage goes into your engine area. So there is a lot of imported component also getting involved at this point in time into the engine area, whereas the high voltage is involved because they have to carry high current. But in low voltage, it is remain the similar harnesses. So, but it's difficult to quantify separately that how much margins will be in the EV or in the ICE models.
Fair enough, sir. And what has been the outlook on commodities, especially for copper, and what's the timeline for the company to pass this on to the customers?
Yeah. So for copper, we have a pass-through arrangement with our customers. With some customers, we recover this at a quarterly lag, whereas for the others, it is at a half-yearly lag. So over a period of quarter to half year, we recover this from our customers, and there is no impact as such on the P&L.
Got it. And in terms of volumes, has it been faster than the industry? What's your market share been like?
We are a company who doesn't follow, market share of business. But you must have seen that in the today's newspaper also, one of the very esteemed OEMs has launched their vehicles, and we are also part of that, and our name was also there. So there are, a lot of new launches are happening, and we have also given in our presentation that these are the new models which are coming into the market. They are not replacement of any of the vehicle, or they are not a mid-year updates. So we are winning the new businesses which are very new models and coming into the market in next few quarters also. So you can understand from that.
So I'm actually glad you mentioned the capacities for the new models, because that was my next question. Now you mentioned you're the preferred supplier for something like a Maruti Suzuki, Mahindra and Tata Motors. Is this both for EV as well as ICE, or is there more focus on a specific segment?
No, this is for both ICE and EV, and I tell you, we are a engine agnostic organization. Anything comes tomorrow, we talk about CNG, which is we are already doing that. Anything coming in the future like hydrogen or whatever, we will be definitely be the part of the beautiful journey of these OEMs.
Right. And so lastly, in terms, I just want to ask you about your volumes. Passenger vehicles, we did see an 8% quarter-on-quarter drop. In terms of your revenue segments when it comes to PVs or CVs or two-wheelers, could you give us a short update on what's your outlook like going ahead?
You are just looking into a 1 quarter, but if you see in a 9-month basis, you will find that there is a growth there. PV is obviously a single digit, but two-wheeler is in the double digit numbers, and MSWIL is also growing. They're outpacing the market because of the content as well as from the volumes. And you have to understand that a lot of OEMs has already announced their expansion plans, and they are doing expansion. And MSWIL is also aligned with their expansion, and that's what the 3 greenfield projects are there. So I think there is a whole lot of positivity into the market, and it's a cyclic only. So once it start picking up, we are just getting future ready for our customers, so that whenever they are asking, we are 29 plants across India. So if any customer is asking anything from anywhere, we are available to the doorstep.
Well, that was the management of Motherson Sumi Wiring talking about the outlook going ahead. But on to another earnings conversation. We have REC, which reported a strong set of numbers in the quarter gone by. And we spoke to the chairman and managing director of the company, Vivek Kumar Devangan, on what aided growth and more. Do listen in.
We are expecting that all reversals would be completed by December 2025. Okay. After only those assets which are under liquidation, some amount will come, some reversal will happen. But after December 25, reversal will not happen. But that would be offset by the kind of disbursement we are having. Our loan book will increase substantially. That will offset actually all the interest income actually. As you might have noticed that our disbursement was the highest ever in Q3 to the tune of 54,492 crore. And as we are talking, our total disbursement has already crossed 1,60,000 crore. Last entire year total disbursement was 1,61,000 crore. So this year we are expecting that our disbursement will cross 1,90,000 crore, or it may even cross 2 lakh crore. And what had happened that in Q3 some prepayment and some repayment had happened. Our loan book had grown by 14%, but in Q4 we are expecting that our loan book will increase by 15 to 17%, and we are quite confident that our asset under management will be doubled to about 10 lakh crore by the end of 2030. Right now, at the end of Q3, our loan book is at 5,65,000 crore. So this disbursement trend is going to continue because we have huge pipeline of project, particularly conventional coal-based generation projects. New projects are coming up, and we already sanctioned those projects, but very few little disbursement has happened. This disbursement will pick up from 2026 onward, 2026 to 28. Huge disbursement will happen in coal-based capacity, and in this current year's budget, Honorable Finance Minister has already announced that India will strive to install about 100 gigawatt capacity from nuclear energy.
Right.
By the year 2047, that gives us additional capacity addition in terms of lending to non-fossil fuel sources, because nuclear is supposed to be non-fossil fuel sources. And by getting that, our renewable energy portfolio will also increase substantially by the year 2030. We are targeting 3 lakh crore, but if nuclear energy component gets added, perhaps our renewable energy portfolio will increase to about 3,50,000 crore by the end of 2030.
Understood, sir. Sir, sorry, you mentioned the growth number. Wanted to understand that number for Q3.
Q3 growth number was 14%.
Right.
The loan book increased from 4,97,000 crore to 5,65,000 crore.
But you are suggesting that your full year for FY25 will continue to be between the 15 to 17% band. What gives you that confidence, sir? That's what I wanted to actually understand.
That's what I tried to explain, that my disbursement increasing substantially.
Understood.
Last Q3, my disbursement was 54,692 crore. That was disbursement increased by 18%. But what happened in Q3? Some prepayment and repayment happened. That's why loan book did not grow to the extent of 15 to 17%. The loan growth was only 14%. But in Q4, we don't expect repayment are going to happen like Q3. And my disbursement that we are targeting last year, let me just show you the trajectory actually. In FY22, our disbursement was to the tune of 57,000 crore. In FY23, our disbursement increased to 97,000 crore. In FY24, my disbursement touched the level of 1,61,000 crore. And in FY25 current year, my disbursement will cross 2 lakh crore.
Understood.
This gives confidence that my loan book will increase from 15 to 17%.
Understood. And sir, if I were to remove your recoveries, what would your credit cost therefore be? Because I want to understand Q4 FY26, when your credit cost starts to normalize on your P&L account, what would that number be like?
Yeah, that's what I was trying to explain to you, that recovery may not happen after Q3 of next financial. By December 25, all reversal would have happened. After that, that would be offset by my interest income.
I understand, sir. I understand. But sir, what would that number be, sir, if I were to ask you?
Number may range from from April to December, we are expecting reversal of about 500-600 crore.
Fair point.
That would be by Q4. Additional interest income up to the tune of 500-600 crore will happen.
Shifting focus to the primary market space, while Hexaware Tech's IPO opens for subscription on February 12th, and we spoke to the management on their business overview and use of IPO proceeds. Do listen in.
See, what has happened over the last 4 years, and I'll come to numbers in a minute, but we've grown in scale quite a bit. We crossed $1 billion 3 years ago. We've grown substantially in capabilities, leadership changes in some cases, very talented new leaders who helped the organization build great new platforms. In all cases, the platforms are AI infused. The most recent platform, RapidX, is GenAI native born. So increased capabilities, a very systematic capability to acquire new clients. Every month, I know that we will get new clients, even if I go to sleep. What has not changed is the fact that we have the best net promoter score in the industry. Our customers are delighted with the work we do for them. What has not changed is that employees love working for Hexaware, evidence in the highest Glassdoor rating, amongst the lowest attrition in the industry. What all of this is combined then is to give us a solid set of customers with whom we gain market share every week. And so that's what is the why of the growth, and that also gives me confidence about future. So the actual numbers, 3 years, 21 to 23, US dollar terms, we grew 13.7% CAGR, which I think is top 3 in the industry. Last year, calendar 24, 9 months, we grew at 12% over the prior 9-month period. I think that is top 2 in the industry. So we've done very well relative to everyone else.
True. I was looking at your number CAGR of 13%, which is good actually. But can you give us a sense of how your current year going to be? Because we have numbers till September, and after September things have changed for the world. Trump has come in, the policies have changed, outlook has changed, trade policies have changed, I would say. And from a tech point of view, yes, some bit of discretionary spends have come back. There's some good demand which is coming in, or gradual demand which is coming in. How do you see that thing? Because as an IT company or as an investor, they would like to know from you how things have changed for you post October, which is actually your 4th quarter, right?
So I'll talk to the factors, right? Election is the biggest one. So I think what the election meant is this, okay? There is a threat of taxes going back to where they were before 2017. That's gone away. There is a higher expectation that there will be much lower regulation. There will be much lower scrutiny on M&A, and generally a business-friendly environment. So I think all of this is a significant net positive. I'll say the flip side is that broad-based tariffs could be a negative, right? So, depends on how much tariffs, which country, the sectors could vary. But in general, broad-based tariffs is a negative. But net of all this is still a far more positive environment than what it was a few months ago.
Well, that was the management of soon-to-be listed Hexaware Technologies talking about the growth outlook going ahead. But with that, it's end on this edition of Profit Top Trades. But do stay tuned to NDTV Profit. Lots more lineup on the other side.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Hello and welcome. You're watching India Market Close here on NDTV Profit. Let's pull up where the Nifty is. We're seeing a bit of a toughness in the day, especially after a 25 basis point rate cut. Just goes on to show how much of that has already been built in, and a lot of that was already penciled in to the way the Nifty moved during the week. But let's look at it intraday as well. And we're just about 23,500. We're very close to the day's low, in fact, or just off the day's low, and that's what will likely be interesting. I'll also want to take views from guests as to where we go from here, because from the day's high we've come a long way to the day's low, 200 odd point fall from the high, and therefore will be interesting to see what happens next. Also, I'd want to understand how the Nifty Bank and the Nifty IT index are moving, because some bit of divergence on both of those. The Nifty Bank down 0.7 odd percent. The Nifty IT index though was trading in the mild green. We're currently sitting 0.5% lower where the Nifty IT is concerned. So both of those trading in the negative. Let's pull up the heat map of the Nifty. Some earnings were in focus as well. Hero Moto, for example, up 0.7. Steel stocks doing very, very well today, and Tata Steel is up 4%. We'll get more insights as to why that is so. Trent is up nearly 4% as well after the kind of day it had yesterday. Some brokerages positive despite the kind of numbers that came through. Lots of target prices cut, but they're still positive with regard to Trent, and that's the pocket they believe will do best in terms of how to play consumption in India. Bharti, extremely strong numbers, and that's why stock sitting pretty. 3% higher on a day like this, not bad at all. What's not doing well? It's TCS within the IT pack, SBI on the back of numbers, plus some brokerage commentary coming through, 2% lower. No sign of recovery on that count. Reliance Industries is down 1%. And then you have some NBFCs also seeing some pressure. Shriram Finance, for example, seems to be seeing some bit of profit booking after that 50 basis point rate cut. So 1.4% lower on a Shriram Finance as well. Let's look at the advanced decline. Let's assess the breadth very quickly. Well, firmly in favor of the declines, and 2:1 in fact. And let's look at the mid cap as well as small cap indices. Let's see how they've shaped up for the day, in fact. And flat on the Nifty mid cap, absolutely flat. And the Nifty small cap is down around 0.5% thereabouts. So pressure across the board, across all three indices, but we're off the lows when it comes to the small cap index. But the fall from the high, both on the Nifty mid cap as well as the Nifty small cap, is over 200 points. So Nifty 50, mid cap, small cap, all have fallen over 200 points from the day's highs. We have with us Ruchit Jain as well as Amrish Baliga to talk to us, of course, about how the market is really shaping up. Ruchit, let me come to you first on the technical side. What's the sense like at this point? We've, again, I want to reiterate, fallen over 200 points from the highs. Where to from here?
Yeah, hi, very good afternoon.
Good afternoon.
Well, we have seen a recovery in last few trading sessions ahead of the event itself, and we can clearly see some unwinding of positions happening in today's trading session post the event. But we believe that in the near term, our markets will now go through some sort of time-wise correction or consolidation phase, wherein 23,400 to 23,300 will act as a support, while on the higher side, 23,800 would continue to remain a resistance. So we are not expecting any big trended phase coming in on the index in the near term, but rather a time-wise correction or a consolidation could be seen.
Okay. Amrish, what's your sense with regard to where the market goes from here? A 25 basis point clearly was penciled in. At least that's the reaction we are seeing today.
Right.
But do you expect now markets to start inching higher as the unwind or the impact of that 25 basis point rate cut starts to happen through the economy?
No, I think that will take a while, and also had been announced in the budget, which should in fact, at least increase consumption going ahead. But that's going to take time. That's not going to happen immediately. Based on the macro numbers, based on the earnings which we have seen, I still believe that we should see the markets going down further. It will not crash, but I think it will be lackluster. It will slowly go down. And the levels I'm looking at is Nifty 22,000, 22,500, which is okay, a decent close to 5% fall from here. So I think it can go to those levels, stay at those levels for a while, and possibly we could see better days, maybe in the third quarter or possibly the fourth quarter of the new financial year.
Okay. Ruchit, your picks for this afternoon?
A couple of recommendations that we like in this consolidation phase. First is a buy recommendation in JK Cement. Well, I know the stock has been showing a good relative outperformance within the entire cement basket since last few months. It's still trading around its 50-day high, and the price volume action also is quite bullish, where the price up moves have been supported by good volumes, and on any minor dips, we are not witnessing any volume-based selling in this stock. So JK Cement, I think, relatively should do well. At current levels, one can go long with stock below 47.50 for potential near-term targets around 5100. And a pullback move is anticipated in Crompton Greaves Consumer, where we have seen a decent correction along with the broader market since the month of October. But now on the weekly charts, the stock has formed a bullish engulfing pattern that to around its 200 weeks exponential moving average support. Generally, whenever we see such bullish patterns getting formed on the weekly charts, the stock tends to show at least a pullback move. So one can expect a pullback move and go long on Crompton Consumer from here on with stop below 350 for potential targets around 390.
Okay. So those are some views coming through for you. Amrish, if I can ask you, what's the one sector or stock or pick, given the rate cut, you believe is poised for a turnaround?
In fact, I've recently got slightly bullish on IndusInd Bank because we've seen a decent cut in this stock because of the microfinance book which they had. There were asset qualities in the last 2 quarters, and because of which we saw a very decent correction. But being the 5th largest private sector bank, they have more than 7,000 points of connect, one of the largest distribution networks. And if you look at the loan book, it is very well diversified between consumer and corporate products. I mean, the mix is about 54-46. And in each of these products, they have like a leadership position. For example, in the vehicle finance, they are among the top 3. In microfinance, they are among the top 2. About 91,000 Bharat Money stores, and they have a reach, I mean, extremely good reach at about 1.61 lakh villages. And if you look at the Q3 numbers, they were weak, no doubt. But again, they were in line with market expectations. And if you look at the retail deposits, they went up about 14%. Vehicle disbursements went up 25%. Corporate loan book grew 16%. So based on all this, we have seen some sort of a bounce back post the earnings. But I see that this is a new trend. I think we have seen the bottom as far as IndusInd is concerned. So I believe the downside is limited from here. And in fact, my long-term target I've revised to about 1,375, which is just about 1 time adjusted book value for FY27.
Okay. So IndusInd is the pick. IndusInd's had a good run, in fact, Ruchit, over the last maybe 2 weeks, if I can call it. We can pull up maybe the 1-month chart of IndusInd. It's had a fabulous run from those 940 levels, sub 1 time price to book. It's up maybe 13%, which is extremely strong for this kind of market. Ruchit, sense with regard to charts on IndusInd?
Short-term perspective, it will be very crucial for the stock to give a breakout above 1100, because the 100-day exponential moving average is placed around this 1090 kind of range. So if the stock manages to surpass this 1090-1100 hurdle, then we could see a move towards 1200, 1220 in the near term. But since the stock has already seen a pullback move, rather than going long here, I would either recommend to go long on dip towards 1000 or on a breakout above 1100.
Okay. All right. So that's views coming in with regard to technicals on IndusInd Bank. But let's get more perspective with regard to some of the steel counters. Let's quickly actually pull some of those up. Let's pull up a Tata Steel. Let's pull up a JSW Steel. And there you go, 4% higher. Tata Steel up 3.5%. Impressive on both of those counts. Ruchit, how are some of these looking on charts?
Seems to have a pullback move, because metals was one of the spaces which has not yet participated in the recent markets pullback. And we have seen that the dollar index has now corrected from its swing high of 110 to 107. So there is an inverse correlation we usually see between the metals and the dollar index, and hence we are witnessing a pullback move in this. So Tata Steel, I think in the near term, has potential to rally towards 140, 142, but not expecting any big trended phase in the stock. But yes, a pullback towards 142 can be seen.
Okay, let's pull up the Nifty Metal as well. Thanks for those views, Ruchit. But the Nifty Metal also doing well for itself. The top sectoral gainer today. And on a day where otherwise it's been a tough day overall across sectors for the market. Now, this is clearly sector of the day, therefore. And Mika is here to give us more perspective as to why these counters are buzzing. What's happening, Mika?
Yeah, except 2 counters. We have most of the counters on the Nifty Metal in the green. When you talk about the stocks, we have steel stocks especially, buzzing in trade. We have JSPL, intraday high of 4.8%. Tata Steel, it's hit an intraday high at 4.2%. JSW Steel at 3.3% and SAIL at 3.1%. Now, in terms of why are the steel stocks buzzing, we have 4 factors that we've brought down. One is positive cues from China. Now, the Shenzhen government has vowed to bring, real estate investment back to growth, and a better Chinese steel market, better Chinese real estate market stands positive for steel demand, and this in the end has, a positive impact on global prices of steel. The second one is better demand in 2024. Now, as per the multinational steel manufacturer ArcelorMittal, the S.A, headwinds are expected to ease in 2025 for the sector. The steel demand is expected to grow in 2025 when you compare to 2024, and the average steel consumption ex-China is expected to grow 2.5% to 3.5% as per the company in 2025. We also have a potential relief from steel imports in India. Now, higher steel imports have been hurting the industry and domestic players for months now, and players do expect the government to impose a 25% safeguard duty on steel imports. And as per JSW's steel management, who told NDTV Profit, the duty is expected in the first half of 2025? And lastly, is a potential price hike on the cards? Now, last week itself, we had some channel checks that indicated that the industry is getting ready for a price hike, and this will be on flat products in the month of February itself, and the potential price hike is by 1,000 rupees per ton.
Okay, thanks so much for that perspective, Meeka. Of course, steel stocks flying on the back of that, and it's always great perspective. Ambrish, lots of levers that Meeka just spoke about. If you had a chance to listen in, what's the sense?
No, I mean, the clear sense is that we will see the steel prices going up because of all these, because of the real estate demand again increasing in China. Clearly, you'll have the steel prices going up there. Domestically, I think we would have a safeguard tariff, and that should also, I mean, at least be good for the Indian companies to improve their margins. And the management also have been talking of about 10 to 11% sort of a volume growth going ahead. So, which again is very positive. So, overall, again, as far as steel is concerned, don't see much of a downside from here.
Okay, so those are views coming in with regard to steel, of course, on the fundamental side to constructive, Ambrish. But let's bring in Abhizar Jain, Head and Fund Manager at Monarch AIF, I beg your pardon. Now, Abhizar, you know, your fund has outperformed, of course, and congratulations on that. You're closing in on 1,000 crores, if I'm not wrong, in terms of AUM. What I'd want to understand from you, and correct me if I've made any of those statements which are incorrect, but give us perspective on what the rate cut means, because that's what currently is news of the hour. What does the rate cut mean for the economy, and what are those sectors in terms of which will get positive traction as a result of this? Because there will be some amount of influence, some amount of rub-off.
Thank you, Harsh, for inviting me to this show of yours.
Pleasure having you.
Yes, all your statements are correct. See, of course, the rate cut has been, pending for quite some time. It's a rate cut first time in the last 2 years now for us as an economy. And of course, it was correctly timed as per our assessment, because RBI had its own set of things to balance. The growth has slowed down, as we all know, a little bit in the last 6 months to 9 months. And there are a confluence of global factors which are playing out in terms of the dynamics for the inflation. But having said that, Harsh, I think the rate cut is a step in the right direction. And from whatever I could make out from the commentary of the new governor, it seems that they will be more data driven and they will be growth supportive in terms of their rate cut measures going ahead. So in that sense, if inflation were to move in the right direction, which is downward direction, which they also expect, then there could be more measures around this front, to support the growth. Having said that, of course, the global factors will have their own play, and if inflation picks up, then the situation changes. In terms of your question on which sectors could benefit and how do we see that playing out, see, it's little early days, but what we have even seen from the budget is that there is a fillip for consumption to grow, and that to the discretionary consumption, because now you have extra in-hand income as as an individual, and that is at the whole country level, because obviously at the lower income levels there is more money in hand for those guys, but even for the higher income levels, then the income tax cuts which has come in the budget is putting more money in the hands of the people. And now with this interest rate cuts, your EMIs come down, so you make that bit of extra saving. So I think that increases the potential for the people to take on a little bit more debt at the household level, and hence the discretionary consumption sectors, in our view, should get positively impacted. The lenders which support this should also get positively impacted, in my view, whether it would be the NBFCs or the banks, because the credit cycle can get supported. So that's how we kind of see it. But as I said, Harsh, it's little early days. This is just the first cut after 2 years. So
sure,
we'll have to watch out for the data in the coming months.
Sure. Abhizar, very quickly, 30-second answer. Could you talk to us about how you've positioned yourself in the last 6 months?
Yeah, so see, Harsh, what we have been seeing that in the market as such is that while the macros have always been improving for India in the last 3, 4 years, but the valuations have been a problem, and valuations have remained a little bit stretched because of the huge flows that have been coming in the mid cap, small cap thematic themes. So how we have positioned ourselves is basically a barbell strategy. On one side of the barbell, we have the value large caps, which sit out of places like banks, telecom, and life insurance. And whereas the other side of the barbell is the carefully selected small cap stocks, which are beyond the 400 market cap company and all the way to 1400, 1500 kind of market cap. These are from various sectors. We have done deep research and bottoms up, work on these companies and then selected them from various sectors like hospitals, EMS, auto banks, and the like.
And therefore, does that strategy continue into 2025 as well?
Yes, very much so. Because see, though we have had some dislocation and around 3 to 4 months of correction, with which we have also talked about in our latest investor newsletter, more than 81% of the stocks are down 20% or more. But we believe that the valuation correction in some of the very stretched pockets could be long drawn. Okay, and it won't just get all the froth might not get cleared with just 3 to 4 months of fall. At the index level, in fact, the falls are lower. The stock level, some of the falls are more. So we continue to maintain the same strategy where we are able to get good opportunities more in the stocks which are beyond, the 400 market cap where the popular indices kind of end, because the flows are going into the popular indices stock and stretching the valuation. And with the Indian economy's dynamism and the opportunities that are opening up across sectors, we are able to find opportunities more in that bigger basket of that 1,100 stock starting from the 400 stock. On the large caps, of course, we do find a lot of opportunities in some of the sectors that I talked about, and hence that also continues, and hence the barbell strategy continues here.
And Abhisar, so therefore, give us two pockets where you feel valuations are stretched, and I won't ask for names. But two pockets where valuations are stretched and two pockets in the current market which look extremely interesting, because we've seen a bit of a correction as well in the last 3 odd months. And therefore, what is it that you're positioning towards?
Sure, Harsh. So see, the two pockets where the valuations look extremely stretched, though the fundamentals there have improved in terms of the growth outlook, but still valuations look very stretched. Are one is on the capital goods side, where we have seen an very tremendous kind of uptake and rally in the last 2 to 3 years as the outlook started improving. So some stocks on that side, on the industrial cap goods, we still see extremely stretched in terms of the valuation. We also see the valuations little bit stretched on some of the consumer companies and some of the EMS companies which are proxy to those consumer on the large cap side, on the higher range of the mid cap and the large cap side. So those are the places we still see the valuation stretch. Of course, the current fall is making some of those valuations correct themselves, but it is still on a higher side. On the places where we see valuations a little bit more reasonable is on the BFSI side, which is largely to do with banks and some of the NBFCs. We feel that the lending practices and the overall balance sheets are in much better shape. Even in the recent results, we have seen that the incremental asset quality stress has not come in much bigger way except the MFI space, but most of the NBFCs and the banks have done really well. So that space is good. On the auto Ank side also, while the auto OEMs are a little bit stretched on valuation, but on the auto Anks, it's a much bigger basket, a much broader universe to choose from. So there, I think for their growth profile and the quality, there are certain stocks and picks that we kind of continue to get her. So that's how I would put it in terms of the two spaces to look at and two spaces to avoid.
Abhi sir, in some pockets where valuations are stretched, for example, our cap goods, there's plenty of argument to say that the tailwind is strong. The order books are long drawn, and therefore the correct way to look at this is that execution will come. And therefore numbers will also come, and stocks will therefore re-rate fairly quickly, and growth is extremely strong. This year has been a tough year for some of those counters because capex on the government side has been delayed, but likely Q4 will see a push with regard to that capex, and Q1 will be even stronger likely. Are you also somewhere of that count that may actually play out in some of the smaller pockets, maybe not the larger pocket of government capex, but any smaller themes that you'd want to pick up to take advantage of that over the next 6 to 8 months?
Yeah, sure. So see, we are not negative on the prospects of these companies, given how India's capex cycle and the energy transition cycle, and even the demand growth which we are seeing in some of the sectors that they support, like the power sector. So we are looking at those smaller pockets for sure, Harsh. We have recently even, in fact, taken a small bet in one company which supports the power transmission cycle, and it is providing a very key equipment to the transformer sector, for example. So per se, you will always find opportunities. What we are kind of seeing is that the bigger, larger industrial companies and the capital good companies have seen a massive re-rating ahead of time, where even a small disappointments in the earnings could make their multiples come down, and hence there, when we would want to bet, we would need to be a little bit more cautious and more reasonable in terms of what we can assume, because obviously in these things, also the incoming data of how really the execution on ground for all these projects and the government capex plays out will also have to be seen. But yes, the smaller segments of industrial process related equipment, power equipment, or even heat exchangers, to that extent, those are the places where we are betting and trying to find a few winners.
Okay, so some views coming through, and of course an interesting conversation. Thanks so much, Abhizar, for taking out time and speaking with us this afternoon. With that, let's slip into a very short break, because on the other side we have a packed show, so stay tuned to NDTV Profit.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, बिजनेस नहीं है इसमें। This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4
toughest person to cater for, to cook for, President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है शाहरुख खान.
You tweeted recently after President Trump won the election that can I make something for you?
तो एक तरह की खिचड़ी है जिसमें आप मिक्स्ड मिलेट्स डालते हैं.
आपको ट्रम्प साहब को खिचड़ी खिलानी है?
हाँ, तो खिचड़ी खाना नहीं है.
What is the one vegetable you will never eat?
मैंने मेथी खानी बंद कर दिया है.
Like आप करेला, बैंगन ऐसा?
I love करेला.
Is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday.
Welcome back. You're watching India Market Close here on NDTV Profit. Thanks for staying with us. It's that time of the show where we speak to Somit, who's been speaking and hearing from everything that's happening on the street. He obviously chats with dealers and tries to understand as to what all is happening. Somit, what have you been hearing?
Well, the first stock that is on the list is ABB. Now, we are understanding from our dealer check is that there has been selling pressure when it comes to ABB on the FI desk. Every rise is getting sold, and what dealers are indicating is that there could be some weakness when it comes to the order inflow and the order book of ABB, and hence we are seeing this kind of a selling pressure when it comes to ABB. Second stock on the list is Apollo Tyres. Large HNIs have been accumulating this counter after the company came out with its Q3 numbers. Now, the conference call for Apollo Tyres is today at 3:30, and dealers are expecting some positive commentary to come in from the management in the earnings call, and hence they are indicating that large HNIs have been accumulating this counter. And lastly, it's Max Financials. There are strong buy flows on the DI desk for Max Financial. What we understand is that post the rebranding exercise that they had done with Axis, there is indications of possible higher growth rate going forward for Max Financials, and hence this buying interest has been renewed when it comes to Max Financial. Also, in past, Max Financial's valuations were a bit lower compared to other private players, and that was because of a non-banking partner. But with Axis tie-up, now that we see a higher growth rate coming in for Max Financial. And do remember, yesterday we spoke about Hyundai, and today the stock is up 5%.
Yes, absolutely. So stay tuned to this segment. But Somit, actually, I'm going to cut you there because we need to cut across to the M&M press conference. Good set of numbers. Management talking about their earnings fine print. Listen in.
Also up significantly. So very, very strong story on both auto and farm. But beyond that, our turnaround businesses are on track, and we're not going to call them turnaround businesses from next quarter onwards. We're going to talk about them achieving full potential, because TechM's on a good track. EBIT has improved significantly. There's a continued focus on margin expansion to the plan of 15% that has been laid out by the CEO. Mahindra Finance profit after tax is up 47%, assets under management up 19%, and GS3 continues to stay below 4%, despite some of the challenges that we've seen in the economy. So overall, all our businesses are operating on a very strong path, resulting in a consolidated profit after tax up 20% over the previous year. A quick snapshot here. Revenue up 17% year over year. On a year-to-date basis, it's up 13%. And profit after tax has achieved the 2020, up 20% for the quarter, and up 20% year-to-date as well. As you look at the key drivers, auto and farm have increased 16% year over year. TechM and Mahindra Finance are up 1.9 times and 47% respectively. And our growth gems are up 33%. Well, Rajesh will cover auto and farm in more detail. The key messages here are not just the SUV revenue market share, but also the LCV, less than 3.5 ton market share, which is now 51.9%. We've crossed the 50% threshold on this, so up 230 basis points. And for farm, while market share has increased, farm machinery revenue is up 12% as well. As I mentioned, we shall talk about achieving full potential now for Mahindra Finance and Tech Mahindra. You see the GS3 and asset under management numbers for Mahindra Finance, and for TechM, some green shoots in telecom, or green shoots in BFSI and healthcare, some new deal wins in telecom, and getting back to a margin recovery path. So overall, as we have promised in the past, a consistent delivery on commitments. ROE continues to stay around 18%, which we have promised. And EPS, we had promised a 15 to 20% growth from F21 onwards. At this point, it's significantly higher than that and continues on a good trajectory. With that, I'd like to invite Rajesh to talk about auto and farm.
Hi, good afternoon, everyone. I'll start with farm, and you can see here we've had a very healthy volume growth in Q3, 20%. Our exports have been up 14%. Anish just spoke about the market share, so 2.4 percentage points gain in the market share, which is our highest ever Q3 tractor market share. This gives you the trend line of where we are on the market share. You can see that we've gained through the year 1.7 share points as well. Farm machinery again continues to grow at a reasonably healthy rate. On a YTD basis, that's at 20%. The revenue is up 11% and the PBIT is up 29% for consolidated. So that includes our global subs. And the margins on the right, what you see is the core tractor margin, which is now at a very healthy level of 19.5%. Just to recap, core tractors is domestic tractor business plus the exports that we do from India plus farm machine. Sorry, it excludes Powerall and farm machines. We always show you this chart to show you the steady rate or the band in which we operate our margins irrespective of what's happening to the industry. And the gray line shows you the volatility in the industry. But the ability to maintain margins, and of course now you can see it going up to 19.5% as Q3 demand has got stronger. We expect the industry to grow at 15% plus in Q4, which will take us to a annual expected growth, industry growth of around 7% plus. And there's several positive factors that we are seeing which are enabling that, one of which is the reservoir levels, which are at a very good level, 16% over the long period average. The Rabi sowing has been pretty smooth. It's at 103% of the Rabi area has been sown. So good progress on Rabi. And a strong Kharif production growth of about 5%. And we've also seen hikes in MSPs, which is overall raising the inflation price at an output level, and that's helping the terms of trade as well, which remain favorable, where output inflation is right now more than input inflation. So that was on the tractor side. On the auto side, again, it's been a very strong growth period. Anish has covered some of these numbers, so I'm not going to dwell too much on that. Both the growth in the LCV and the SUV market share. This gives you a trend line of how our volumes have grown. In spite of having a very significantly higher per unit average realization compared to anyone else, we continue to be number 2 on volume market share as well, apart from being number 1 on the revenue market share in SUVs. We got several Car of the Year awards, the Autocar Car of the Year, the ICOTY, which is called the Indian Car of the Year, and some others as well for the launch of the Thar Rocks. We've grown our LCV, this is the LCV less than 3.5 tons. While the industry growth has been very muted, there was small single-digit growth in Q3. The overall growth has come out of market share increase, which continues to be strong. Last mile mobility, we maintain our leadership. The important thing I want to flag off on this slide is the pace at which electric three-wheelers is penetrating. A couple of quarters back, we spoke about getting close to 20% penetration. Right now in Q3, it's close to 25% penetration.
Okay, so that's of course management of M&M talking at their press conference, but from one press briefing to another, Bharti Airtel stock has done very well since the morning, and impressive show with regard to ARPUs as well, from 230 or sub 235 to reach above 240 in a matter of a quarter. Just kind of shows and signals the kind of strength that's there. Let's hear Gopal Vittal speaking about their Q3 numbers.
Pass expansion continues with 1.9 million quarterly addition, with total home passed at 35 million. The second area is really to constantly improve the value that we deliver. Here we are focused on a combination of convergence by improving the content slate we offer. We recently signed on ZEE5 and Glance on digital TV. Xstream now has over 22 apps, OTT apps as a part of its platform. We've also commenced the testing of IPTV. We believe that when this is launched, it will dramatically improve the ease of onboarding for our customers. The third area of focus is to really fire up all our channels. We currently sell broadband largely through our stores and online channels. We're now using our digital capabilities to bring in the power of our entire mass retail channel and plan to open up around 100,000 points of presence. In addition, our 30,000 strong fleet of home delivery engineers will also be activated. With these three areas ramping up, we expect to see continued momentum of homes, leading to strong competitive growth. Let me now turn to mobile. On postpaid, our focus continues to be on the 80 million potential customers who we believe can upgrade to postpaid. Use of digital tools along with simple customer journeys across channels is powering our family offerings to further accelerate this. Rural markets account for over 65% of industry growth. Over the last 2 years, we made substantial investments in seizing this opportunity. This has delivered results, and going forward, we expect to fill gaps in a couple of circles while we continue to sweat the sites deployed till date to give us gains into this year. Let me now turn to B2B. There are 3 key areas we're addressing: portfolio, go-to-market, and customer experience. Let me comment briefly on the portfolio. There are 3 parts to our portfolio. There's data centers, there's global, and there's domestic. Our data center business is growing steadily. Within the global segment, we have 2 parts: commodity voice and messaging, as well as monetization of cable investments. On the latter, which is cable investments, As you know, there was a slowdown to the extent of interest from OTT players, but we are beginning to see some change in this in the current quarter in terms of the order book. By the way, this is a very profitable part of the portfolio, and so is now seeing signs of growth, which bodes well into the coming year. The second segment within global is wholesale commodity voice and messaging. A very significant part of this is very low margin business. And in fact, what it does is it clutters management focus. It has a lot of people running around trying to strike deals, and the margins we make here are insignificant. We have made a decision to exit this low margin business, which will have an impact on the top line in the coming quarters. It will take about 6 months to have for this to play out. But let me underscore that the exit in this business will have really no impact on EBITDA because this is a very negligible margin business. Within the domestic segment, we are seeing strong growth on digital as well as sustained growth on connectivity. In fact, these digital adjacencies comprising of cloud, security, IoT, and CPaaS account for almost 90% of incremental industry growth. We're now stepping up our investments as well as our go-to-market muscle to drive faster growth here. We will be launching a comprehensive cloud solution in the next few months. At an aggregate level, given the growth of digital, I believe we need to move at a much faster pace and we'll do what it takes. This is one of the main reasons we have decided to shed the low margin portfolio of commodity, voice, and messaging. You will recall that a few years back, we did the same in our mobile business by shedding 49 million customers who were using our network only for incoming calls. This changed the experience for our existing customers. It declogged our networks. And more importantly, it galvanized the organization internally on how we chose to win with quality customers. We believe this will do the same in our B2B portfolio. The second area of focus is the need to build muscle in our account management teams to shape this agenda. We're doing a combination of things here. We're injecting capabilities into the team in the form of fresh talent. We're training all our existing people. We're injecting state-of-the-art tools backed by AI to help our frontline. And finally, we're setting up virtual teams to raise the bar on lessons learned at an industry vertical on key wins and losses.
Okay, so that's of course Airtel, very strong numbers overall from Airtel. We have with us Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset Sharekhan, and we have Avinash Gorakhshekar, Director Research at Profitmart Securities, also joining us. Welcome, good afternoon, gentlemen. Avinash, I'll come to you first on the fundamental side with regard to Airtel. Such strong numbers. I mean, the street was largely penciling in very good numbers, and I'm not talking about this quarter in particular, but even a year back, the kind of numbers that the street was projecting on and Airtel was very strong. Do you believe that the numbers have largely beaten estimates, especially given that we've gone from 200 in terms of ARPU to 245?
Yeah, I think, first of all, good afternoon.
Good afternoon.
Yes, the numbers are much ahead of expectations. And I think, you rightly mentioned that ARPU growth has been very promising. And that is why the markets have also liked this performance quite well. Overall, I think my sense is that pricing power has again come back to the industry after a lot of consolidation. And I think that is the key reason ARPUs have gone up. I don't think that now, most of the players, the larger players, are in a mode to, cut prices. In fact, we could see ARPUs getting better in the coming quarters also. So I think, once ARPUs start moving up further, the incremental gains on the operating EBITDA on the bottom line would be significantly large. Plus, a lot of investments have already gone. I was hearing to Mr. Gopal Vittal, and he was clearly mentioning that a lot of investments have already been added. So, probably those investments are also going to yield revenue benefits for the company in the next, say, 12 to 18 months. So I think, in terms of the broadband opportunity, in the voice opportunity, I would perceive that the markets are now looking at much stronger growth from the company and looking at the kind of positioning Bharti enjoys. After a very significant amount of fierce competition, I think better times are now awaiting the telecom sector, provided, of course, the government does not put any regulatory issues ahead of the telecom sector. But I think net, one could expect the FY26, the next financial year, also to be a solid year for the company, with subscriber growth also increasing rapidly, and with ARPU growth also expected to be pretty strong.
Returns have been strong, right, Avinash? We've seen a 47% 12-month return on the stock. Where to from here?
No, I think, see, clearly one needs to get into the stock only on some mild correction. The stock has moved up quite, sharply, as you rightly mentioned. But I think in this market, the markets are always willing to pay a premium for growth. And I think if the growth is sustainable, Harsh, I don't think, market participants would have a problem. This is an institutional favorite and a FI favorite stock. And I think looking at the kind of concentration which is seen in the telecom sector in India, I would not be surprised that one could expect only a mild correction. And I think investors would pay a decent premium to the company, considering the fact that it has over-delivered on the numbers.
Okay. Kunal, let me come to you with regard to a technical view on this one. Airtel.
I think if you look at Bharti Airtel, I think the correction what we got in the markets and you look at the correction what Bharti Airtel has got, I think relative strength was clearly visible. That was visible on the technical chart. The stock was consolidating and now finally it has given us a breakout. I expect the stock to surpass its all-time high level as well, which is placed at around 1780. So for me, my targets will be somewhere around 1820, 1830 on the upside. So whatever dips you get, utilize that to buy. The strong support on the downside is at 1600. So the risk reward is very favorable. 1600 is a very strong support on the downside. On the higher end, I look for targets of 1820 to 1870 on the upside.
Kunal, your call on the index, if I can ask, Nifty Bank.
So I think firstly, if we start with Nifty over here, the breakout what we had got for 3 days back, that is that 23,400, 500 range, it was taken out. We have not got any follow-up move since then. So clearly there is some resistance on the higher end. So if Nifty has to move on the higher end, 23,800 has to be taken out, then we will see further momentum building up. So the short-term bias remains on the negative side. The 20-day moving average for the Nifty is placed at 23,289. So I expect the index to go and test those marks on the lower end. And if 23,300 is also not held, then we can see Nifty going in fact, can even go to new lows as well. For the Bank Nifty index, here also post the RBI policy, thus there has been no strength. 50,000 was the support. We are hovering around that support zone. If on Monday's trading session we break 50,000 and sustain below it, we can easily go towards 49,400, 49,300. So even Bank Nifty is looking weaker. I think overall the larger term trend for both the indices has been on the bearish side. This was the pullback of what we had on both the indices. It feels like that the pullback is over and now we can see further downside in both the indices.
Okay. So point taken. More bearish than bullish, Neeraj. First off, thanks for joining us. But more bearish than bullish. I mean, and seems like a sell-on rise at this point.
Yeah, well, that is interesting. By the way, Europe is starting off okay, Harsh.
Yes.
So it's not too bad.
On the global front.
On the global front. Looks okay. The only question is that what does the US markets do today and what kind of overnight handover we get. It's a flattish start, not too negative. So that is the interesting one. But yeah, maybe the market did a bit of a rally ahead and then kind of cooling off. But I was wondering, actually, just wanted to take a repeat question if you don't mind. Kunal, with the presumption that you're not too bullish right now, but almost everybody who's been on the channel in the last few days has suggested that at 23,250, 23,300 or 23,200, whatever that zone is a support from which longs can be initiated for a target of 24,000. Do you think today's setup disrupts that call? If you also had that call, by the way.
No, so for me that once we got a breakout of about 23,400, 500, I was looking out for a follow-up move post that. I didn't get that. Second is that yes, 23,300, 400 is what the support zone is there on the downside, which I mentioned, 23,289, which is the 20-day moving average. And once that is breached, then we can confirm that Nifty would be making a new low, breaching that mark of 22,800. So still the confirmation for a new low is not there, but I can at least expect that correction to go towards 23,289, 300. And once we close below that mark on a closing basis, that will give me a confirmation that the uptrend which I just started has been negated. And then Nifty will be making a new low somewhere around 22,600, 22,500 mark.
Okay. Wow. So more lows for sure. And if I just wonder, from the pockets that have looked weak today, Harsh, I mean, Bank Nifty is clearly sulking, right? We spoke about this earlier as well.
Yes.
A lot of moves that have been announced are actually constructive for select NBFCs, right?
Yes, it is. It is, Neeraj, but limitedly, to be very frank. And some of them have already run up significantly. And we highlighted this a couple of times, even in the morning, viewers, for perspective. So while maybe a PBT impact of 3% at the very best for an M&M Financial is what Morgan Stanley is penciling in, but the stock has run up 6-7% over the last maybe 5 days. And therefore, the question being that how much of that is already priced in. Avinash, at this point, if I can ask you, what's the top sector space which in your view will benefit from this rate cut of sorts? Will it be realty? Will it be some of the lenders? How do you play this?
No, I think clearly, Harsh, some of the lenders would benefit, but I think, the bigger benefit of this 12 lakh exemption limit is going to come for smaller ticket items. Typically, I think if you could talk about within the auto pack, two-wheelers, something on the consumer durable side, on the consumption side. So, these could be possible pockets where money could be spent. I would believe that, two-wheelers definitely look interesting because both, TVS as well as, Hero Motor has, given a decent kind of commentary. With the rate cut, I mean, obviously, that is going to aid two-wheeler purchasing in a much bigger way. And I think initially it will be the mass ticket items which will actually benefit. I won't be surprised that real estate, or for that reason, any luxury products will be purchased by consumers because, the overall tax benefit is not very significant. Although in the absolute size, it's small, but, this kind of amount largely would go for buying mass ticket items. So two-wheelers, I think, are interesting. I would not be surprised that probably from the April quarter, you could see better numbers for the two-wheeler pack, something better coming from Hero Motor Corp or typically from a Bajaj Auto. I would say that the domestic market, which was sulking previously, is now again getting geared up. A lot of new launches are also planned. So I think that would add to the fuel and, definitely give a positive impact on the volume growth of two-wheeler companies.
Got it. Okay. Now, before we go to Mihika, Kunal, your top ideas for the morning or for the afternoon?
Yeah, I think I have two ideas over here. First thing, I would like to highlight about a sector, and that is Nifty Metals. So I think Nifty Metal has bottomed out, is what we see on the technical charts. On the rising trend line, we have taken a support and a double bottom formation on technical charts. That's on the weekly front. So I think metal as a sector could see a good rally on the upside. So I'm bullish on the sector, trading somewhere around 8,500, 600 at the current level. The double bottom formation has happened around the 7,900, 8,000 zone. So that's a strong support on the downside. And I'm expecting this rally to continue towards 9,500 and eventually 10,100 on the upside. So metal is something that is looking very good on the chart. Early signs of bottoming out has happened. So out here, my first pick would be from the metal space on the buy side, and that is Vedanta. Vedanta looks strong on the technical charts. The entire base formation has happened in the stock, and now it is ready for the next up move. The stock has an immediate resistance at 468, 469. But once that is taken out, the next level directly comes at 520 on the upside. So Vedanta is a buy for me at the current levels. 440 is the stop loss, and 468 and eventually 510 is what I'm expecting on the higher end for Vedanta. The second is on the sell side, and that is CESC. Again, the structure has been very weak. The pullback, what we got into the stock, CESC is one stock where the pullback was very weak, and again, the stock is breaking the rising trend line. So here the momentum could be on the sell side. So that's a sell for me. Utilize bounces to sell. 139 keep as a stop loss. I'm looking for downside targets of 129 to 124 on the lower end.
Well, those are some ideas, and well, Mihika spoke about metals earlier. Kunal is saying that Vedanta is amongst his top ideas and metals is looking good. But Mihika is back to talk about some of the other key stocks which should be on or which are on our radar today. Mihika, thanks for waiting by patiently. What else?
Yeah. So we'll talk about the top 3 stocks, all of them buzzing on a good set of Q3 earnings. Up first, we have ZF Commercial Vehicle Control Systems, an intraday high of over 10%, volumes at 6 times its 30-day average. Now, in the Q3 numbers, revenue is up 7%, EBITDA saw a 32% uptick, margins have expanded almost 400 basis points, and net profit was up 24.4%. Then we have Bharti Hexacom, intraday high of around 8.7%, and volumes at 10.8 times its 30-day average. The the Q3 earnings were a good set of numbers. Revenue was up 24%, EBITDA up almost 40%, margins have also expanded to 51%, and the net profit was up 22.5%. Something that helped the earnings for Bharti Hexacom this quarter was the mobile services segment, where revenues did rise 25.5% on a year-on-year basis. Factors like tariff repair, smartphone customer additions helped the improvement. The mobile average revenue per user was at 241 rupees this quarter versus 200 a year ago. Even the mobile data consumption metric is up 25%, and the company has also agreed to sell 3,400 telecom towers for a total of 1,134 crore rupees. And lastly, we have Gulf Oil Lubricants, an intraday high of 9%, volumes at 5.8 times its 30-day average. Now, in terms of their Q3 earnings, revenue and EBITDA was up 10 to 12%. We had margins remain stable, and net profit was up 22% on a year-on-year basis.
Okay, well, some interesting names out there, so watch out for all of these, and I'll ask Harsh to add one more, Harsh, because you just spotted a stock which is cracked on numbers.
Yeah, Garware High Tech, let's pull up the stock, and on the back of numbers, of course, stock is 16%. Look at the fall there. I want to quickly, pull out and highlight a couple of numbers on this one. Margins were at 16%. They got a tad bit better. But mind you, it's a far cry from the number last quarter that it clocked of around 25 to 22%. Seems like a seasonally weak time as well. But growth not there is the other reason why likely the stock is cracking. Avinash, absolutely any views on this one? Do you track it?
No, I think clearly my sense is, I think margins have come off, but if you look at the absolute bottom line number, please correct me if I'm wrong. I thought the number was around 65, which was a tad better compared to the quarter number for the third quarter. So actually has been the major reason for the sharp drop. I won't be surprised that, this is a steady business. One quarter number is not going to spoil the story. They are market leaders in, specialty make, and exports have also been pretty solid. So I would say that it's better to wait for the management clarity to come in for to understand what exactly has gone wrong. We have a positive view on the stock, but would wait for the management clarity to come.
Kunal, your view, quick one, technical.
So I think Garware, if I look on the technical charts, it looks weak to me. We can see some further 4% downside. This was a pullback what we got into the stock, and again we can see some correction. So the lower end support what I see for the stock that is there on the downside is somewhere around the zone of 530. So 530 is possible on the stock in the very short term. Pullback should be utilized to again initiate fresh short position or exit your long.
Okay, PSP projects also numbers coming in. It's a weak set overall, even on PSP projects. But you know what I'm going to do? I'm going to take a slip. We are going to slip into a very, very short break. On the other side, we're going to go and give you BTST ideas as well as picks for tomorrow. And we'll talk about a few stocks. Plenty movers in trade today and earnings coming quick and fast. Stay tuned.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead.
Right now, part of policy announcements, plenty of stocks will be in focus. One set of stocks, of course, is there's the NBFC pack, especially the likes of an REC, PFC, IREDA, and we'll have those stocks on your screen in just a bit. Reason for the spike in the counters from the lows is largely because project financing provisioning and ECL provisioning has been pushed at least till the 31st of March 2026, and therefore for fresh projects that they finance, they won't have to make provisions as of now, and there is at least clarity that at least till FY26 the numbers won't get dented as a result of that. So positive for all of those three counters. Decentish, we saw a bit of a spike and now we've seen a bit of a cool off, and that's why some of these stocks are in focus on the back of that. Also, you have LCR norms which also have been pushed, which is liquidity coverage ratio norms, which were expected to impact banks like a Federal Bank, and you can see the spike on the stock on the back of that. You also had IndusInd, which has been doing fairly well in trade today, and Axis Bank. Those are the three key beneficiaries among others of the LCR norms being pushed at least till 31st of March 2026. So some of these stocks moving. Avinash, quick view with regard to any of these which would be on your radar, and just the manner in which the policy was structured in your view. does it leave room open for even entering some of the PSU banks, given that LCR over there also is slowly becoming stretched?
No, I think I've been earlier also telling your channel that PSU banks have become quite attractive looking at the valuations. There might be a little lull in maybe the next quarter, but I think hopefully once the rate cut benefit starts coming in, I think you could see growth coming back for these banks. I think the bigger issue is that most of these banks are now sitting on much healthier balance sheets. Their asset quality and their loan book growth is also quite strong. So I think banks like Canara Bank, Bank of Baroda, which have posted decent numbers, I think could definitely be looked upon, from a slightly longer term horizon. Banks cannot be ignored because, if the economy is going to grow, despite the fact that, GDP growth in the near term could be a little bit cloudy. But if you're looking at the medium to long term horizon, I think something like a Canara Bank or Bank of Baroda can definitely be considered, since the risk reward could be quite significant once the upturn starts. So yes, PSU banks could definitely benefit. And as I said, the rate cut is actually going to benefit certain pockets like consumer durables, two-wheeler companies, where I think definitely the interest cut is going to help buying more of these kind of items by the participants. And most importantly, the 12 lakh exemption is also going to come in play, but you will have to give in a couple of months before actually we see that getting reflected in the numbers of all these companies.
Well, on the charts, of course, some of these stocks, PFC, REC in particular, have not looked all that bad today. And from a valuation perspective too, not terrible if you will, actually pretty well placed, I would reckon, both of them, relative to a lot of other financiers as well, despite the fact that a lot of NBFCs have corrected. Kunal, resilience today at least for PFC, REC. Any thoughts here, or are maybe metals a better bet from a trading perspective? So I bother with maybe a PFC, REC?
Yeah, I think definitely metal looks strong comparatively. But I think even for REC, PFC, I think the kind of selling pressure what we got from high levels, now I can see some base formation happening at the lower levels. However, we need a confirmation for both. So for me, PFC, I'll be looking out for levels of 420. That is a strong resistance. If that is taken out, we can confirm the bottom formation, and then at least we can see a rally towards 480, 490 levels on the upside. And even for REC, the same, the structure where the higher end resistance is placed at 460. And once that is taken out, we can see that at least it is going towards that level of 520, 530 on the higher end. So watch out for these two levels for both REC, PFC. Once they are taken out, you can at least expect a 6 to 7% rally on the higher end.
Okay. The other one that's in focus is FMCG major Britannia. Of course, stock has been under pressure. We can pull that one up as well. And there you go, 2% down as we speak. And they've announced a 2.5% price hike during their post-earnings call. They've also spoken about some bit of pressure with regard to inflation on their raw material. Mahima here with the highlights from the con call.
So in terms of con call takeaways, there were different pockets which were addressed by Varun Berry. I'll start with inflation. He said that it's been an extraordinary high inflation environment. Inflation for commodities that they were buying was at 11%, and they're closely monitoring these commodity prices and assessing its impact. In terms of volume versus value growth, they've said that they were at par this quarter. Price hikes, the total price hikes increase taken were 2% overall in 9 months FY20, was around 2% this quarter, and overall in 9 months FY24, the price hikes taken so far around 4.5. They've said that Q4 FY25 they'll take further 2.5% price hikes, and Q1 FY26 another 1.5% price hike will be taken. In terms of competition, the management said that they remain vigilant of the competitive pricing actions, and they're focused on driving market share while sustaining profits, and no challenge is seen in terms of competition. Lastly, in terms of cost and margin, they've said that the employee cost this quarter, which was seen significantly down, the sharp decline was due to ESOP correction, and EBITDA margins will come back to normative levels after Q1 FY26. So this is the overall view as to how Q3 panned out for Britannia, and these are the key takeaways of the con call that was held today.
Yeah, well, so Britannia is interesting. There is also a few others, like for example, the consumption names Bikaji, etc., which have had not the best of quarters. I would reckon Bikaji as a stock too should be lower, 9% lower. Clearly, there are some issues there. Avinash, if we haven't spoken about these, Britannia, Bikaji, a few others which have sulked in the quarter, do you like any of these at current or lower levels, or would you bet on some of the winners really in Q3?
No, I think Neeraj, I would prefer to wait for some time because prices had actually gone up on expectations that the rate cut was going to come, and I think volume growth would kick off in a much stronger way in the coming quarters. The budget has also given a kind of a little boost, in terms of the consumption kind of kind of theme. So typically a Britannia or maybe a Marico or typically even a Dabur, I think these are bets which are fairly defensive, but I think valuations are not cheap; they are fair to expensive. And I would prefer to buy into these, probably after waiting for another quarter. The real benefit of the rate cut and the budgetary kind of exemption cut of 12 lakh rupees is going to be felt from the beginning of next financial year, that is from April onwards. I would not be surprised that margins and volume growth would still be a struggle at least for the next couple of months. So I think it's better to wait and buy these stocks at slightly lower prices because your entry point becomes slightly better. But definitely, I think next year is going to be better. Hopefully, rural consumption picks off and consumption takes off in a reasonably big way. Then I think volume growth will kick off, and that would definitely mean a bounce back for all these companies. So we continue to be positive on Marico, Dabur as well as Britannia, but only at lower levels.
Okay. What about a few movers, Kunal? And if I can quickly point those out. Actually, you know what, Kunal, I'm going to ask you straight up on Trent. What's the sense? Because we're sticking to the consumption theme. What's the sense with regard to Trent on charts? 3.5% higher after an 8% cut yesterday. What's the sense from here?
Yeah, I think overall the chart structure still remains on the negative side where the downtrend is still intact. You can get a pullback in the stock that could go towards 5,750, 6,000 mark, but I think that would be a negative point again. So I see that going forward, trend can again breach this support zone of 5,300, 5,200 on the downside. So I think utilize pullback either to exit or could initiate fresh short positions around the mark of 5,800 zone.
Okay. Fresh short positions 5,800. Avinash, what's your view with regard to Trent?
No, I think Harsh, I think you will have to wait for maybe the couple of quarters because the last 2 quarters for Trent have been quite disappointing in terms of margins, in terms of growth. And I think new competition, from new companies, typically what Reliance has announced, their tie-up with the Chinese firm. I would not be surprised that the markets are now looking at how Trent actually faces the onslaught of fresh competition and how it impacts their business. Specifically, if you talk about their Zudio brand, that has been one of the key factors which was responsible for the significant amount of re-rating in the stock. So I think we'll have to wait for another couple of quarters to see how the company bounces back and faces the fresh onslaught of competition. I think that's the biggest worry the market pursues for Trent. And if the numbers don't improve for next couple of quarters, then I think whatever premium valuations we are seeing in the stock, they would definitely get derated. So I think it's better to wait and watch rather than make a fresh position as of now.
And, with major FMCG earnings now out of the way, one major theme that's been in focus is how input cost inflation is actually continuing to persist. We caught up with Abneesh Roy, Executive Director, Research at Nuvama Institutional Equities, and spoke about 3 pockets where he predicts earnings to be strong. Listen in.
So it's a tough question because there are too many moving parts there. I'll take first where the earnings growth in the near term, medium term is strong. Those will be the liquor stocks. So United Spirits, United Breweries, we are positive on both. One key reason is Andhra was almost zero for them. It will become 4 to 5% of the overall India business. And we have also seen that now there is a talk of the FTA, for example, raw material again. The glass cost is indirectly linked to crude oil prices. So if crude is soft, we don't see any problem in terms of the glass cost also. So that's on the high visibility in terms of numbers. Next quarter, next 2 quarters, the marriage demand is also going to help in terms of the liquor demand. But valuation comfort is missing there. So that's the important thing that you have to buy those on a bad day. But the earnings momentum will be with strong double digits in terms of revenue growth, EBITDA growth for both the companies. Now coming to stocks which have corrected a lot, worse themes behind, but the recovery will be gradual. I think HUL, Britannia, etc. look very good there. So I will name liquor stocks, HUL and Britannia as three names. But frankly speaking, because of the rural recovery and the union budget, I think all consumption stocks will see benefit. Some will see first, some will see later. But it's a large number, 1 lakh crore kind of a benefit government is giving. I think it will benefit all companies with some lag. Rural demand clearly is recovering. So these three names I like to shortlist.
Okay, now it's spoken about telecom, but I'm curious to know, and I'm curious to quickly have views as well. Avinash, your view, Bharti Hexacom versus Bharti Airtel, which is that company that you'd pick within the telecom space?
Is this question for me, Harsh?
Please.
No, I would still believe that Bharti Airtel is definitely a much better bet, Harsh. I think Bharti Hexacom is also definitely directly linked to what Bharti Airtel does. So I think if Bharti Airtel does better, then I think Bharti Hexacom also will deliver better numbers. But I think within the the telecom infrastructure kind of business, I think Indus Towers seems to be a much better bet. So if one were to look at the infrastructure business for telecom, then I think Indus Towers looks pretty promising. Very solid cash flow business, very solid numbers in Q3 also. And I think looking at the kind of 5G rollout, I think definitely the management is quite optimistic that they would be benefiting. And plus, they're looking at entering a new electric vehicle business, which is going to help them grow, considering their rapid geographical kind of presence. So I think Indus Towers suits the bet if one were to look at Bharti Hexacom and Indus Towers. But Bharti Airtel definitely, as I said, the propensity to increase ARPU and the propensity to increase volume growth over the next couple of quarters looks quite promising, because after a very long time, the industry has now come to a level where pricing power has come back. And it is unlikely that there could be any discounts or price cuts announced by any of the telecom majors in the near term.
Yesterday, a stock that went up quite. By the way, Indus Tower had some. That transaction has been viewed favorably by a lot of brokerages as well, so keep in mind. But anyways, yesterday a stock which did very well, Diffusion Engineers, has given up some of the gains. It's down about 4% from an intraday high. So I don't know if it's the results or something else, but certainly come off. But TTK Healthcare is the one that has come off as well. All Cargo Logistics is down as well. So these are a few stocks that have certainly come off quite a bit from the levels that they were trading at. So bear that in mind for sure. ITC Hotels, for a lot of people who would have been investors in that naturally or otherwise, keep an eye out for the next 2-3 days. Important developments there. And Thermax is the other one, which on a weak quarter, which the management actually said was forgetful, but the commentary was strong that Q4 will be very, very strong, is up about 1.7%. Now, before we ask our guests about that, here are what the management had to say on the numbers and the outlook ahead.
Forgetful quarter for sure. And we finished below my expectations, some surprises, you could say. Some things that we could have done better. I think if there was any good news, to me it was that there wasn't a structural miss, so to say, and I expect a very good Q4. And I've got three reasons for that. Yeah, first, on the revenue side, we missed more than 500 crores of revenue, which was relatively profitable, had more than 10% profitability, more than 60 crores sitting out there that we could not ship in the last 2 weeks of the quarter. Variety of different reasons, but bottom line, we did miss. We recovered that in January pretty quickly, which showed it wasn't a structural shift. And then this quarter, we're just monitoring it week to week to make sure that there are no slips on what happens on the revenue side. Second, on the projects bit, which is where we have had fair bit of pain through the year. Two of our worst projects, or two portions of our worst projects, went through their worst portions in this last quarter. One was FGD, where one particular FGD project, which was the earliest one we had taken, finally went through its final bit. So it had a load of losses that got reconciled at the end. And Bio-CNG, which is a growth sector for us, but with a lot of learning, where a lot of that learning is over. There may still be some pain, but that pain won't be as bad as what we went through last quarter. And finally, on the orders side, there are two parts to the orders side. Yeah, one, you will see industrial products, which is the relatively profitable part of Thermax. There we grew our orders by 40%. And overall, the backlog there has grown quite well. The portion which is less profitable, which is the government projects, which are typically large, we didn't get anything in the last quarter. Yeah, and we were not we were okay to not bid on less profitable projects and work the business towards a better margin profile long term. So some of that impact we saw. But I think even there, I expect better times ahead because our pipeline of big projects now has also grown quite substantially.
Okay, so that's the view on Thermax. Of course, suggesting that the rest of the quarter will likely be strong and thereafter very, very good traction is what they're expecting. Well, we'll have to wait and watch whether that plays out. But shifting focus to an NDTV Profit exclusive, Infosys has been handing out pink slips in bulk. That's what my colleague Tushar is picking up from his sources. NDTV Profit has in fact accessed one of the letters as well. Mass terminations is what the letter seems to indicate at Infosys. The IT Employees Union says that Infosys has been laying off nearly 700 freshers at the Mysuru campus this time around. And IT Employees Union alleges that Infosys terminating freshers onboarded just a few months ago. The terminated freshers are being made to sign confidentiality agreements, alleges the Employees Union. Infosys says that any fresher who fails internal tests after onboarding are fired as per contractual agreement. So that seems to be the argument which is coming through, but doesn't seem very healthy in that sense with all that's happening. And it also means 700 less employees for Infosys. Could this in substance also suggest that there could be a delay with regard to recovery? I'm not so sure. Avinash, any early feelers of what this might mean?
No, I think it's difficult to give a call, Harsh, but I think definitely these are not good signs. I think if the big IT players in the industry do this definitely clearly means that there is something wrong and some issue which is troubling these companies. So I think, whenever a company decides to terminate the, services of employees, it obviously has to take the medium and the long-term objective. So I think clearly, we'll need to wait and watch for better clarity from the management. But I think definitely a negative surprise, which I think is yet not reflected in the numbers. But I think probably the numbers would follow soon.
Okay. BTST, STBT, Kunal?
I think I'll again go from the metal space only. That is the space which is looking very strong. So Tata Steel would be a buy over here. The stock has been forming high top, high bottom formation. Plus today we have got a breakout from that parallel uptrend. So I think here the upside is still there. So one can go long into, keep a stop loss of 134 on the downside. Look for targets of 143 to 147 on the upside.
Okay. Right. So those are some BTST trades for you. Tata Steel on Kunal's radar. We're just about 5 minutes from close. Let's take some top picks even from Avinash. Avinash, quickly, what is it that you would buy at this point? Would it be within the large cap, mid cap, small cap? Is there a name in mind?
No, I think, Harsh, some companies which we have been telling our clients include, companies like KEC International. We believe, the company came out with a decent set of Q3 numbers. And I think they are sitting on a very large order book of almost 137 billion. So I think, order book visibility provides a strong revenue visibility for the next 12 to 18 months. And with power distribution also being a focus area, I would not be surprised that we could see levels of 950, 960 over the next, say, 12 to 15 months. And another auto component company, which looks interesting and which has posted decent numbers is Subros. It makes air conditioners for largely for Maruti, but now has started making air conditioners for even commercial vehicle trucks. The company posted a very decent number in profit terms in the December quarter of 33 crores. And this year we could see earnings of at least 22 to 23 rupees. So here also The stock is corrected, from levels of 675, 680. At around 650, I think it definitely can be a good, kind of a deep value kind of buy. We look at a price of around 750, 775 if one were to hold for the next 12 to 15 months.
Okay, thanks for that. Kunal, if I can come to you, infra, it's been one theme which has been in focus because of a lack of capex growth seen in the budget. Any stocks on the technicals that are looking attractive at this point, because we've seen a decentish correction in some of the counters?
I think overall, if you look at the infra space, the chart definitely it looks weaker to me. On the lower end, where I can say I'll be interested, still some further downside is left towards the support of 3,200, but LNT would be on my radar. So out here, 3,340 is where it is currently trading. So if you get around the levels of 3,200, that could be an ideal buy because that is where these stock short-term moving averages are placed. And from there onwards, you can expect a rally back towards 3,500 on the upside.
Quick 20-second maybe, if you can give us, Kunal, insight with regard to Eicher Motors, because earnings expected.
The Eicher Motor, I think definitely there the chart is already very strong. I think the last 3 to 4 days, what dip we have got, that is an opportunity to buy. I'm looking for targets of 5,600 on the higher end.
Okay, thanks so much, Kunal, as well as Avinash, for joining us this afternoon and giving us all of those views. But quickly on to the last minute or so of close, couple of minutes. Let's look at what to watch out for. US unemployment, China inflation data, that'll be a big one. And Japan current account deficit, that's the other one. Let's also look at some of the earnings. Hindustan Copper, Apollo Hospitals, Eicher Motors, Grasim. Some big names in there. National Aluminium and Nika, both of them also expected to declare numbers on the 10th of February. So keep your eye out on that. That's on the other side of the weekend, of course. Aster DM, record date for interim dividend. So that's the other one which you look out for. A slew of shares where lock-in is set to expire, and we'll give you a lowdown of this on Monday as well. But just keep some of those names in mind. 44% on Unique Commerce, Swiggy 3%. That's the other one you'll want to keep your eye out on. Ola 44% again, 62% on Seagull, and 69% on a Brainbees. If we can have the next slide. Those are some names which will be in focus along with Acme Solar. But what we're going to do is quick check on markets, because we are set to close for the week, and it's been a long week because we had a 6-day week, the previous one, and now we've had another 5 days. So quickly on where we are, where the Nifty is concerned, can we have the intraday chart? We've seen a bit of a recovery for sure from those lows of the day. So that's the one positive that I would take away, around 120 points higher from the day's lows, and not too bad from the day's highs either as we speak. Let's look at the Nifty Bank as well as the Nifty IT. How is that shaping up? The Nifty Bank is down around 1/3%, so recovery there as well. The Nifty IT, much stronger recovery, so around again 1/3% lower on the Nifty IT. So some of those recovering from the lows. Let's look at the Nifty 50 heat map, whether the texture of that has changed at all from the start of this show. 4% now on Tata Steel. Bharti steady and strong, nearly 4% higher. Trend recovering after yesterday's fall. A Kotak Bank is doing fairly well for itself as well, 2% higher on a Kotak Bank. And M&M on the back of numbers, 1.7%. We've closed for the day as well as for the week. ONGC down roughly 3%. ITC taking a knock as well in trade. SBI after numbers and brokerage notes, 2.1% lower. And then you have a Britannia as well. On the back of those numbers, slightly weaker on the operational side, with inflation hurting the numbers, 1.7% lower. So those are some stocks on the back of earnings as well as news which are in focus. Let's look at the heat map with regard to sectors. Switch focus a little bit. And thereafter we look at the breadth. 2.6 on the metal index. We spoke about that at the start of this show. Nifty Auto also doing doing quite well for itself on the back of M&M's numbers. The VIX coming off 3%, so that's one big positive. FMCG not doing as well after Britannia's numbers, one of those that really stood out. and broadly otherwise it was fairly range bound in that sense. Let's look at the advanced decline as well. It was 3:1 at the start. It's improved marginally now, so slightly better on that count. Let's also look at how the mid-cap and small-cap indices are faring, at least at close, have fared rather. So the mid-cap index holds up in the green, so that's quite a positive. The recovery is solid, and the small-cap index also. Okay, so that one's in the red, 1/3% lower on the small-cap index. The recovery not really coming through fully on that one. Let's look at the BSE 500 top gainers, top losers to close this one off. And those are some names which have really moved in trade. NCC down 13%, NOSIL also down 6%, and Jubilant Pharmova also down another 5.5% odd. Tata Steel though holding up well, and all steel stocks did well. In fact, metals was the top gainer with regard to sectors, but Godfrey Phillips 20% higher on that counter. Of course, on the back of ITC's numbers as well. But with that, completely out of time on this edition of India Market Close. From myself, Neeraj, everyone who puts the show together, thanks so much for watching.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए।
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, बिजनेस नहीं है इसमें। This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine.
Hello and welcome. Good afternoon. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. Markets end flat. Nifty PSU Bank, FMCG Media end as top sectoral losers. ICICI Bank and RIL turn out as top draggers on the Dree Street today. Nifty, Metal and Auto top sectoral gainers. RBI Governor Sanjay Malhotra announces a 25 basis point repo rate cut. Loans get cheaper. RBI maintains a flexible stance. Global headwinds are being watched as inflation eases. Governor acknowledges slowing growth. The 3-day MPC meeting started on February 5th, 2025. This was the first meeting under Malhotra's leadership. During the press conference, RBI Governor Malhotra emphasizes the bank's commitment to providing necessary liquidity. He says that the RBI is taking steps to strengthen overnight and long-term liquidity. They remain vigilant and quick to act when needed. Each statement in the MPC report is carefully considered. High-frequency indicators on agriculture, personal consumption and manufacturing are positive. The RBI's primary objective, as mandated by the RBI Act, is to control inflation. Speaking of consumption, the RBI governor says while demand is on the rise, urban consumption remains subdued. He notes that improving employment, moderating inflation, and healthy agricultural activity are positive signs for household consumption. Deputy Governor Swaminathan says that there is a need for active collaboration between regulators, government and law enforcement to counter pesky calls. He notes that inconsistent behavior by financial institutions is often addressed through bilateral engagement by the RBI. RBI should deal directly with entities in cases of non-compliance. RBI Deputy Governor Rajeshwar Rao says the bank is planning to roll out fresh guidelines targeting bank behaviors relating to mis-selling of financial products. Ola Electric's loss widens in third quarter. Revenue also dips nearly 20% from the previous year. The company reports EBITDA loss of 460 crore versus 301 crore posted last year. Mahindra & Mahindra announces 20% rise in net profit and revenue for quarter ended December. EBITDA increases by 33% and margins surge by 160 basis points. Passenger vehicle segment and farm equipment sales grow by 19%. The auto player to keep an eye for EV bookings and demand outlook for tractors. It expects EBITDA margin to expand on better margins in the tractor segment. Bikaji Foods reports a 3% volume growth amid strong inflationary pressure and unfavorable raw material prices. High palm oil costs also dented the margins. Consolidated YOY performance shows a revenue increase of 14.5%. EBITDA drops 26%. Margins declined to 7.8% from 12% earlier. Net profit decreases 38.7%. Packet sweets segment of the company did the best in this quarter with revenue increasing more than 11%, followed by revenues earned from ethnic snacks and papad segment. Western snacks revenue growth remains flat. The price rise in last 2 quarters impact volume growth of Bikaji Foods, says the company CFO Rishabh Jain. He says that the volumes were also impacted by promotional offers in the last quarter. The company is targeting 10 to 12% volume growth in the coming quarter. For FMCG staples, worst performance is now behind, says Abneesh Roy of Nuvama Institutional Equities. He believes that urban slowdown will recover from tax exemption up to 12 lakhs. Companies like HUL, Britannia, Dabur are not expected to derate further. He remains bullish on HUL, Britannia and UBL. Brokerages remain bullish on ITC. Nuvama retains a buy rating for ITC but stays cautious due to urban slowdown, inflation in key raw materials and weak profitability in FMCG and paper boards. The cigarette segment impresses but overall margins disappoint. Axis maintains an ad rating highlighting robust revenue from cigarettes and agriculture. MK also retains an ad rating noting weak Q3 performance with margin stress. Inflationary pressures impact earnings but relief is expected from FY26. REC reports solid net interest income growth, but loan growth tracks below guidance. They maintain profit growth expectations despite shrinking PCR due to resolution. Stock performance has been weak over the past year. In Q3 FY25, the reverse provisions for the second consecutive quarter. AUM growth falls slightly below their guidance. They express confidence in achieving AUM growth of 15 to 17% in FY25. HSBC reiterates a buy rating for Bharti Airtel with an unchanged target of 1,940, indicating a 16.8% upside. The company is well positioned for return on invested capital improvement driven by margin expansion and better invested capital turnover. Mobile ARPU is forecasted to reach rupees 301 by FY27. They also expect deleveraging to improve as capex intensity is projected to decline. Somani Ceramics Q3 earnings show revenue and EBITDA in line, but profits miss estimates by 50%. Higher staff costs impact PAT, while overall volumes are up. Own manufacturing and tiles JVSC declines. The management expects tile volumes to grow in mid-single to high double digits in Q4 of FY25. We should see 200 basis points increase in margins over the next few quarters, says Abhishek Somani, MD and CEO of Somani Ceramics. He says that margin range of 8 to 8.5% is not a new normal. The company expects better capacity utilization going ahead. Let's now focus on an NDTV Profit exclusive. Infosys has been handing out pink slips in bulk. The company is laying off nearly 700 freshers at its Mysuru campus, according to the IT Employees Union. The terminated employees onboarded just a few months ago are being made to sign confidentiality agreements. Infosys claims the layoffs are due to freshers failing internal tests as per their contractual agreement. On to another NDTV Profit exclusive. The Reserve Bank of India is launching an exclusive bank.in domain for Indian banks starting April 2025 to combat financial fraud. This move aims to help customers easily identify legitimate banking websites and reduce the risk of cyber threats. Additionally, a fin.in domain is planned for the broader financial sector. RBI Governor said so. Amidst the noise of over 100 illegal Indian immigrants being repatriated by the US, External Affairs Minister S. Jaishankar shares data of the last 15 years. He says such actions by the US is not new. A total of 15,756 illegal Indian immigrants have been deported by America since 2009. And in the wake of the immigrant issue with the US and the deportation row, India is seriously considering to enact a new law to promote safe, orderly and regular migration for overseas employment. 2 schools in Noida and Delhi received bomb threats via email. Bomb and dog squads reached spot. As per SOP, campuses were evacuated and the police has begun its investigation. Delhi police informs that St. Stephen's College too received a bomb threat. Another incident at Mahakumbh. This time a fire breaks out near tents of pilgrims, but fire engines act immediately and control the blaze. No casualties reported. No casualties reported. Preliminary investigation hint at a possible short circuit to have triggered the fire. PM Modi's Pariksha Pe Charcha to get a new venue this year. The 8th edition will take place at the iconic Sundar Nursery, and many celebrities like Deepika Padukone, Mary Kom, Vikrant Masi, Sadhguru, among others, will address students. Launched in 2018, the program is designed to help students from class 6 to class 12 deal with the stress of board exams. On to some international news. Trump takes another step displaying allegiance to Israel. He signs an executive order slapping sanctions on International Criminal Court that had issued an arrest warrant against Benjamin Netanyahu. The US president calls the investigations baseless. He further freezes assets and imposes travel ban against ICC officials. Bangladesh riles up in massive commotion as a mob vandalizes ousted Prime Minister Sheikh Hasina's family home and also targets houses of her relatives. Furthermore, the angry public attacks homes of Awami League leaders too. This happens just when Hasina was about to address her supporters online. A US plane carrying 10 people goes missing mid-air over Alaska. The Alaska Department of Public Safety reports that the aircraft operated by Bering Air disappeared on Thursday around 4 p.m. local time. The flight last transmitted data at 3:16 p.m. over the Norton Sound area. America brings forth a bill to ban the Chinese AI hero DeepSeek. They want to proscribe DeepSeek on grounds of data security. This comes after a US cybersecurity firm found that the AI model contains hidden code capable of transmitting user data to China Mobile, a state-owned telecoms firm. India kickstarts series against England on a high note as they defeat visitors by 4 wickets in Nagpur and take a 1-0 lead. Vice captain Shubman Gill emerges as a star performer for men in blue. He scores 87 runs and gets awarded as the man of the match. A recent shocker blows away cricket fans as Australian all-rounder Marcus Stoinis announces his retirement from one-day international with immediate effect. He says the decision comes as an effort to concentrate on T20 cricket instead.
नमस्कार, आप देख रहे हैं एनडीटीवी नेटवर्क। मोदी सरकार के तीसरे कार्यकाल का पहला बजट, और वो भी ऐसा बजट जिससे अगर उम्मीद करते हैं कि वो बड़े सपनों को साकार करे और प्रामाणिक हो और ट्रांसपेरेंट हो, तो आप कह सकते हैं कि वित्त मंत्री निर्मला सीतारामन ने जितने बजट अभी तक पेश किए हैं उसमें ये सबसे शानदार, सबसे बड़े सपने वाला और सबसे ट्रांसपेरेंट बजट है। इसके डिटेल समझते हैं क्योंकि इसमें सबके लिए कुछ है या कुछ मिसिंग भी है, ये पता करने की कोशिश करते हैं। वित्त मंत्री जी, आपने हमारे लिए वक्त निकाला। किसी भी टेलीविजन नेटवर्क पे आपका ये पहला इंटरव्यू है जो हमारे 6 चैनल के सारे दर्शक देख रहे हैं। कल जब बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। अब इसमें एक R और हम अगर जोड़ना चाहें, रोरिंग इकोनॉमी कैसे बनेगी, विकसित भारत के लिए ये जो ग्रोथ रेट देगा वो 8% से प्लस देगा क्या?
8% देगा ये तो ज़रूर हम सब एक्सपेक्टेशन रख सकते हैं। मैं देख रही हूँ कि अगले 20 साल 25 साल के लिए भारत का फंडामेंटल्स आज ठीक है, मैक्रो इकोनॉमिक फंडामेंटल्स। इसको और मजबूत करने के लिए हम कदम उठाना चाहिए। इसमें प्रधानमंत्री जी पहले से ही हमें गाइडेंस देते रहे कि इस साल के बजट के लिए आप पूरे अच्छा सा तैयारी करो कि फंडामेंटल स्ट्रॉन्ग करने के लिए। और उसमें एक और पहलू ऐड भी किए माननीय प्रधानमंत्री जी ने कि मध्यम वर्ग जो हमें ऑनेस्ट टैक्स पेयर के नाते टैक्स भरते रह रहे, उनके लिए हम कुछ करना है। तो क्या करना है? आप कुछ वर्कआउट करके आओ। ये था उनकी गाइडेंस शुरुआत से ही।
जी, तो क्या मैं ये इंटरप्रेट कर सकता हूँ कि चूंकि सरकार का फोकस बिल्कुल सबसे ज़्यादा गरीब, पिछड़े, दलित लोगों पर ज़्यादा रहा, गरीबों पर ज़्यादा रहा, रूरल एरिया पे ज़्यादा रहा, मिडिल क्लास कहीं ना कहीं नेग्लेक्ट हो गया, जो कि बिल्कुल आपका एक कोर है भारत के लिए, आबादी भले ही छोटी हो, तो उस नेग्लेक्ट को एड्रेस करने का कोशिश किया गया है।
इसमें एक मैं स्पष्ट करना चाहती हूँ, पहले से ही प्रधानमंत्री मोदी जी 2021, 2020 उस समय से ही ऑनेस्ट टैक्स पेयर का रिकग्निशन के नाते फेसलेस ले आए। इनकम टैक्स चार्टर, टैक्स पेयर्स चार्टर हमने घोषित करवाए और टैक्स पेयर्स को सर्टिफिकेट भी भेजते थे कि समय पर टैक्स भरने वाले टैक्स पेयर हो या रेगुलरली टैक्स पेयर, उनका रिकग्निशन हो। ये सब करते आ रहे। टैक्स पेयर का रिकग्निशन और सम्मान कभी भी माननीय प्रधानमंत्री जी के मन में है। और इस समय जब दुनिया के तुलना में हम फास्टेस्ट ग्रोइंग इकोनॉमी रह रहे हैं, पिछली बार भी रहे, पिछले 2-3 साल में रह रहे, और IMF और वर्ल्ड बैंक के नज़रिया में हम अगले साल भी फास्टेस्ट ग्रोइंग रहेंगे। और इस संदर्भ में क्या हम टैक्स पेयर्स को सम्मान करने जैसे ये काम कर सकते हैं? इस गाइडेंस के नाते हम काम किए, इसीलिए इस बार इनकम टैक्स का ये प्रपोजल हम ले आए।
एक और क्यूरियोसिटी है लोगों में, दैट इज हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
मिडिल क्लास के चर्चा बहुत होता है और आज रियलिटी हम देखें तो कम से कम 1 लाख तक पर मंथ सैलरी कमाने वाले के लाइफस्टाइल कैसे हैं, और अगर वो शहर मेट्रोपॉलिटन शहर में रहते हैं उनका एक्सपेंसेस क्या है, और उनके लाइफ में स्टार्टिंग स्टेज में रहने वाले का खर्च क्या क्या हो सकता है, ये सब असेस करने के बाद हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं। इसीलिए अराइव किए कि एटलीस्ट 1 लाख पर मंथ राहत जरूर दें।
जी, एक क्या अप्रोच में कोई चेंज है, शिफ्ट है? अभी तक इंफ्रास्ट्रक्चर डेवलपमेंट लेड ग्रोथ की तरफ सरकार का कोर फोकस था, जहाँ तक बिल्डिंग ब्लॉक्स का सवाल है। अब आप क्या कंजम्पशन लेड ग्रोथ देख रहे हैं? इसी वजह से इस बार केपेक्स पे मामूली इंक्रीमेंट है।
पहले मैं उस बात को मैं पकड़ना चाह रही हूँ, केपेक्स में मामूली। जब कोविड के समय से हर साल 15%, 20% इंक्रीमेंटल नंबर ऐड करते हुए ग्रोथ इन पब्लिक एक्सपेंडिचर ऑन कैपिटल एसेट्स इतनी दूर तक ले आए, हम पिछले साल 11.11 लाख करोड़ का अनाउंसमेंट की। उसके ऊपर अभी जब 10% के ज़्यादा 10.23% इंक्रीज हो रही है, और RE से कंपेयर करते हुए इट रीचेस अ हायर नंबर 11.21, 24, ऐसे वो मामूली सा हो गए। 11 लाख से अधिक भारत देश में लगातार पिछले 2 साल और उससे पहले 10 लाख, ऐसे एम्फेसिस ऑन पब्लिक एक्सपेंडिचर जब हो रही है, 10% ओवर RE इज ऑल्सो मामूली। आप एक बार इसको रिकग्नाइज करना चाहिए कि रिपीटेडली पब्लिक एक्सपेंडिचर ऑन कैपिटल एसेट बिल्डिंग इतनी लेवल तक पहुंच गई, आज 10.23 ग्रोथ ऑल्सो इज लुकिंग लाइक मामूली. नो, आर एम्फेसिस ऑन कैपिटल एक्सपेंडिचर कम नहीं हुआ है. आज भी उतना ही अमाउंट खर्च कर रहे हैं और स्टेट्स को भी दे रहे हैं 50 इयर्स का इंटरेस्ट फ्री कैपिटल एक्सपेंडिचर का पैसा. सो उसमें कोई कुछ कम नहीं है. मगर आप जो बात पूछ रहे हैं कि कंजम्पशन के ओर खर्च करने के लिए अभी शिफ्ट हो गया, क्या शिफ्ट नहीं, उसको भी जोड़ रहे हैं कि ग्रोथ के लिए अगर इंस्ट्रूमेंट्स चाहिए और ट्रिगर्स चाहिए, जैसे कैपिटल एक्सपेंडिचर पिछले 5 साल में लगातार उसके द्वारा इकोनॉमी को ग्रो करने के लिए हम मल्टीप्लायर इफेक्ट को ध्यान में रखते हुए खर्च किया. अभी कंजम्पशन का भी हम प्रोत्साहन इससे आएगा, ये हमारे कैलकुलेशन है. मगर हमारे पहले मकसद ये था कि ऑनेस्ट टैक्स पेयर्स का हम ज़रूर रिकग्नाइज करना है.
जी बिल्कुल, बिल्कुल ठीक है आपने. एक आर्गुमेंट तो ये है कि सरकार और केंद्र सरकार और राज्य दोनों मिला लें तो 17% का कैपेक्स ग्रोथ है, जो इंफ्रास्ट्रक्चर साइड में भी काफ़ी काम करेगा और कंजम्पशन पर भी फोकस करना है. एक बात बताएं, ये बहुत लोग समझना चाहते हैं कि 1 लाख करोड़ का रेवेन्यू फॉरगॉन अगर है, इसमें 1 लाख करोड़ अगर खर्चे में शिफ्ट होता है, क्या वो हमारी जो ग्रोथ की ज़रूरत है, विकसित भारत का जो टारगेट है, उसके लिए एडिक्वेट है?
अगर एक ग्रोइंग नेशन हमारी जैसी इसमें खर्च और ज़्यादा करना और तेज़ी से करना, आंकड़ा इतना तक पहुंचना, तो कोई भी बोल सकते हैं नो इससे ज़्यादा होना चाहिए, इससे ज़्यादा होना चाहिए. मगर सबका एक लिमिट भी है. हमारे रिसोर्सेस का भी हम ध्यान रखते हुए, किसी का बर्डन ना करते हुए इकोनॉमी को आगे ले चलना है. एक और डेटा मैं आपको अंदाज़न बोलना चाह रही हूँ. हमने इस बार 4.3% तक जीडीपी के तुलना करने में 4.3% ऑफ द जीडीपी कैपिटल एक्सपेंडिचर को खर्च कर रहे हैं. इफेक्टिवली बोथ दैट विच गोज टू द स्टेट्स एंड हमारे 4.3 ऑफ जीडीपी. और आने वाले साल का प्रेडिक्शन फिस्कल डेफिसिट का हम क्या बोल रहे हैं, 4.4, जो हमारे ग्लाइड पाथ के तहत 4.5 के नीचे तक पहुंचना है, वो पहुंचने के लिए एस्टिमेट बोल दिया. उससे हमें क्या समझ में आ रहा है कि 4.3% ऑफ द जीडीपी वी आर स्पेंडिंग ऑन कैपिटल एक्सपेंडिचर. फिस्कल डेफिसिट 4.4 प्रेडिक्ट कर रहे हैं, विच मीन्स हम बोरो कर रहे हैं डेफिसिट फाइनेंस के लिए, तो वो सीधा अच्छा कैपिटल एक्सपेंडिचर के लिए जा रहा है. सो एज अ रिस्पॉन्सिबल गवर्नमेंट, और मोदी जी का सीएम रहते हुए उनका एक्सपीरियंस, अभी पीएम रहते हुए 3rd टर्म है उनका उसमें एक्सपीरियंस, ये सब में मैच्योरिटी. अब देखिए, कोई सोशल वेलफेयर प्रोग्राम का कम नहीं हो रही है. ऊपर से टैक्स पेयर्स को रिवॉर्ड करने के लिए, रिस्पेक्ट करने के लिए बड़ा सा कदम उठाया गया. फिर भी ये डेटा पॉइंट बहुत महत्वपूर्ण कि हम बोरो करने वाले नंबर, डेफिसिट नंबर, इज गोइंग टुवर्ड्स कैपिटल एक्सपेंडिचर. Effective capital expenditure is also 4.3. 4.4 is your fiscal deficit for the coming year. Responsible handling of your borrowing हो रही है. इसको मैं आप जैसे वरिष्ठ सीनियर पत्रकार जैसे लोग इसको रिकग्नाइज करना चाहिए.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं.
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए हैं।
Sources tells NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers.
The RBI cuts rates by 25 basis points. This is the first rate cut in 5 years. Governor Sanjay Malhotra says inflation is moderating, but economic growth remains challenging as global factors weigh. Markets slipped despite rate cuts as the RBI governor flags slowing economic growth and global uncertainties as key risks. Ola Electric's loss widens in the third quarter. Revenue also dips nearly 20% from the previous year. Mahindra & Mahindra reports a strong quarter with profit up 19%, meeting estimates. Exit polls predict that the BJP could win the national capital 27 years after being out of power. 9 out of 10 exit polls predict a clear BJP victory. Search is underway for a small Bering Air flight that went missing over western Alaska. The plane had 1 pilot and 9 passengers on board when it suddenly went off the radar. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahugna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, the Reserve Bank of India has reduced its key repo rate for the first time in nearly 5 years to boost the economy. The RBI Monetary Policy Committee unanimously decided to cut the key rate by 25 basis points from 6.5% to 6.25%. The MPC, which comprises 3 RBI members and 3 external members, had last reduced the repo rate in May 2020 and had kept it unchanged in the last 11 policy meetings. The move comes barely a week after the centre cut personal income tax to boost the consumption. Now, this was also the first time the RBI has acknowledged a slowdown in growth. Governor Sanjay Malhotra spoke about the demand slowdown in urban and rural areas.
On the demand side, rural demand continues to be on an uptrend, while urban consumption remains subdued, with high-frequency indicators providing mixed signals. And we are aware we got the Nielsen survey report also just yesterday. Going forward, improving employment conditions, tax relief in the union budget, moderating inflation, together with healthy agricultural activity bode well for household consumption.
The RBI's Monetary Policy Committee noted a decline in inflation driven by a positive food outlook and expects it to moderate in FY26, providing relief to Indian households. Under Governor Sanjay Malhotra, the RBI projects inflation at 4.2% for FY26.
Core inflation is expected to rise but remain moderate. Rising uncertainty in global financial markets, coupled with continuing volatility in energy prices and adverse weather events, presents upside risks to the inflation trajectory. Taking all these factors into consideration, CPI inflation for the current financial year is projected at 4.8%, with Q4, the current quarter, at 4.4%. Assuming a normal monsoon, CPI inflation for the financial year 2025-26 next year is projected at 4.2%, with Q1 at 4.5%, Q2 at 4%, Q3 at 3.8%, and Q4 at 4.2%. The risks are evenly balanced.
Viewers, let's bring in our banking editor Vishwanath Nair to give us more perspective on the rate cuts and what it could mean for India.
All right, so policy as expected, but still resulted in a lot of smiles. Of course, the RBI governor, in his maiden monetary policy speech, Sanjay Malhotra has delivered a 25 basis point rate cut. This was widely expected by most economists who were polled across the country. 25 basis point rate cut, while this is an initial sort of a move towards an easing cycle, what stood out was more important, the statement that he made towards the end of his speech, where he said that the MPC felt that there was a need for a less restrictive monetary policy because that is what the economy needed. As far as the growth and inflation outlook are concerned, largely the same, but says some minor changes. You know, your GDP growth for FY26 is pegged at 6.7%. This is on the upper end of the government's own sort of estimate of 6.3 to 6.8% GDP growth for the next financial year. Similarly, on inflation, yes, it is coming within the 4% band. It's not still below 4%, but those are all healthy signs. According to the RBI governor, food inflation is showing signs of moderation, and unless there is some kind of major sort of supply side issue, food inflation will likely continue to moderate. It is important, of course, to also look at how the RBI governor is playing up the issues with respect to global uncertainty. So yes, there is a global macroeconomic uncertainty. Secondly, trade policies are uncertain at this point in time, and material weather changes. These are all key risks which could affect future monetary policy, growth and inflation outlook. So that's something that the RBI governor is keen to point out to the rest of the system. Overall, while he maintained what was widely expected in the monetary policy, one statement that he made apart from this also caught my eye, which was when he said that regulations are not devoid of costs. So that was an important sort of message that is coming in. That the RBI governor is recognizing that yes, for financial stability and for orderly functioning of the financial system, good regulations are essential, but regulations are not devoid of cost, and therefore the RBI will keep that factor in mind for future drafting of regulations. Remember that regulations around liquidity coverage, regulations around project financing, regulators around expected credit loss framework for the banks, all of these are pending finality at this stage, and all lenders in the system are awaiting the RBI's green signal on when these rules will come into play.
Right. Thanks, Vishy, for that. Now, the Reserve Bank of India will be implementing an exclusive domain to tackle financial frauds. Bank websites have been mandated to end domain names with bank.in or fin.in. The RBI's decision comes on the back of its concerns over increasing cyber threats and digital risk. Governor Malhotra further highlighted that the central bank has been taking various measures to enhance digital security in the banking and payment systems, such as the additional factor of authentication for domestic and international digital payments. Now, here are some reactions from a variety of experts to the Monetary Policy Committee outcome. Take a look.
So our expectation is that we will see growth actually not pick up as optimistically as what the RBI is expecting. We're looking at about a 6.4% GDP growth rate. I think it's going to be like quite a difficult operating environment. We know the challenges about exports, but of course, exports aren't that key economic driver for India. It's more about what's happening domestically. And I think 125 basis point cut doesn't materially change the game at this point. I mean, sure, we do have a bit more fiscal support coming on board, particularly from April around those adjustments for middle-income households. But I think it's still going to be a challenging environment as well. And I think one thing and one area that, we don't pay enough attention to as we should is that, labor supply overseas and that flow through to remittances and then that impact on private consumption. I mean, if we do see a material pullback in labor supply of overseas workers in the US, then that could actually flow through to a weaker consumption picture as well in India. And of course, consumption is such a critical driver of the economy. So I think that's a risk that is quite frankly, flying under the radar at this point that we need to pay really close attention to. And I think in terms of how much more the RBI is going to move, I don't think we're going to see as much movement as what we've seen from other central banks like the ECB, the Fed, the Bank of England. I think they're going to tread a lot more carefully because the one complicating factor for the RBI when it comes to easing policy that these other central banks don't have as much is around the currency. And because we do have such a weak rupee, that potential flow through to imported inflation is a concern. And I think one thing as well that we need to keep a close watch on is, energy prices are low at the moment, but if we do get a resurgence at the same time that the rupee is extremely weak, then that's going to be particularly troublesome for an economy like India. So I think we're not going to see much more cuts. I think it's going to be a shallow easing cycle this year, which really does limit the revival in domestic demand that we will see as a consequence of that.
So I definitely won't call it dovish. He did mention upside risks to inflation. I think there was a very hopeful note which was struck in a sense talking about resilience amidst global uncertainties, etc. But it was a very pragmatic policy, and I think overall very much in line with what we were expecting, that we'll get a rate cut without any change in stance. And even towards the end, the mention that we're going to look at the outlook every single time to decide what we're going to do, I think that's absolutely the right approach. In any case, this rate cut cycle is expected to be very shallow. We're not expecting more than one more rate cut. So there's very little point actually to change the stance to accommodative. So I think it's much better that we've retained it at neutral. And this gives all the flexibility to the MPC to decide policy after policy what looks best for the Indian economy. And a couple of more points, 4.2% CPI inflation for next year, that's in line with our own estimate. And what's that's basically suggesting is that neither are the tax cuts expected to be very inflationary. And while, of course, the upside risks to inflation were mentioned, but again, similar to our own view, that the exchange rate depreciation will have a much bigger impact on the WPI and a smaller and more lagged and delayed impact on the CPI. So while upside risks were mentioned, the CPI inflation projection actually for FY26 has been mentioned at 4.2%, which is in line with our own extant projection as well. We're penciling in one more rate cut. That's what we were penciling in before today as well. Quite frankly, if we were to be looking at two more rate cuts, then I think they would have changed the stance to accommodative. I'm not sure they would have continued with a neutral stance if they were going to be considering two rate cuts going forward. And that's why I think sticking with a neutral stance makes sense in this situation, where if you're only going to cut rates one more time, why would you have moved to accommodative? And I know I said it before, I'm going to say it again, the focus on the upside risk to inflation, I think that's another hint that they're not looking at too many rate cuts going ahead.
Viewers, now let's shift our focus to the markets. So benchmarks end in red for the third consecutive session, with FMCG, PSU banks dragging the markets lower. Metal and auto were seen in green with gains of nearly 2%. My colleague Harsh joins in with a complete market roundup.
Well, the policy didn't really impact markets because kind of muted reaction on at least the benchmark, as well as on the Bank Nifty, as well as the Nifty IT index. Muted sort of reaction. And, you know, the question therefore is whether a lot was already built in. The 25 basis point rate hike was largely in line with what the street was penciling in. Let's talk about broader markets, because that's where some bit of action actually was. No material movers though on the back of policy, but there was plenty of action. The Nifty mid-cap index was up and doing fairly well for itself. The Nifty small cap index though was down, and therefore that divergence with regard to both mid-cap versus small cap. The breadth of the market was in favor of the declines, and but it kind of improved a little bit towards the end, so that was something to look at. In terms of the Nifty, the breadth was fairly stable. Metal stocks really stood out. Possible recovery in China, increase in pricing, possible duty with regard to imports, steel imports, keeping the sector buoyant. And you had some commentary as well from ArcelorMittal talking about how possible price hikes in 2025 could well mean that steel stocks will do well this year. And that kind of aided some of the counters. You had maybe a Tata Steel up 4% and top Nifty gainer in trade today. Britannia, on the other hand, slightly muted set of numbers, and therefore you saw FMCG stocks sulk along with the Britannia. Britannia was down around 1.5% plus in trade today. And therefore some of those counters also in focus. But outside of that, no real major movers in trade. On the back of the policy, not at all. On the back of earnings, there were plenty. And the BSE 500 top gainers, top losers on your screen now. So those are some big movers in trade on this Friday, last trading day of the week.
Thanks, Harsh, for that market check. Now, Mahindra & Mahindra has reported its Q3 earnings, with revenue up 20% and net profit up 19% compared to the last quarter. Tushar joins us to give us a breakdown on these numbers. Tushar, over to you.
So essentially, Himakshi, what we are looking at is a 20% growth year on year for Mahindra. And there are 5 key takeaways. We have those numbers with us about how the margin expansion has happened, but there are 5 key takeaways from the Mahindra and Mahindra press conference. The first is that Mahindra is reworking how it calculates its margins going forward in Q4 to include for the EV business. Remember, Mahindra will be the contract manufacturer for Mahindra Electric to manufacture the BE6 as well as the XEV9e electric vehicles. Mahindra also expects the income tax relief as well as the RBI rate cut that happened a few hours ago to impact the volumes of its entry-level offering, that's the 3XO. That should come as a boost for the 3XO volumes going ahead. Number 3, the cost picture is evolving for the company in the backdrop of commodity prices, that is raw material inflation as well as an adverse exchange rate, that is the rupee weakening in the face of a stronger dollar. Yeah. So the key takeaways that we are seeing from there, as well the rural and urban demand that the company has is actually still on a par. Something which is actually unique to that company, because others are showing that the rural performance is much better. Mahindra is actually expecting Tech Mahindra as well as Mahindra Finance. The turnaround is already done. Now growth should come in.
Yeah. Right. And Tushar, stay with us. Let's focus on an NDTV Profit exclusive on that note. Infosys has been handing out pink slips in bulk. So NDTV Profit has, in fact, accessed one of the letters. So Tushar, tell us what you have gathered from your sources.
So what we have learned is that Infosys has let go of 700 freshly hired graduates from its Mysuru campus. They've actually been forced to sign letters to exit the company. So what our sources tell us is that an IT employees union has actually alleged that the Infosys has terminated the freshers which were onboarded just a few months ago after a 2-year delay from when they first received those offer letters. The terminated freshers are being made to sign confidentiality agreements, as well as these are the freshers who, but actually Infosys actually says that freshers who have failed the internal tests after onboarding are being fired and not at any whim or any fancy of the company. This is as per what the sources and what the companies are telling us. It's an evolving situation, and that's what Infosys is accused of. Infosys says it's because these particular freshers failed the internal tests.
Right. Thanks, Tushar, for getting us those exclusive details there. Now, viewers, the Cabinet is likely to approve the new income tax bill today. The Cabinet meeting will be held at 6 p.m. under the chairmanship of Prime Minister Narendra Modi, and it is expected to be introduced in the Lok Sabha on Monday, the 10th of February. So, to give us more details on the same, I'm being joined by my colleague Rishabh Bhatnagar. Rishabh, tell us more on the new income tax bill.
Right, Himakshi, what we're hearing is that in a few hours from now, the cabinet will meet. They will be tabled. The new income tax bill will be tabled in front of them. Post that, it will be sent to the Parliamentary Standing Committee because their approval is also required on these bills. Post that, it will be introduced on Monday in the Lok Sabha during the budget session that is ongoing. Now, this is the same income tax bill that was announced during the budget on February 1st by FM Sitaraman. This is the bill that is set to simplify and sort of absolutely just redefine how sort of the tax structure works. The bill will be cut in sort of half its current length, from about 6 lakh words to about 3 lakh words. It will be made very simple so as to a common taxpayer can now access the tax bill and understand the implications of how much tax they pay and where it goes. So that is the intention of this current one. We will be tracking this soon as it evolves into the evening.
Right, Rishabh. Now stay with us. The time for incremental progress is over, and the next decade will define global artificial intelligence leadership. This is what Niti Aayog revealed in a discussion paper on changing AI landscape. So Rishabh, tell us more about it.
Right, so this is a discussion paper that is out on Friday, and it's penned by a distinguished fellow of the Niti Aayog, Debjani Ghosh. She was the former head of NASSCOM, which is a leading IT lobby right here. She basically writes that it is the time is absolutely perfect right now for India and the government to build a talent repatriation program. What this means is essentially that there is a lot of AI talent across the world that is Indian in origin. A lot of Indians settled abroad that are working on the latest groundbreaking innovations in artificial intelligence. Sadly, they are abroad and they are working for agencies and organizations that are based abroad and not contributing to India's progress. So this is the time to build a repatriation program, call them back to India, sort of incentivize them to build models here, right? India is focused on its AI program as well through the India AI mission. We've seen that the India AI mission is focusing on various pillars like foundational models, it's focusing on infrastructure as well as data sets. So the time is right to get all this global talent that is Indian in origin back to India and sort of build on this AI journey that is currently very rapidly progressing with the evolution of DeepSeek and other such models.
Absolutely, Rishabh. Thanks for getting us those details there. Now, moving on, in a setback to the Berman family, the Supreme Court today refused to allow closing of the public open offer given by them to acquire an additional 26% stake in the Delhi-based Religare Enterprises Limited. My colleague Varun Gakar joins us with more details. Varun, over to you.
Yeah, that's right. So the Supreme Court has extended the Berman family's open offer for an additional stake in Religare Enterprises till the February 12th. Now, a little background before we delve into the details of the case. The Berman family is actually seeking to increase its stake in Religare Enterprises, and the family has made an open offer to buy the additional shares at rupees 235 per share. Following through certain entities, following this open offer, the Berman family's stake in Religare is set to cross the 50% mark. Now, crucially, Danny Gaikwad, a US-based investor, has made a competing offer at rupees 275 per share for a 26% stake, which is essentially 17% higher than Berman family's share in this offer. Now, the offer has been, Gaikwad's offer has been currently rejected for want of regulatory approval and requirements. However, Gaikwad has made another application to the market regulator SEBI seeking an approval on this offer. Now, the top court has directed Danny Gaikwad to deposit rupees 600 crores in terms of its competing offer against the Berman family's open offer on or before February the 12th, which is the date to which the extension has been granted by the top court. And the court has also said that the public offer, which was set to close today, is set to continue till 12th of February. And in case the 600 crore is not deposited by Gaikwad, then this order of the top court will stand vacated. The top court has also stated that this February 12th, the deposit, if it doesn't come in by February 12th, the order of the top court stands vacated.
Right, Varun, thanks for getting us those details there. Now, viewers, on this week's episode of The Disruptor, celebrity chief, author, and perhaps India's most iconic culinary icon, Vikas Khanna opens up about his journey from Amritsar to New York and what it has taken to achieve the magnitude of success that he has had. Listen in to a snippet of that and tune in for the whole episode at 6 p.m. today evening.
Let's start from the beginning. और ये इसके बारे में आपने बहुत बार बताया भी है अलग अलग इंटरव्यूज में, लेकिन हमारे ऑडियंस के लिए एक अमृतसर का लड़का खाना बनाना सीखता है, न्यूयॉर्क कैसे पहुंचता है?
मैं न्यूयॉर्क पहुंचा नहीं, मेरे पास चॉइस नहीं थी उस टाइम पे कोई लाइफ में। मेरा बैंक्वेट था बहुत सक्सेसफुल अमृतसर में, तो एक लोकल ऑफिशियल्स के साथ कोई झगड़ा हो गया छोटी सी बात पे, तो उन्होंने मेरा सारा बैंक्वेट तोड़ दिया। I was 29 and I was heartbroken. जो चीज़ मेरी दादी ने, मेरी मम्मा ने हाथ से बनाई थी और उसको बिल्कुल उन्होंने क्रश कर दिया. There was no empathy, there was no reasoning, they didn't give us a moment to even think what they're doing. They just came and they bulldozed everything. उसके बाद मुझे लगा कि रीस्टार्ट कैसे करूँगा मैं लाइफ को. You know, I was a graduate from Manipal. I had trained under Taj Welcome Group.
मणिपाल में आपने क्या
होटल
सीखा? होटल मैनेजमेंट.
So I had already worked under Taj in Delhi. I worked for Mughal Sheraton in Agra. I had worked for Siroc in Bombay. I had worked with Carl Kathmandu में sold Tubroids in. So मेरी बहुत training थी. And suddenly everything is just means it adds up to nothing. तभी मेरे भाई ने मुझे किताब दी थी Johnston Livingstone Seagull. So that book really moved me and मेरी बहन ने कहा कि न्यूयॉर्क is the place. अगर जंप मारना ही है ना तो न्यूयॉर्क में मार. अगर लैंड हो गया तो क्यूजीन चेंज कर देगा. This we are talking about 2000. I go to American embassy and I tell them everything what's happened to me. I got a visa. I went to America and that's how everything changed.
और अमेरिकन एम्बेसी में आपको वीज़ा मिल गया?
हाँ जी. मैंने सब कुछ बताया कि मेरा बैंक्वेट था और वो मेरे सामने तोड़ दिया. And I don't do business for the heck of making money. I start turning my business into a temple form, at least in my mind. मुझे लगा मेरा मंदिर तोड़ दिया. मेरा विश्वास टूट गया बिल्कुल इस टाइम पे. और मुझे लगता है कि मैं देसी खाना जितना मुझे आता है आई कैन मेक इट. मैं आई एम टेलिंग हिम डिशेस आई फील आई मास्टर्ड. एंड आई होप समवेयर ही इज़ वाचिंग इट एंड ही से दैट he made the right decision, that somebody was so passionate of bringing their cuisine and culture to the world stage. And it's been almost 25 years. I'm keeping my promise.
Viewers, don't forget to catch this exciting chat at 6 p.m. today. Now, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं.
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है.
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए.
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं.
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, बिजनेस नहीं है इसमें. This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for, President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है, शाहरुख खान.
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप मिक्स्ड मिलेट्स डालते हैं.
आपको ट्रम्प से आपको खिचड़ी खिलानी है?
हाँ, तो खिचड़ी खाना नहीं है.
What is the one vegetable you will never eat?
मैंने मेथी खानी बंद कर दिया है.
मतलब आप करेला, बैंगन ऐसा?
I love करेला.
All they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Well, today we're talking about Ixigo, also known as Travenue, and what we're tracking today is, well, largely the company which is into travel and tourism. But now we do know that this particular company has also listed just last year. So there is a lot of interesting data that we can potentially put out for you. We start off with talking about what the company is all about. We have it was incorporated in 2007, and the company runs an online platform, and many of you may be familiar with it as well, as it provides information as well as booking services for the travel industry. It also provides software development and maintenance services to its customers, and this bookings will involve bookings for trains, flights, buses, hotels, what have you. Now, in terms of the latest metrics, what we are seeing is that the monthly average user stands at around 87 million. That's around 8.7 crores, and users from about 2,400 towns uses the Ixigo website. We also have deep penetration as far as the tier 2 and tier 3 towns are concerned. For the company, it stands at a little less than 94%. And the lifetime transacted users stand at around 41 million. So that's as far as what the company does and what it's all about. But I'm going to get in my colleague Mahima to tell us about how things can pan out for this particular company and how things have come through. So what we usually do is we talk about the various fundamentals of the company. This would include the income statement, the balance sheet, cash flows, return ratios, moving beyond the financial statements. We also look at the shareholding, what the stock has done, as well as what the street makes of it along with the valuations. So Mahima, good morning and thanks for joining in. Why don't you take us through the revenue first, and as well as the profitability for this particular company, and the several revenue streams in this case.
Right. So in terms of revenue, if we see the 9 months FY25 performance, they're already standing at 629 crores of revenue, which in FY24 they've done 655 crores. So they're nearing their FY24 mark, and there's still one more quarter to go. So they certainly outperform in FY25 as compared to the FY24 metrics. The 3-year CAGR for revenue has been 69% for the company. EBITDA has grown to 55 crores as compared to 43 crores in FY24. So EBITDA is already much higher than what they did in FY24. In terms of margins have significantly improved from 6.7% to 8.9% when it comes to the 9 months FY25 figure. And net profit, however, has come down, and this is because their advertisement expense overall has gone up. In terms of multiple revenue streams, since it does bookings from different aspects, flights, trains, hotels, etc. They have agent services charges, they have payment gateway charges, value-added services, advertisement income, airline commissions, and convenience fees are some multiple sources of revenues, which kind of augur growth for the company. In terms of key operational metrics, the gross transaction value was up 48% YOY this particular quarter, and monthly transacting user was also up 38% for the company this quarter. So both of these combined the gross transaction value as well as the monthly transacting users is what has kind of aided the revenue for the company, Agam.
Right. So that's, talking about the income statement. Let's also talk about how things have panned out when it comes to the balance sheet. And it's on a strong footing. To be honest, I wasn't expecting a company which is relatively new to the scene and, of course, very, very new to the stock market, certainly, to have such a good balance sheet. So it's debt-free. It does have about nearly 600 crores as shareholders' net worth. This is, of course, accumulated, profits as well. And cash at bank stands at around 143 crores, even as it sees a negligible gross debt currently. So it does seem like it's on a very strong footing coming down to the balance sheet. And I'd reckon it is largely the same for cash flows as well, Mahima.
Absolutely. So in terms of cash flows, the cash flows have improved, when we compare the first half of FY25 versus the first half of FY24. In terms of cash flow from operations, it stood at around 19.4 crores in first half of 24, which is more than, more than tripled in first half of FY25 to 70 odd crores. And in terms of net cash flows, which was negative in first half of FY24, has turned positive to 28 crores in the first half of FY25. So, this financial year has turned out to be a good year in terms of cash flow as well. So, we give a thumbs up in terms of cash flow as well.
Fair enough. So, actually, if you consider all the three financial statements, they look very, very good. And based on that, I'm going to come down to return ratios. So, return ratios are improving. There's no doubt about that. But they are not to the tune of, 20%, 25% is what we might expect from an ideal situation. But we're not going to give that a thumbs down just because those ratios are down, or rather not up to the mark, because we have seen these ratios move from the negative well into on their way to hitting that 20% mark around there. So as far as the return on capital employed is concerned, at the end of 2024, that stood at nearly 17%. Return on assets stood at around 12.5%. This is coming from the negatives. So, which is why, they've seen an improvement. But once we see the company hit 20% mark, well, we'd probably give that a thumbs up as well. For now, we're going to go with a neutral. But Mahima, let's talk about the shareholding as well. This one is a very interesting one for this particular company.
Absolutely, because there's no promoter shareholding in this particular counter. And which is why, we'll probably give this particular metric a neutral rating, because there's no skin in the game when it comes to the promoters, right? But we've seen that FIIs have been increasing their stake. Their stake has been increased from 59.8 to 61.1 in December 2024. DIs have seen a slight downtick in terms of their stake, but public holding has, kind of remained strong. Slight downtick seen with respect to, September 24 and, when you compare that to December 24 quarter. But in terms of an interesting thing to watch out for here is that both the CEO as well as the co-CEO and the director of the company are holding quite a significant stake in the company. Alok Bajpai, who's the CEO of the company, not the promoter of the company, holds 4.86% stake, so almost a 5% stake in the company. And Rajneesh Kumar, who's the director and group co-CEO, is who's again not the promoter of the company but holds around 5.21% stake in the company. So both of them combined are holding around 10% stake of the company, Agam.
Right. And this is an important one. And while the founders, the co-founders do have stake in the company, a lot of the decisions will come down to the influence of all the institutions who hold, significant amount of ownership in the company as well. Of course, one might find it heartening to know that the co-founders still have a significant stake, but again, it's going to be something of, middling in terms of our ratings as far as the shareholding is concerned, which is why it's a neutral. But we move on and talk about street credentials. And, well, the stock has done well. I would say that, again, we don't have too much data to move around with, considering it was listed back in June of 2024. So from its issue price, if you was subscribed for the IPO at that point in time, and if you were issued the share price, the shares, which was at around 93 rupees per share, you're looking at a 69% return. But even if you consider and would have bought the company on the listing day, it's given you 17% returns from the closing on listing day all the way until now, and which is not bad. So it has to a certain extent also outperformed the benchmarks, the mid cap and the small cap indices. So it's going to be a thumbs up there as well. That said, again, Mahima, let's talk about the valuations here. They do look very, very expensive.
Right. Before I go to valuations, the 17% mark is despite the kind of correction that the market has seen in the past, 1 month or so. So that's why we've given thumbs up when it comes to the street kit. But yes, valuations does not paint a very rosy picture. If you compare it to the peers, Ixigo is right now trailing at a P of 131 times. So despite of the kind of growth that we've seen in the company when it comes to the revenues, which have grown at a CAGR of around 69%, the stock has seen a lot more traction as compared to the growth of the company, which is why we're seeing the trailing PE at 131 times. Now that compared to its peers, TBO Tech trades at around 81 times, EaseMyTrip trades at 26 times, and Yatra Online trades at 81 times. So right now the only cheap option, well, comparatively cheap option available in the market is Easy Trip Planners. But yes, valuation is definitely a concern, which is why we've given a thumbs down for this particular metric.
And of course, we must remember that these are trailing 12-month valuations. Now, no matter what kind of growth we can see the company, even if they do double their bottom line over the course of the next 12 months, even based on that, you're looking at a price to earnings ratio of around 65 times.
Right.
So it is slightly on the higher end, but finally coming down to the analyst recommendations now. Well, given the fact that it's a relatively newer stock on the stock exchanges, we don't have a lot of coverage on the stock. Also, in terms of our absolute size, it's not a very large one in terms of market capitalization, which is why we just have two analysts on the street at the moment, at least as far as our consensus is concerned, who have a buy rating with an upside potential of around 11%. And because of the fact that there is a relatively lower number of analysts covering it, we'll give it a neutral rating, and that brings us to an overall rating of around 5.5 out of 8. So there you have it. That's the rating coming through. But do remember that so far the company has done very well in terms of its key financial statements. That includes income statement, the balance sheet, as well as the cash flow statement. Of course, we'll continue to keep an eye on all the several other factors. But Mahima, on that note, thanking you for joining me and taking us through these ratings for the company. And we'll move this conversation forward. We are now in conversation with Alok Bajpai. He's the chairman, managing director, and group CEO of Ixigo. Alok, good morning, and thank you so much for joining in. Alok, we've seen what you all have done over the past few years, over the last 9 months as well. The question now comes down to, how are we looking at growth over the next 2 years?
So if you look at the Ixigo story, right, it's a bit unique in some aspects because we did not start out as an OTA when we launched back in 2007, and the journey over a decade that we've had by serving the next billion users and building out utility use cases on trains, buses, and then becoming transactional just before COVID. I think that was a transformational moment for us because we already had a lot of traffic, and we started serving our customers better by helping them complete transactions on our own platform and build value-added services on top. So, our trajectory on revenue is reflective of the fact that, we've been working very hard on converting ourselves from, pure play utility app that we used to be many years ago to a transactional one. And therefore, our monthly active users were growing, but our MTUs also started to grow. And we started seeing transactions ramp up across train, bus, flight. And we did a couple of smart acquisitions during COVID as well, which and one more recently, which have also sort of aided this kind of growth. But if you look at the overall trend line on that growth, right, and you zoom out a bit, you see that last quarter, our revenue run rate, if you look at the annualized number on that, is almost 10 times of what our revenue used to be back in 2019 pre-COVID, right? And the only thing that has earned us that is the fact that we've been extremely focused on customer experience with a specific focus on the next billion users.
Right, Alok. So, moving you towards a transactional app from a utility app right now, keeping all these factors into consideration with the kind of trends that you all have seen over the past few quarters and years, how does this product mix change over the next few quarters and years as well? What can you tell us about the latest changes that are taking place as far as your company goes?
Yeah, so I think the shift you're referring to is more on the product mix, right? Like how people are increasingly buying flights and buses through Ixigo. I mean, trains, we were already the market leading OTA with dominant share, and I think that share has also moved up. We were close to 58% of the online travel agent train booking market as of December, right? And I think bus and flight is where we've really doubled down. And if you look at our flight growth, 73% GTP growth year on year. I mean, just for perspective, the overall domestic flyers grew by about 11% during that quarter, right? So we've actually grown almost 6.5, 7 times faster than how fast the overall sort of passenger market is growing there. On buses also, we've grown at 63% YOY last quarter. And if you understand why this is happening, it's kind of natural in my mind that this is something that, we have a right to grow faster on, because we are starting from, people in tier 2, 3, 4 towns who maybe earlier were only taking trains or buses, and now today, are coming and actually booking flights. And even though we don't disclose these numbers, but there's a large chunk of these who might even be flying the first time of their life, right? And I think the interesting thing is, if you're adding that many new flyers, right, and you're seeing them come from places like Gorakhpur or Varanasi or Ayodhya or Nagpur, Jaipur, right, and also doing international trips, some of them, right? So I think that's where the Ixigo journey has been, really doubling down on. And if you again think about the macro trend, right, the per capita incomes in our country are going to continue improving. The aspiration levels of the middle class will keep growing, right? And if you just think of where will the next 100 million flyers in our country come from, I mean, the clear answer is they're going to come from people who today are not flying yet. And therefore, not that they're not traveling yet, they'll be traveling on buses and trains already, right? So in that sense, the nature of the audience we've built out over the last decade fits beautifully with where the apex velocity of growth will come from in the flight segment. And we are natural beneficiaries of that, right? And of course, I'll give a lot of credit to the execution of the team that has built a super product. We have market leading features out there, right, in terms of being able to track flights in real time and get updated about your boarding gate, or your that your flight is running delayed, or that your baggage has arrived at a certain belt number. So we really handhold the customer end to end. Our customer service is fantastic, and we are probably the only OTA in the world disclosing things like how fast we refund customers, how fast we pick up calls, right? 92% of our calls, actually close to 94% of our calls last quarter were picked up within 2 minutes. That number improved from 92% the quarter prior. And if you look at the average refund time that we have, 3.5 hours, right? I mean, when we were becoming an OTA, the biggest grouse we heard was people would not get refund and they would have to call up someone, email someone to get their money back, right? Their hard-earned money back. And we said, this is something we got to change, right? And that's why we started disclosing these metrics, to put that pressure on ourselves to continue improving them. So we've been very fanatic about customer experience, and we will continue to use that strategy to grow faster.
Right, so Alok, the travel and tourism sector is ever evolving, also changing very, very quickly. Want to ask you now about the areas of businesses that you aren't at the moment, but will look to move into, or are already planning strategically investments into.
See, hotels, we've been talking recently about that it's a area of priority for us. We recognize that for most OTAs out there, hotels is a sizable chunk of their revenue, GTV, etc. And globally, in fact, the established template globally was you launch for flights and you build hotels out, and that's how people used to build OTAs. It's just that in India, only 4% of people fly. So our strategy was to go after train and bus with equal fervor and sort of build those out, because you want to tap into the middle class. You want to start with train, and as that person graduates up into flights, hotels then becomes an important leg, because naturally when you know that somebody is going at from A to B and then staying in B for like 3 days, they would need some kind of accommodation, right? So that's why we've been kind of doubling down on building the right product, on getting the right supply, all those things in the last few quarters. And I think over the next few quarters, you will hear more from us around that. It's too early to talk about more details there. And, again, ancillary like value-added services that we have, whether it is ixigo Assured, Price Lock. Recently, we launched Travel Guarantee, which basically gives you up to a 3x refund if your waitlisted ticket on train doesn't confirm, so that you can buy a flight or a bus instead, or even another Tatkal train. I think those kind of products, we'll continue sort of innovating and coming out with. If you look at our track record in the last 4 years, we've come out with a bunch of these, 5 to 6 of these, right? And I think each product solve customer problems as well as improve, our ability to monetize.
Right, Alok, we've run out of time on the show, so I'm going to take a moment to thank you for joining us and taking us through the outlook for the company. Well, on that note, that is all that we have for this edition of KYC, but lots more lined up on the other side. You're watching NDTV Profit.
कि चूंकि सरकार का फोकस बिल्कुल सबसे ज़्यादा गरीब, पिछड़े, दलित लोगों पर ज़्यादा रहा, गरीबों पर ज़्यादा रहा, रूरल एरिया पे ज़्यादा रहा, मिडिल क्लास कहीं ना कहीं नेग्लेक्ट हो गया, जो कि बिल्कुल आपका एक कोर है भारत के लिए, आबादी भले ही छोटी हो, तो उस नेग्लेक्ट को एड्रेस करने का कोशिश किया गया है।
इसमें एक मैं स्पष्ट करना चाहती हूँ, पहले से ही प्रधानमंत्री मोदी जी 2020 उस समय से ही ऑनेस्ट टैक्स पेयर का रिकग्निशन के नाते फेसलेस ले आए, इनकम टैक्स चार्टर, टैक्स पेयर्स चार्टर हमने घोषित करवाए, और टैक्स पेयर्स को सर्टिफिकेट भी बेच देते कि समय पर टैक्स भरने वाले टैक्स पेयर हो या रेगुलरली टैक्स पेयर, उनका रिकग्निशन हो, ये सब करते आ रहे हैं। टैक्स पेयर का रिकग्निशन और सम्मान कभी भी माननीय प्रधानमंत्री जी के मन में है, और इस समय जब दुनिया के तुलना में हम फास्टेस्ट ग्रोइंग इकोनॉमी रह रहे हैं, पिछली बार भी रहे, पिछले 2-3 साल में रह रहे, और IMF और वर्ल्ड बैंक के नज़रिया में हम अगले साल भी फास्टेस्ट ग्रोइंग रहेंगे। और इस संदर्भ में क्या हम टैक्स पेयर्स को सम्मान करने जैसे ये काम कर सकते हैं, इस गाइडेंस के नाते हम काम किए, इसीलिए इस बार इनकम टैक्स का ये प्रपोजल हम ले आए।
एक और क्यूरियोसिटी है लोगों में, दैट इज हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
मिडिल क्लास के चर्चा बहुत होता है, और आज रियलिटी हम देखें तो कम से कम 1 लाख तक पर मंथ सैलरी कमाने वाले के लाइफस्टाइल कैसे हैं, और अगर वो शहर मेट्रोपॉलिटन शहर में रहते हैं, उनका एक्सपेंसेस क्या है, और उनके लाइफ में स्टार्टिंग स्टेज में रहने वाले का खर्च क्या क्या हो सकता है, ये सब असेस करने के बाद हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं, इसीलिए अराइव किए कि एटलीस्ट 1 लाख पर मंथ राहत ज़रूर दें।
जी, एक क्या अप्रोच में कोई चेंज है, शिफ्ट है? अभी तक इंफ्रास्ट्रक्चर डेवलपमेंट लेड ग्रोथ की तरफ सरकार का कोर फोकस था, जहाँ तक बिल्डिंग ब्लॉक्स का सवाल है। अब आप क्या कंजम्पशन लेड ग्रोथ देख रहे हैं? इसी वजह से इस बार केपेक्स पे मामूली इंक्रीमेंट है।
पहले मैं उस बात को मैं पकड़ना चाह रही हूँ, कैपेक्स में मामूली। जब कोविड के समय से हर साल 15%, 20% इंक्रीमेंटल नंबर ऐड करते हुए ग्रोथ इन पब्लिक एक्सपेंडिचर ऑन कैपिटल एसेट्स इतनी दूर तक ले आए, हम पिछले साल 11.11 लाख करोड़ का अनाउंसमेंट की। उसके ऊपर अभी जब 10% के ज़्यादा 10.23% इंक्रीज हो रही है और आरई से कंपेयर करते हुए इट रीचेस अ हायर नंबर 11.21, 24 ऐसे, वो मामूली सा हो गए। 11 लाख से अधिक भारत देश में लगातार पिछले 2 साल और उससे पहले 10 लाख ऐसे एम्फेसिस ऑन पब्लिक एक्सपेंडिचर जब हो रही है, 10% ओवर आरई इज ऑल्सो मामूली। आप एक बार इसको रिकग्नाइज करना चाहिए कि रिपीटेडली पब्लिक एक्सपेंडिचर ऑन कैपिटल एसेट बिल्डिंग इतने लेवल तक पहुंच गए, आज 10.23 ग्रोथ ऑल्सो इज लुकिंग लाइक मामूली।
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए हैं।
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? If I were to give you 30,000 rupees, what would you do with it? And if I were to give you even more, say 50,000 rupees. Okay, but wait, what if, no strings attached, I doubled that 50,000? Now that would be something, wouldn't it? But I would if I could. I certainly don't have that kind of money. You know who does though? The government of India. And the finance minister announced that you'll be getting a major tax break next year. Depending on how much you're earning, you'll be paying anywhere between 30,000 and 1,10,000 rupees less in tax. And money saved is money earned, as they say. The finance minister and the government are hoping that you'll go out and spend on goods and services. And that will grease the wheels of the economy. After all, consumption is a major driver of economic growth. But where will the money be spent? And which companies will benefit? That's what fund managers and investors as a whole are trying to figure out. This is Money Wise on NDTV Profit, and my guest today has a few theories that should hold you in good stead if you're trying to figure it out as well. Trideep Bhattacharya, the CIO Equity at Edelweiss AMC, is joining me today. Trideep,
hello.
Hi, Trideep.
How are you?
So, one, were you expecting such a big bang change in the tax laws?
I must admit, Alex, when we were putting the calculations together, we didn't have this in mind. We actually didn't have the extent to which the tax cuts were announced in mind. We thought there could be some general fillip to the consumption, but not in so many specific terms and not in that quantity as well.
So the question a lot of people have been asking since that, and I must confess that in this newsroom as well, and I was listening very closely to the budget speech, as soon as that announcement was made, there was this big cheer, and there's a large number of young people out there in the newsroom as well. So the idea that they'll suddenly have more money to spend is something that excited a lot of people. So
I'm sure
the question a lot of people are asking is, will people go out and spend? Will they hoard it? Will they save it? I guess it's not an easy answer.
True. So I think first, let's get the context right. So the urban middle class, so to speak, if you look at the people who will benefit from it, would have their average income go up by anywhere between 4 to 8%, which is a meaningful amount. For many of the people, this is the annual salary hike that they get. So their take-home salary, in many ways, if you call it that way, has been given a yearly hike of that much amount by the government of India, which is amazing. Which is why I'm not surprised at the reaction which your colleagues did overall. Now, if you superimpose on top of it that the savings rate of India is roughly about 35-36%, then roughly, at least 60 rupees out of every 100 that's given will probably kind of, get spent. Okay. And there are multiple areas that they will spend, and I'm sure we will kind of get into the ins and outs of it. But yes, roughly about, if you think about 30-70 mix or 40-60 mix, 40 saving and 60 spending, you will not be way off the mark.
Okay, so that's interesting. So irrespective of whether there will be spending in certain pockets or the other, there is going to be more spending. There's rather saving. And so what is the implication of that, Trideep? Do you think, because we're speaking at a time when over the course of the last few months, there has been correction, and it's accurate to call it that in the equity market in India, primarily because of the kind of selling that foreign institutions have done. But some might say it's healthy. And it happened because, again, some might say that the valuations were a little stretched. And they were stretched because there was a lot of domestic money getting pumped into certain pockets of the market. Does that continue to happen?
So two bits to that. One is that before this we were in a situation where stock markets were attracting a whole bunch of investments, but banks were struggling to get FDs.
Yes.
Now with some more money in the pockets, first some bit of liquidity problem, some bit of deposit problem will get addressed. The second part, of course, is that the markets are somewhere between 10 to 15%, and if in pockets even more, cheaper than when they were, about 3 to 6 months ago. So clearly, opportunities are far bigger than what they were earlier, and hence I'm sure it will attract a certain set of the population to kind of put money to work in the form of savings in these areas. So yes, I'm hopeful it would lead to more money into kind of different asset classes over time. The first bit comes the saving, though. Then comes the and that's where the investment kind of part comes in, and then comes the spending. So there's a time series between the two as well.
And we must remember that while we're talking about absolutes in terms of the yearly number, it's not something that will come at once.
Exactly.
It's going to be paid out over the course of every month, right?
Correct.
So okay, so that's one aspect. I will refer back to this at some point in the conversation, but I want to talk about how the spending will change, right? Or will it change? Because the assumption is that if you have more money, you don't necessarily buy the same things. You will move up the value chain and you will consume things that you didn't yesterday. Does that take place, and what are the implications of that?
This, if you ask me, is the nub of the issue. This is what's, for viewers and listeners who are listening to this, this is the crux of the matter. And it is that, if you look at the average age of India today, it's basically 28 years. At 28 years, what did we do? We probably finished education and just got into work. And that was the time when maximum amount of aspirational spending kind of, started to happen. So to put this in context, to put this in numbers, I would say that if I put all of these together, the spending in India will go anywhere from 2.4 trillion rupees or dollars to 4.2 trillion over a matter of 6 to 7 years.
$2.4 trillion to 4.2 trillion over what period?
Over 7 years, over the next 7 years.
From this point?
Yeah.
That's massive.
Correct. So then the question becomes that where will this spend get to?
Yes.
I would argue there is certain level of spending which gets into your eating habits, and the food, beverage and tobacco, which is what we call in traditional language, is kind of almost constant, increasing at the rate of inflation. So that's not going to go up significantly. But what will go up is basically kind of entertainment spend, which is kind of going to hotels maybe a little more than what it were earlier, eating outside in the form of quick service restaurants more than earlier, maybe upgrading the house where one lives in, and there could be multiple areas. These are just three examples.
But before we get to that and all of these possibilities, I'm curious about the number and the projection. What is that based on?
So this is a study done by one of the real estate agencies who studied the spending pattern of India and how that will evolve over a period of over the next decade or so, and found that as our per capita GDP goes up from $2,500 where it is currently to basically kind of double the number, double over the next 6-7 years, where is the spending is likely to happen, and what is the quantum? This is the number that came out
over
of that.
Over the next 7 years.
Over the next 7 years, indeed.
And we're talking about a considerable increase also in the what we call now the middle income group, because a lot of people are moving up the value chain there.
Absolutely.
As well. So let's get back to where people are spending, right?
Yeah.
So, and I'm fascinated by the concept that you just described, which is when people are early on in their career, they suddenly get access to capital, and so therefore they're going out and spending certain things, and
Absolutely.
they think about saving later. It was always that I didn't have enough money for me personally. So I don't know about other people, but what are the implications for each group? I guess it depends on what people are doing and what stage of life they are at. And what the implications are. Is that the way you've looked at it?
Yes, and of course, the implications would be different for different age group. But if your starting point is the average age of India, so think about an average individual who is 28 years of age, and how would they spend? You won't be significantly off the mark. So the themes that they would kind of go about and kind of spend on would be clearly things like premiumization. instead of maybe a I don't want to name the model of the car, but maybe a basic model of the car to an SUV.
Sure.
So that's clearly an upgrade.
A hatchback to an SUV.
A hatchback to an SUV would be one clear example of the same. Maybe from 1 BHK to 2 BHK or 2 BHK to 3 BHK or basically larger houses, so to speak. In the meantime, a lot of people would be migrating from villages to tier 2 cities, tier 2 to tier 1 and likewise. So the real estate could be one of the beneficiaries of the same as well. And finally, the Gen Zs, which everybody is so proud of, quick commerce as an emerging theme, the new way of consumption might expand massively and benefit significantly, and will actually be a catalyst towards higher spending, because here it has kind of brought down the barriers to consumption by significantly at your fingertips.
Okay. Of course, there are detractors and people that criticize things. Maybe you can call them cynical. Maybe it is for good reason. I won't judge. But there is one theory that says that a large group of these people that are going to get more money will utilize it maybe on foreign trips. And so therefore, the objective, which is to give more money to people and have them spend, is defeated if they're going to go outside and spend it. Do you think that that's likely?
It's one of the possibilities. So with such a large population, with such a big segment of population, different people will do different things. That's why I named out at least 6 or 7 of them. Some of them might go on foreign trips, but trust me, the tourist destinations in India are also getting attractive, as you can see in Mahakumbh, which is a religious as well as a tourist destination from various different perspectives. So I'm sure, people do various things, but net-net, if you look at historical examples, the spend in India has significantly gone up in day-to-day life activities. And hence, from that perspective, while some might migrate to other countries, but a lot, I'm sure, would remain within India and will get spent in different types of activities.
Because the number of people we're talking about is quite significant.
Exactly.
Right? And not all of them are going to go to Indonesia, maybe.
Exactly.
Right? So, but let's talk about a couple of these aspects. Let's first talk about housing, because you're talking about at the far end of the spectrum, at the higher income levels, if you have 2 incomes in the household, if they're earning above 24 lakhs each, which is necessarily a minority and people are moving towards that, but you're talking about 2.2 lakh rupees saved over the course of the year, which is a considerable amount of money. Do you think that that would push the needle and get people to spend on a house, or do you think that it may not, but then it'll increase the propensity to spend on something like a house?
So 2 bits. One, I think that level of that salary income that you're talking about will probably first migrate from rented accommodation to owned accommodation. That itself would be a kicker with regards to from a real estate perspective, and then kind of maybe a slightly higher income bracket would probably move from a smaller to a larger accommodation overall. Certainly, what we see is that real estate is one of the or second or third most important areas people want to save for.
Yeah.
So I'm sure certain part of the population would kind of go into this, but I see this more as an upgrade opportunity, where people kind of from rental to move to kind of owned house, or from maybe a smaller house to a larger house. Something that we have been seeing anyway will probably get accelerated by this.
So the reason I asked you this question is because you've seen premiumization even in the housing space, and at least in the urban clusters, right? You're seeing that your ultra luxury, there's tremendous demand, but there's not so much in the way of affordable housing that is taking place. Does that change? Do people suddenly go out and say, okay, you know what, I have more money, I'm going to go out and buy a house, even if it takes me about 15, 20, 25 years to repay it?
Yeah. So I think this will take a bit of time to kind of come through. I think there are 2 aspects that we talked about. Eventually what will happen and what will happen at what period of time. My sense is first would be kind of, low ticket spending.
Sure.
To kind of, maybe taking a few holiday destinations or eating outside. And then over a period of time, this would lead to, particularly in the segment of the population which is at the moment witnessing a slowdown, which is urban consumption. It'll ultimately kind of lead to a better housing standard for them, maybe reduce the distance to work, and those kind of things will actually start to come in. the point I'm trying to highlight is in the time series of when things will happen, first will probably come the low ticket or the mainstream consumption, then will come the housing kicker, which will happen over a period of a year or two.
Okay, so therefore I'm trying to gauge the way that you're responding to this and how you are building your own portfolios, because as a fund manager, obviously you have to be ahead of the curve and you have to see these things coming. Based on the assumptions that you've made and the expectation that people are going to go out and spend on the smaller ticket items, and that's going to get a fillip, which pockets are you focused on to take advantage of that?
Sure. So I think 2 parts to this. One is what we call as core. If you sort of think about consumption and put them into 3 buckets. One is the core consumption, which is basically the staples, what we eat day in, day out. That ain't changing too much of a lot, right? There's probably grow at the rate of inflation or maybe slightly lesser than that. What's interesting is the emerging consumption or the new discretionary areas, which is where we would see a lot of demand coming through. Low ticket to high ticket, from maybe eating out to maybe TV, fridge, consumer electronics. That's the range that I'm looking at. We'll probably see somewhere in FY26 as more income kind of comes through them, benefit from them immediately from this. And then thereon would be the real estate benefit that will kind of start to come in. So first, maybe consumer discretionary, and then real estate in that order. Might I want to add on top of that something which has not yet happened, but should there be interest rate cuts which we certainly expect through the course of the year, then that'll add a bit of a fillip on top of this, particularly when it comes to real estate.
Okay. So let's talk about how you're determining which company stands to benefit, right? Because ultimately you're talking about a space that traditionally has attracted higher valuation multiples in the consumption space, because these companies are so front-facing, they're known by so many people, and as a result of which this growth story in India has been talked about for quite a bit. The expectation that there's a growing number of people that will consume these things. It's a discovered opportunity. So how do you go out and choose the companies that will give you the most bang for your buck over the course of the next 5-7 years?
Sure. So I think, first of all, consumption has not really been the area where most people have gone gaga over in the last 3-4 years.
Yeah.
It's been more manufacturing. Yeah, it's been manufacturing. So in that context, if you look at some pockets of consumption, not everyone, but some pockets of consumption, I would argue the valuations there are lower than what you've seen in the last 5 years. So that's a good starting point. Second, if you think about the earnings drivers for the companies in here, all that we talked about in the last 15 odd minutes go on to show that at some point, may not be immediate, but maybe in this 6, 9, 12 months time basket, we will see some sort of earnings improve for these companies, for consumer discretionary companies over a period of time. As that stands to happen, we gradually see earnings improving in the sector. So usually valuations being less than median, earnings improving is a good place to start, and that's probably the reason why we called out consumption to be the dark horse of 25 when we started the year. Of course, the budget put a bit of a fillip on top of that. So just to close this out in terms of how do we go about selecting companies, following the same framework, wherever valuations are lower than what they have been in the past 5 years, and we see earnings improving over the next 1 to 2 year time bucket, we don't mind the first 5-6 months, which will be weak anyway. But as that improves over a period of time, slowly but gently, we'll kind of go into those stocks or areas which will mostly be in consumer discretionary as part of our portfolios.
Okay, we've seen disappointing earnings, Joe.
Yeah.
Though, Tradeep, and I take the point, 5 months is what you're comfortable with, but you must have some estimation or some idea of what you think earnings will look like, which is why you're basing these assumptions and you're making these decisions. What would you be comfortable with? What's your base case assumption, and what would you be very happy with? What would you be disappointed with?
Right. So I think, first of all, to set expectations right, nothing is going to change immediately.
Yes.
And when I say this, we are obviously seeing the December quarter numbers come through, which shows a weak festive demand from a consumption standpoint. March quarter will not be significantly off.
Sure.
Starting June quarter is the first time when we will start to see some signs of it. So for me to count on it, the first chance that I would see would be festive season this year. And the spend that happens that time, and hence maybe Q3 this year is when we would look to see some
calendar year, say.
Calendar year.
Yeah.
When we would look to see the fillip with regards to consumption demand starting to or showing signs of coming back. That's from the urban consumption side. But also, mind you that starting with monsoon last year, the rural part of the economy is gradually on the mend as well, which will also start to show up in the numbers sometime in back half of FY26. These put together, my sense is you would start to see double-digit earnings growth come through towards starting the back half of fiscal year 26. A low double-digit is something that I would kind of look to see happens. If it turns out to be on the higher side, we'll happily take it.
That would be a bonanza.
That would be a bonanza, exactly. But at the moment, from a point of view of growth rates which are sulking, this is factual, so Hindustan Unilever reported a volume growth of 0%. And as we go towards the back half of next year, we would certainly see even that growth rate improving from where we are. And that means
also because of the low base.
Yeah.
Also because of the low base.
Correct.
But you mentioned interest rates. Looking at this, one would assume that if we're talking about an increase in consumption, you would automatically have an increase in inflation, or at least certain aspects that will be inflationary. And so from that perspective, for a central bank that is targeting inflation, it becomes hard to justify a dramatic reduction in interest rates. Do you think that that will be a bit of a dampener, or do you think that the base case assumption as it stands of a 50 basis point rate cut in this current cycle will still take place?
So I think all that you said will be true, yet 50 basis points might actually just about happen. Okay. So I think, and simply because we are sitting on a base of high inflation, on that base inflation will look incrementally coming down. Even though at the base level the incremental inflation would be on the higher side, but still Y on Y it will start looking a little lower, and that will probably set the tone for up to 50 basis points rate cut this year, this calendar year I mean. Also, given what happened in the budget, where I think the Honorable Finance Minister showed that we are fiscally responsible with fiscal deficit target at about 4.4% of GDP, it leaves the room for monetarists, for monetary policy to be a little loose because you are fiscally tight. And hence, I think a combination of dropping inflation and fiscal tightness makes me feel that up to 50 basis points rate cut is certainly on the cards this calendar year as well.
Okay. Rate the opportunities as you see it right now, with the budget now in our rearview mirror, heading into the next financial year and possibly the next 2 or 3. First, consumption. 2, infrastructure. 3, defense. 4, manufacturing. How would you rate them? How would you rank them, and why?
So I would answer this question slightly differently. Before we got into the budget, consumption was nowhere in the picture. It was all about the second 3 that you talk about. Now, these 2 are the 2 balances of the scale. So now all of these are on even keel. In fact, that is the hallmark of Modi 3.0 is what I wanted to bring out. That Modi 2.0 and Modi 1.0 was all about capex and hence manufacturing-led growth. Modi 3.0, it's a balance between manufacturing and consumption. That's the difference. And hence, now consumption clearly gets up the scale. That doesn't take the sheen away from manufacturing. We are still talking about a 10% growth. I think the valuation excesses needed to correct on that, which is in the process of getting corrected. And over time, it's a more stock pickers market where opportunities are there in manufacturing as well as consumption. Now we have to do the hard work to figure out where the valuations and growth are more in sync. So not an easy market anymore, but a wider market for sure.
As somebody that is, and this is my last question to you, since we're talking just about a week after the budget, or less than, as somebody that has seen so many budgets, is this the budget that you went to sleep after with the biggest smile?
I think probably from a consumption standpoint, yes. This is I think to me, if you really ask me, this budget kind of nails the nub of the issue, which was basically a slowdown in urban consumption. And hence it's a fairly balanced budget if you look at it. Only capex budget would have probably pleased some part of the market, but left a whole lot of other part unhappy. And I'm happy that it has left a more equitable sort of opportunity for different sets of investors as well as people on the market. So yes, happier than what I was before.
It's been an absolute pleasure having you in the studio. Thank you so much for speaking to me.
Pleasure.
And that brings us to the end of this edition of MoneyWise. Tell us what you think on any one of our social media platforms, and do stay tuned. There's lots more coming up over the course of the day. This is NDTV Profit.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
And the reason for the success of the restaurant this magnitude, because people felt भाई का जिगर है, बिजनेस नहीं है इसमें। This is our time to not bend down to their accents and their foods and glorify it. It is our time to lift our own cuisine, our own culture.
1, 2, 3, 4.
Toughest person to cater for, to cook for, President Trump, Prime Minister Modi, या शाहरुख खान?
मेरा दिल जिसके पास है, शाहरुख खान।
You tweeted recently after President Trump won the election that can I make something for you?
So एक तरह की खिचड़ी है जिसमें आप मिक्स्ड मिलेट्स डालते हैं।
आपको ट्रम्प साहब को खिचड़ी खिलानी है?
हाँ, तो खिचड़ी खाना नहीं है?
What is the one vegetable you will never eat?
मैंने मेथी खानी बंद कर दिया है।
You love करेला, बैंगन as
I love करेला।
Is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide?
Welcome, you're watching The Big Question. I'm Tamanna Inamdar. We're talking about Delhi elections today. The political battle has never been more intense. After a high-octane campaign filled with barbs, blame games and AI spoofs, the first big election of the year is upon us and the stakes couldn't be higher. While a resurgent BJP is trying to make a comeback after a 27-year hiatus in the national capital, so is the Congress, which is eager to reclaim its lost ground. But it is the Aam Aadmi Party and Arvind Kejriwal for whom the Delhi dangal is a do-or-die battle. The question on everyone's mind is that can Aam Aadmi Party script victory for a fourth consecutive election? With Kejriwal's arrest in the Delhi excise policy scam, along with other top leaders of his party like Manish Sisodia, Aam Aadmi Party's image of a corruption-free alternative has been dealt with a severe blow. These elections will also be a litmus test for Kejriwal as he battles corruption charges, faces anti-incumbency after being in power for 2 straight terms, and I would go as far as to say it's an existential battle for Aam Aadmi Party, as Delhi is now a stronghold and any defeat would dent the party's national ambitions. On the other hand, the BJP is looking to break a 27-year hiatus. It's a prestige battle for the BJP and Prime Minister Modi, as the party hopes to win the national capital, having won it only once in 1993, despite consecutive wins in the Lok Sabha elections, all 7 seats, in fact, in the last election. In an effort to counter the Aam Aadmi Party, the BJP has pulled out all stops to woo voters and has announced a host of freebies ranging from cash sops for women, free scooters for the youth, among other things. It's also promised to continue all schemes started by the Aam Aadmi Party, including that of free water and electricity. For the Congress, the elections is an attempt to regain their past glory. The party has almost been wiped out from the capital's political scene. Its vote share slipped to 4.3% in the 2020 assembly results. So the big question that we're asking today, which way will the Delhi voters swing, and can Modi trump Kejriwal in Delhi? To speak on this, I'm joined today by Aarti Jairath, political analyst. I'm speaking today with Amitabh Tiwari, political strategist, and Sanjay Kumar, professor of CSDS. Welcome to all of you, and thank you so much for joining us on The Big Question. So a couple of things that we're doing here, and to tell our viewers as well, we are not taking into consideration exit polls while having this conversation, simply because we don't know what these polls will say. We don't know whether these polls are going to be right or not. We're looking at the question of Delhi in the context of the national picture and how crucial it is for the key participants. It's also a mood of the nation in a sense, isn't it? Let me start with Aarti Jairath on this point. Why Delhi is watched so crucially, despite it not being a big contributor to seats in the Lok Sabha? It's not going to make or break things for the government at the center, but it's important because it's giving you a sense of what India is feeling, isn't it?
In a way, yes. Delhi is a kind of microcosm of India because it attracts migrants from all over, north, south, east, and west. So from being a traditionally a Bania, city, which then got overrun by refugees from Pakistan and became a predominantly Punjabi city. Today, it's full of people from UP, Bihar, all over South India, and other parts of the country. So therefore, it is a microcosm of India, and yes, it does reflect, I think, in some sense, the mood of the nation. But remember that if I don't think you can extrapolate from the Delhi results. You can extrapolate into national politics from the Delhi results, because as we've seen in the last two elections, while Delhi voted overwhelmingly for Aam Aadmi Party in the assembly elections, the people of Delhi voted overwhelmingly for the BJP in the national polls. So, I think it would be wrong to really extrapolate this and make and draw conclusions for national politics. Whereas, I mean, yes, it is a crucial battle. I think you summed it up very well at the beginning. What are the stakes for all the political players here? And so now let's see what Delhi decides.
Let's see what Delhi decides, and it's crucial battle for all players, more crucial for one side than the other. Amitabh Tiwari, I opened by saying that, of course, prestige for the BJP, and the Prime Minister has been front and center of the campaign this time. I mean, many people, when they saw the budget announcements, looked at it in the context of Delhi, even though everyone in those tax brackets is rejoicing. But on the other hand, for Mr. Kejriwal, it's a question of political survival.
Yeah, essentially, of course, it's a battle for survival for AAP, prestige for the BJP, and relevance for the Congress party. See, the Aam Aadmi Party has become a national party by starting a base in Delhi. So Delhi is the place which has provided it a base, and it has given it a face also. In terms of it has been able to implement or showcase its famed Delhi model of governance from the state. And riding on the Delhi model of governance, it was able to spread its wings and win Punjab as well. So Aam Aadmi Party is one of the only, I mean, it is a national party today, but it is only one of the only parties other than BJP and Congress party, which is not tied to any regionalism. So its existence or its creation was not bound by any regional sort of a movement. It was created out of an anti-corruption movement. So what it does is that theoretically, it has the capacity and capability to spread its wings across the country. The leader, which is Arvind Kejriwal, speaks in Hindi, and Hindi is understood by more than 50% of the population. So in a way, and he has good oratory skills also. So in a way, the party has the ability to spread its wings nationally, whereas other regional parties and leaders like Mamata Banerjee or a Stalin or a Revant Reddy or a Naveen Patnaik were tied to their perimeter of the states because of regional considerations and the language barrier. So that is why it is Aam Aadmi Party is also a party which is seen as a threat by the BJP, because after Congress party, if any party can give it a national level competition, it is the Aam Aadmi Party. So the
Can I counter that and I ask, is it really, if this theory was abounding, was it not proven time and again with what we've been seeing in the Lok Sabha, the attempts of the Aam Aadmi Party to go beyond Delhi and then get stuck at Punjab? Is it really the next big counter as a possible national level opposition to the BJP?
It is, because there is no other party which has or which is in power in two states except for Aam Aadmi Party, Congress, and the BJP. And its ability to spread its wings outside is high because of the language quotient which I am referring to, and because it is not tied to any regional dynamics. It's not born out of a regional movement. It's born out of an anti-corruption movement. Of course, it is just a 10-year-old party in that sense, a 12-year-old party, correct? So from a long-term perspective, with the decline of the Congress party, there is a vacuum in the opposition space, and Aam Aadmi Party is well positioned to occupy that space. However, if it loses, as you are saying, then the core of the Aam Aadmi Party, the core philosophy of the Aam Aadmi Party, out of which it was born, which is the anti-corruption plank, then comes into question. and then people will start questioning whether Aam Aadmi Party is like any other arm party. Correct. And that is what the BJP is trying to establish or give a message through this election, that Aam Aadmi Party is like any other party. And then what happens is that the Aam Aadmi Party would have to go back to the drawing board.
Right.
And
No, so I'm not saying that any side will lose. Just to clarify there to what you said, Amitabh, I don't know who will lose or who will win. We'll have to wait
I'm
and
also
see.
not saying, I'm saying if that happens.
No, if it
then-
does. As the stakes are high, and who are they higher for was the question. Sanjay Kumar, let me come to you with that point. This is, and obviously as a prestige issue, obviously BJP wants to win Delhi, a huge upside, but the downside for the BJP is not as much as for the Aam Aadmi Party if there is a loss.
Tamanna, I agree. Suppose BJP loses this election, yes, it will be another loss for BJP. It will be a kind of a setback for BJP because they have put in a lot of effort. They want to, defeat Aam Aadmi Party in the city of Delhi. But from Aam Aadmi Party's perspective, I think it's far more crucial for Aam Aadmi Party because a defeat in Delhi would mean a huge challenge for the existence of the party. Yes, party will still be in power in Punjab, but I think if Aam Aadmi Party gets defeated, we might see some defections. We have already seen some of the MLAs who were not given ticket, who were denied ticket. They shifted to BJP just before election. But if Aam Aadmi Party loses the election, not in a position to retain power in Delhi, we will see more defection. We might see more defections in the party. So it is about the existence of Aam Aadmi Party, the basic survival of Aam Aadmi Party, and that is why it is more crucial for Aam Aadmi Party than BJP.
Let's look at the other point of it. What really are the BJP's chances? And I'm not referring to polls, pre, post, anything, just basis on what we've heard and seen. And I'm coming to Sanjay Kumar first with this question. The IT relief that was announced recently in the budget, a large middle class section in Delhi. Is the free electricity, free bijli, free pani, free healthcare, free education pitch still working in Aam Aadmi Party's favor? Does BJP have a real chance, an upper hand this time?
Does BJP has a real chance? Yes, BJP has a real chance. I'm now doubting that the BJP doesn't have a chance. But when you are referring to, on one side, raising the slab of the IT, income tax in order to woo the middle class, and the free bijli and pani, I think Delhi's politics is slightly different from state politics of other states. Delhi politics is sharply divided in terms of class character. If we look at the Delhi voters in terms of four classes, the poor class, lower class, middle class, and the upper class. The poor class and the lower class have voted for Aam Aadmi Party in a huge way in 2020 and 2015. They still, I think, my own sense is that they're still standing behind Aam Aadmi Party in a very solid manner. There is a disenchantment among Aam Aadmi Party among the middle class voters, and that was even before the announcement was made in the budget. So I don't see budget announcement as a big game changer because Aam Aadmi Party was already not very popular among the middle classes. Middle classes were getting disenchanted, especially after the corruptions of allegations, the charges of corruption. So I think it will make an impact, but it is not going to be the sole game changer if at all BJP wins this election.
Okay, so not the sole game changer. Perhaps that's why from end to end you've had the schemes focused on women. You've had the schemes and the BJP saying we'll continue the schemes that the Aam Aadmi Party has put out, and then this middle class sweetener as well. But I'm wondering, and Aarti Jairat, this question to you. Does the woman voter hold the key once again? Competing promises for the women voters in the form of direct benefit transfers from all parties in the fray.
Well, Tamanna, I think Delhi is one of the few places where actually the male-female ratio is in favor of the males. So the number of women voters is actually less in Delhi than in some other parts of the country. Having said that, women have voted largely in favor of Arvind Kejriwal. He has a fairly strong appeal amongst women. And, you remember he's one of the first people to have introduced the free bus rides for women which was a huge hit for particularly for the lower middle class, lower class women who come working, who kind of sweep and swab the homes of the rich in Delhi. But because the women do not outnumber men. I don't know whether women can actually swing the vote the way they have in Madhya Pradesh, where we saw it in a very big way, where the women actually swung the vote, or even in Bihar, where we have seen women voting in huge numbers for Nitish Kumar and have swung, the election in favor of Nitish Kumar. I don't know whether that will happen here. But, one thing I will say, I mean, look, I've been living in Delhi now for about almost 50 years, and I have seen lots and lots of elections. And, I would like to say one thing as far as if we look at BJP versus AAP. The BJP has a fairly solid middle-class constituency, which has been pretty much unwavering in support of the party. I think the lowest percentage the BJP ever scored in Delhi was 29%, and the highest it scored was somewhere like 36, 37%. So it's sort of in that band of, of votes. The problem with the BJP is that
From tech titan to global philanthropist, Bill Gates has had a huge impact on the lives of millions across the world. As the co-founder of Microsoft, he's in a sense defined what personal computing has been for all of us. The vision that he had of the personal computer way back in the 70s and its evolution and the transformation of Microsoft has been fundamental in terms of tech, in terms of IT, in terms of the entire sector. And it's time now for Mr. Gates to pen his thoughts down, which is why he's come out with this. This is the first of 3 books. It's called Source Code, My Beginnings, and it's my great privilege to be over here in Palm Springs, in California, to speak about this. Thank you, and I'm delighted to be over here, fly all the way across the world, and I've had a chance to really go through this book. It's very, very interesting.
Thank you.
One of the primary themes which I found throughout the book has to do with your own intensity. The fact that you've always been driven. I mean, we know that is a fact, but we perhaps didn't know about the extent to which you were focused. And you write, for example, and I quote, "Like one of those watertight hatches on a submarine, I could shut out the rest of the world. Driven by the sense of responsibility I felt for Microsoft, I had closed the hatch door and locked the wheel. No girlfriend, no hobbies. My social life centered around Paul, Rick, and the people we worked with. It was the one way I knew to stay ahead." Could you tell us about how your focus ultimately resulted in you being the Bill Gates we know today?
Well, part of my makeup, even from a young age, was that if something was fascinated, I could really dig in on it. So, learning to play cards with my grandmother, having books read to me, reading books, and mathematics early on fascinated me, and so I went into depth. But then I took that to a new level when I started Microsoft, because I knew there'd be other people trying to do software, and I decided, no, I'm going to make sure we stay ahead. I was always kind of worried somebody else would do well. And so during my 20s, I was really monomaniacal, not only using